Good morning, everyone. I'm Alexis Christoforous. Brian Sozzi is on assignment, and this is the first trade for Wednesday, December 4th. Deal back on. Futures moving higher this morning after a new report claims Washington and Beijing are making progress on a trade deal. But with a key deadline just 11 days away, can they really make it happen after President Trump said he's willing to wait? We've got the latest for you. Plus, C-suite shakeup. Google's CEO Sundar Pichai gets the top job at parent company Alphabet as Larry Page and Sergey Brin take a big step back. What the move means for the future of Google and big tech. And from a galaxy far, far away, Disney finally unveils the new Baby Yoda toys. But they won't be on the shelves in time for Christmas, while you'll have to wait a long, long time to get yours. But the markets and the latest on the trade war are today's big story. Wall Street is looking to shake off 3 down days amid new optimism over the trade war. Futures right now, as you can see, are in rally mode. Dow futures up 128, S&P futures adding 13. We've got NASDAQ futures climbing 45 points as investors size up a new report that the U.S. and China are moving closer to that elusive Phase 1 trade deal. Bloomberg says negotiators are zeroing in on just how much to roll back tariffs ahead of a December 15th deadline, but they're still working on guarantees over agricultural purchases. That news comes one day after President Trump said he'd, quote, like the idea of waiting until after the election to finalize a deal. Let's head down to the New York Stock Exchange. Check in with Yahoo Finance's Inez Ferre. There's a lot for traders to digest today. What are they saying, Inez?
Yeah, Alexis, one trader here told me the markets need to learn to apply the 24-hour rule to everything that President Trump says. He also told me that this whole U.S. trade-China issue is a bit of overblown with respect to that December 15 tariff deadline. He says, look, the products for Christmas, at least for this season, those are already all here. So those tariffs, if they were to go into effect, wouldn't affect this Christmas. Of course, also, there are some traders here that just feel that those tariffs would be pushed forward in any case. Also, I talked to another trader who told me that a bounce back was a bit expected, even if there was no news today, especially because that last hour of trading yesterday came in a bit stronger. We pulled off our lows. And then he also said that it's been a bit of relief as well, though, hearing this headline, given that some were even speculating yesterday morning, could we be looking at another volatile December like last year, even though the environment is totally different from last year, Alexis.
That's for sure. You know, interesting that stocks are rallying this morning, given the data that we're getting on private sector jobs. It seems like they are growing at the slowest pace in months. And of course, this comes ahead of Friday's all-important employment report.
Right, that ADP number came out this morning with private payrolls increasing by 67,000 in November. That number is light. That is well below what was expected of 150,000. It's the slowest growth since May. It's also below the October 121 number that came out. Also, weakness was seen in manufacturers and retailers. No surprise there. We've seen that before. I was talking to one trader that told me that you may have seen also some weakness with retailers because of that Christmas holiday or that Thanksgiving holiday that started a week later. Also, you've seen a surge in e-commerce, so perhaps there wasn't as much hiring when it comes to the brick and mortars. But certainly, this is a gauge. This number is seen as a gauge for what's to come on Friday. And one trader telling me that it will be maybe a high bar to hit for Friday.
Could be. All right, we'll be watching and reporting on it. And as we'll see a little later on in the show. Well, trade isn't the only issue a lot of people are talking about in Washington today. The House Judiciary Committee is holding its first impeachment hearing, while over in the Senate, data privacy is on the agenda. Jessica Smith is in our D.C. bureau with this morning. And Jess, I understand the Senate Commerce Committee will be discussing 2 competing plans to better protect all of our personal info online. How's that going to work?
Well, the top Republican and the top Democrat on this committee have each introduced a plan to take on data privacy. Ranking member Cantwell has released a bill to protect data privacy, while Chairman Wicker has circulated a draft bill, and he's put out a fact sheet with some of his priorities on this issue. So there are some similarities. First, they give consumers more control over their data. They put requirements in place for companies to protect consumer privacy, but there are some key differences. One of them is that the Democratic bill will not preempt state laws like California's privacy law, but the Republican one will. So that's something that they would need to work out to find a compromise. We'll see today what expert witnesses think about these proposals. The hearing starts at 10 o'clock this morning.
What is the chance that either of those plans actually becomes law, Jess?
Well, people I've been talking to recently have been pretty skeptical that anything is going to get done this Congress. But now that there are two plans, there's a full committee hearing, I think there's a little bit more optimism on the issue. Plus, California's privacy law goes into effect in January, so there's a little more urgency now. There was a bipartisan working group of lawmakers who were trying to tackle this issue, but those talks stalled. And there are still some members who are working together, but it's not clear if they're going to release a bill at any point soon. But like I said, now that these top lawmakers have released their priorities, at least, we'll have to watch to see if they're able to find a compromise here.
You can bet that big tech is also watching. What is the tech industry saying about all of this?
I mean, we've heard from Facebook and from Apple, from these other tech companies who have said that they do want to see a federal data privacy law. They have been lobbying here in Washington, trying to convince lawmakers what they think a data privacy law should look like. A representative from Microsoft will actually be testifying at the hearing today. In her written remarks, she said U.S. privacy law has generally failed to keep pace with advances in technology and to provide Americans with the protections they want and need in this digital age. Today, more than ever, there is an urgent need for a comprehensive U.S. privacy law that provides strong protections for all consumers. A lawyer from Walmart will also be taking part in the hearing today, so we'll keep you updated on what they have to say. Again, this starts at 10 o'clock this morning. Alexis.
All right, appreciate it. Thanks, Jess. For more on the trade war and data security, I'd like to welcome Andrew Card. He's the former White House Chief of Staff to President George W. Bush and currently chairman of the board at the drone-making company Dragonfly. Andrew, it's great to have you here. Thanks so much for joining us.
Thank you, Alex.
Just like to know your take on the current state of the trade war between the U.S. and China. Are tariffs the answer here?
Well, first of all, I want them to resolve this thing. They've got to sit at the table and really negotiate. But I think it's going to be a long slog, and it will not be something that happens overnight. But I'm hoping that they will recognize they've got to find a way to develop some common ground. But the Chinese are not acting as well as they should in terms of privacy and protecting intellectual property. And I think that's going to be the very heavy lift. But in the meantime, I hope they come to some kind of an agreement around agriculture and some of the other products that we have to get into the marketplace. This is critically important for the growth of our economy and for China's economy.
Do you agree with President Trump's strategy here? I mean, he sort of stirred the pot when he got into office with this trade war. Do you believe that that was the right thing to do?
Well, I'm not sure I agree that it was the right thing to do. He'd like to have more transactional experiences where quid pro quo is the norm, not the exception. And I don't think that's realistic when you're dealing with the Chinese, especially when it comes to some of the tough issues like intellectual property. But we've got to get this thing resolved, and both parties should recognize what's at stake and sit down and really do it and just get it done. They may not come up with a grand deal, but I think they have to make significant, not just incremental, but significant steps towards really resolving this so that we can have a vibrant economy and neither country is put at a disadvantage.
I want to switch gears and talk about the impeachment inquiry, because the House Judiciary Committee is holding its first hearing today to begin the process of drafting articles of impeachment. Andrew, do you support the impeachment inquiry?
I have supported the impeachment inquiry. I don't think that the Democrats have done a good job at it. I think they have played partisan politics. I wish that they had kept their mouth shut, just allow for an investigation and let the truth come out rather than try to spin it every day. So I'm very critical of the way Adam Schiff ran his committee and how Speaker Pelosi permitted that to happen. I think they should have just said this is a very serious, sober experience for the country to go through. We're not going to talk about it until we have the facts, and we're going to keep our mouths shut. We're not going to try to spin our way into success. We're going to let the information determine what the facts are, and the facts determine what the outcome should be. But I do favor an inquiry. I just don't think the way it's been conducted, it's going to be productive in terms of having any potential where the Senate would have a serious trial. I'd like to see a serious trial if the facts warranted it. And right now, I don't see that that's the case.
So you believe that President Trump will come out of this unscathed? He'll be able to remain in the White House?
I don't think that he'll come out unscathed. I think that it may set the stage for an election. I'm the chairman of the National Endowment for Democracy. I think changes in democracy should come at the ballot box. But I also think that some of the questions warranted investigation, and so the inquiry was appropriate. I just don't think the Democrats have handled it the right way. So I don't think the trial in the Senate is likely to be anything but a circus and a partisan experience. And I doubt that President Trump would be removed from office.
You have a long history in politics and government, but in the private sector, you are chairman of the board of a company called Dragonfly. It's one of the few public companies in the drone space.
I don't think I'm the chairman of the board. I'm a member of the board. I gave you a promotion.
That's okay. You're a member of the board. Okay. All right. Thanks for clarifying. That company, Dragonfly, works closely with the government, particularly the military. Should Americans, you think, be concerned about the data collecting that's going on with all of these drone companies right now?
Well, they should be particularly concerned about the Chinese, because the Chinese law requires anyone who does business with them shares the information that they have with the Chinese government. And that's why I'm involved with Dragonfly. They are a responsible company. They've got a long history. It's the oldest drone company in the world. They've got the best intellectual property. They also know how to protect intellectual property, and they know how to protect privacy. So they are responsible, and that's why the military, both in the United States and in Canada, have used Dragonfly for some of the work that's being done. And they have a very good reputation in the intelligence community and in the security business. But they understand the drone marketplace, and they're not trying to be everyone's solution to every problem for a gamer, but they are trying to be responsible. I think the most responsible drone company in the world, and their intellectual property is among the best. So I'm proud to be involved with them. And yes, they do a lot of work with the U.S. military, the Canadian military, we hopefully with the NATO allies, but they also do a lot of work with security agencies all around the United States and Canada. It's a great company.
I want to get back to the trade issue just for a moment. If tariffs are not necessarily the answer in dealing with China, what might be the answer? If that was not perhaps the best strategy for President Trump, what might have worked in your mind?
Well, tariffs are a tool, and they should be tools in the toolbox. But you should understand that there are frequently more unintended consequences by raising tariffs than there are intended consequences. And we clearly got the Chinese attention by putting tariffs on products that they were bringing into the United States. The unintended consequences is it hurt the American consumer and has caused some angst, certainly in a lot of different sectors in our economy. So I think the president's got to balance that. But I think it's really finding a way to get them to sit down and not just negotiate with us. I happen to favor regional trade deals, and something that President Trump has not embraced. But I think that open borders, open trade is very important. And as you spread commerce through capitalism, you also happen to invite democracy to take place, because capitalism is one of the best ways we get to express ourselves with our money. I'd like to see people be able to express themselves at the ballot box and pick leaders. In China, they do not have a democracy there, and their rules do not favor individual liberty and freedom, and that's what I'm concerned about. Dragonfly understands that. People in Canada, in the United States, are sensitive to it. Be careful. The Chinese are trying to get into every aspect of your life in the North American continent, and I think they're starting to do it.
Yeah, and as you pointed out, in the drone market as well. Andrew Card, thank you so much for being with us this morning. Appreciate it.
Thank you. It's good to be part of Dragonfly.
All right, coming up here on The First Trade, the largest part of the UK economy is struggling. We're going to break it down for you coming up next. Breaking news now, a huge shakeup in the C-suite at Expedia. The CEO, Mark Åkerström, and CFO, Alan Pickerel, have resigned. The company said the exit was due to disagreements over strategy. Chairman Barry Diller and Vice Chairman Peter Kern will now be running the company while the board looks for new executives. Market seems to like this news. As you can see, we've got Expedia rallying nearly 5% in the pre-market. All right, let's take a look now at how European markets are faring on this Wednesday. Not too bad. We've got the FTSE 100 up about 5, the CAC 40 in Paris rallying 60, and the DAX in Germany up better than 120 points. Yahoo Finance's Edmund Heafy is joining us from London now. And Edmund, the pound has been rallying. What is driving that momentum?
Yes, Alexis, so not only did the pound broach the $1.30 mark today, it actually briefly went above $1.31 for the first time since May. So it's up around 0.7%, which is the highest level it has reached since Boris Johnson became Prime Minister. And the upward momentum is almost entirely related to optimism about next week's general election here in the UK. Traders are optimistic because a series of polls point to a clear lead for Boris Johnson's Conservative Party, and markets view such a scenario as the best case scenario for UK risk assets, mainly because it would pave the way for a smooth exit from the European Union at the end of January.
And also, I understand that the services sector in the UK is struggling. What are the details there?
Yes, Alexis, we now have had the full trio of Purchasing Managers Index data from the UK economy. On Monday, it was bad news for manufacturing. Yesterday, it was bad news for the construction sector. And today, then, it's also bad news for the services sector. IHS Markit said today that Brexit uncertainty and the looming general election were denting the sector, which makes up around 80% of the UK economy, including the retail sector and financial services. The PMI came in at 49.3, signalling contraction.
All right, Edmund Heafy in London, thank you. And we'll be right back with your News Bites. Stay with us. Let's take a look at today's News Bites. We're less than an hour away from the next step in the potential impeachment of the president. The House Judiciary Committee is holding its first hearing to begin the process of actually drafting articles of impeachment. They'll hear from legal scholars about whether allegations that President Trump abused his power count as high crimes under the Constitution. A House Intelligence Committee report made public last night accuses the president of pressuring Ukraine to investigate his political rivals. Part of that House impeachment report shows that President Trump's personal attorney, Rudy Giuliani, may have been a key player in the firing of the U.S. ambassador to Ukraine and in withholding aid to the country. Call logs show Giuliani on the phone with the White House dozens of times between March and August. Giuliani allegedly created a foreign policy back channel with Ukraine on the president's behalf. And thousands of Americans could lose access to federal food assistance next year as the Trump administration tightens work requirements. A new rule limits states' ability to shield adults without dependents from federal work requirements to receive their benefits. The program provides aid to more than 36 million people. And the Catholic Bishop of Buffalo, Richard Malone, has resigned amid allegations he covered up clergy sex abuse. In a statement, Malone said the diocese would be better served by a new bishop who can bring about reconciliation. The diocese has been torn by allegations. Malone kept a secret list of accused priests that he never made public. Coming up here on The First Trade, a management shakeup at Google. We'll analyze what the leadership shuffle means for the search engine giant. Stay with us. A big shakeup at the top of Google parent company Alphabet. CEO Larry Page is giving up his day role at the internet giant. Alphabet's president, Sergey Brin, is out as well. He co-founded Google along with Larry Page. And current Google CEO Sundar Pichai is going to run both companies effective immediately. Yahoo Finance's tech editor Dan Howley is here now. And Dan, I have to ask, it seems like this was abrupt. What is behind the reason for the two of those gentlemen leaving the company?
I think it seems abrupt, but if you look at the kind of relationship that Sundar has had with the company, and then what Larry Page and Sergey Brin have had with the company, it just seems as though they were slowly drifting away. Right? They had left Google to Sundar so they could pursue their moonshot projects or their other things of interest, and they've been doing that. They haven't been in the public eye in quite a while. They don't go on investor calls. They don't go to corporate meetings. They haven't responded to Congress when Congress has called the heads of Google and Alphabet. They call Sundar or Sundar shows up. So they really haven't been big players in the company for a while. And so Sundar coming in is just kind of finishing off, I think, that move of them kind of going into not really retirement, but just
they're still going to be members of the board, correct?
Yeah.
So they'll still have some control over the company they founded.
Yeah, it's weird. It's like owning, it's like having a place in your parents' house, like in your parents' attic. And
Okay,
then saying,
you still have a bed there, right?
And then you say, come over to my apartment. And it's like, it's not really your apartment, it's your parents' house.
But you can come over for like dinner or if you need to crash.
Yeah, and that's kind of like what Sundar is doing with Google now as a whole, because Sergey and Larry still have controlling stakes. They have a dual class stock, so they have full control of the board. They have the most voting power. So it's not really like Sundar has control of the company. They still do. But
he will be the public face now of the company in a way the other two have not been, as you point out, for quite a while. How much of that do you think is in this decision is because Google is so much under the microscope right now on the federal level? protests from workers and the privacy issues?
I think it's got a lot to do with it. I mean, he's obviously been in front of Congress. He's been talking about protests, but he's been, the face of the company for some time now, and I think that's really going to be the way it is going forward with Alphabet as well. All
right, Dan Howley, thanks so much.
Thank you.
We have got the opening bell coming up next here on The First Trade. But first, here's a look at the action in overseas markets. Things not looking too bad. We'll be right back. Welcome back to The First Trade. About 3 minutes away from the opening bell, and stocks remain in rally mode. Let's go around the bell with David Nelson, Chief Strategist at Bellpoint Asset Management, and Tim Horsberg, Investment Strategist at Invesco, along with Yahoo Finance's Jared Blickery at the Wi-Fi Interactive Board. Good morning to you all. And gents, I'm going to start here at the desk. What a difference a day makes, right? A new headline out on the U.S.-China trade deal, and bingo, we've got ourselves a rally. Is this market just placing too much emphasis on these day-to-day trade talks?
Well, we think so. I think when you look at the gyrations of the trade negotiations, you miss the big picture, which is strengthening U.S. economy, accelerating back to trend growth, and generally a positive backdrop from the U.S. consumer. So I think both of those fundamentals have really been the underpinning of the rally this year and should help continue to power stocks looking forward into 2020.
What do you think, David?
I think the elephant in the room is still interest rates. You know, you start with securities analysis, you start with the risk-free rate. And with the risk-free rate pretty low, you get multiple expansion, which is what we've had all year. The question is, how long can that sustain itself? Because until I start seeing estimates for 2020 start to go higher, it's all suspect.
So what you're saying is, where else are you going to go if you want some decent return?
Yeah, combined yields are just not competitive at this point. Asset classes compete for your dollars just like everything else. And if interest rates go up to, say, 3% where we were a year ago, think back a year ago. People were rushing to the exits because bonds were suddenly attractive again. Asset allocators like insurance company, pension plans, traditional fixed income buyers, that's where they were putting the money, they were de-risking. But that doesn't exist right now, so stocks are still the better asset class.
All right, Jared, you've got to look at what's happening around the world at the moment.
Yes, well, in Asia, this is red because we got that news from the Bloomberg story about the latest in the trade negotiations. That dropped at about 3 a.m. But we see Tokyo, the Nikkei was off about 1%, Kospi off as well. But in Paris, after the news, we got the CAC 40 up over 1% along with the DAX. London, the FTSE is just about break even. Here in the U.S., futures are pointing to nice gains. We got the S&P 500 500 up 5 or half a point here. And just to get back to David's point about interest rates, we had a huge drop in the 10-year yesterday. It was tied for the biggest drop in about a year and a half. And with that, we saw a lot of factor rotation out of transports, out of small caps, out of financials. And that's kind of the opposite what we had seen since the beginning of September. So I think that was a key move in the 10-year, although it could be a capitulation as well.
Yeah, bank stocks were definitely hurt yesterday. All right, here we've got the opening bell at the New York Stock Exchange and the NASDAQ. The Dow Industrial is going to start the day up 133 points. But will this December rally be spoiled if and when the December 15th tariffs actually go into effect? Or have investors been smart enough to actually bake that into the pie at this point?
I think when we look at that December 15th deadline, if all of the tariffs go into effect on consumer goods as proposed today, that will definitely hurt market sentiment. I think that the market has been anticipating some sort of compromise around either a phase one trade deal or at least walking back the full extent of those tariffs. So I think that has been discounted, but only, let's say, about halfway. So if you do see that full implementation, that'll probably hurt sentiment looking into the end of the year.
So it's just going to be a bad catalyst for this market. Don't you think by now investors should have already considered this?
I think Americans understand that the China dynamic is going to be with us for a long time. This isn't about trade anymore. It's foreign policy. It's military. It's the cost of war. And it's tough, and tariffs are a tool, it's a weapon. A lot of people don't like it. Maybe there's a better way to go. Maybe we can do it a different way. We can debate the tactics used, but I don't think what's up for debate is the actual need to do it. This is going to last for some time. We should get used to it.
All right, Jared, you've got to look at what's moving the Dow at the moment, which is actually up better than 100 points.
Yeah, well, first I was taking a look at the transports here. This is a two-day look, and they had a disastrous day yesterday, really led the way down. We could see FedEx down 3.3%. Now, if we look at what's happening today, lots of green. So we're seeing a bit of a bounce back here. If we go to the Dow Industrials, different picture as well. We have Apple up about 2/3%, Microsoft up 1/3. Financials doing a little bit better as the 10-year is bouncing up today. JP Morgan's up 0.2%, maybe a record high for them, or actually close to a record high. And then if we take a look at the sectors that are leading today, we got materials, industrials, energy, healthcare, tech, consumer discretionary. All of those are outperforming the S&P 500. So kind of a move into value and cyclicals again, which is pretty interesting, concurrent with that move up in the 10-year. To the downside, we got real estate and staples in the red, and utilities just about break even. So those are the defensive sectors, interest rate sensitive, that are leading to the downside.
You know, the S&P 500 is now trading at about 17 times forward-looking earnings. Are you comfortable with that valuation?
Yeah, I mean, I think when you look at historical averages and think about the broader context of valuation, it is a little high relative to long-term averages. But again, part of that equation is factoring in what are earnings going to do next year. And so far, guidance has been relatively positive that we'll get back into that sort of mid to high single-digit earnings growth numbers. Now, whether that can come to pass still remains to be seen, but generally that positive earnings outlook leaves us more comfortable with that forward PE than, let's say, we were at the end of 2018 or other time periods.
Are you optimistic about earnings the first half of next year?
I don't know yet. Right now.
Fair answer.
If I had a crystal ball, I'm uncertain at this point. And we came into the start of this year. We were looking for 10% growth. By the time we close the books on 2019, we'll be fractionally higher. And that's kind of what the estimates are doing, as we go forward. But again, stocks in a vacuum are a bit expensive, but you got to put in the context of interest rates. The trade dynamic, how that pans out, I think December 15th, that'll be short-term sentiment. We seem to have looked through that each time. Every time we get a tweet from China or President Trump, the reaction used to be measured in weeks. Now it's days.
Right. Sometimes hours.
Sometimes
right?
hours, yeah.
Jared hit on, and you hit on earlier, David, interest rates being very low right now, not giving investors the return they're looking for. Bank stocks got hit yesterday. Do you see some opportunities in the financials at the moment?
Financials is one of my biggest overweights at this point. This growth to value trade that I think is taking place in the market, I think it has legs. I look at some areas of technology. Workday is playing out today. There's a company that's, when you look at GAAP earnings compared to what they're saying they're earning, they're actually losing as much as they say they're earning. That permeates through a lot of software stocks. Some sections of the market are pretty egregiously expensive. I think financials are a good place to hang out.
Are you bullish on financials?
Yeah, I think for the same reasons, when you think about where yields have gone and what banks have been able to do and some of those important metrics like net interest margin, that you've seen banks continue to earn even through this yield curve flattening.
That's a great point.
And as we look at that, I think that's one reason that financials.
I think that's a fabulous point. If you can make money in the environment that we've come
Right.
through, the news going forward has got to be a lot better.
Any particular names in financials that you like, one over the other?
You know, I think when we look at just in a broader segment, I think some of those mega cap banks still hold up quite well relative to even their kind of regional peers. So that's probably within financials where we'd favor a little bit.
You could almost buy a basket. They all have pretty much the same dynamic. JP Morgan, Morgan Stanley, they all look attractive.
Of course, we're also having our eye on retail stocks. It is the time of the year, and people are out in force shopping. At least the latest numbers showed that, both on Black Friday and Cyber Monday. And you've got a closer look at retail stocks, but I am seeing a lot of red on your screen.
Well, I was just checking out the 5 days. This is what's happening today.
Oh, that looks better.
Yeah, we got just about everything bouncing back today in the green, except for those defensive sectors. So we're going to see that outperformance. But if we take a look at 5 days back, that's going to bleed into last week when we had all those negative earnings coming out. Home Depot is down 3%, Lowe down 2%. We can also take a look at the software earnings because that's what's really in focus this week. We had Salesforce releasing after the bell yesterday. They're down 2%. Marvel, they're down 3.7%. Workday down 5%. Kind of off to an inauspicious start here. What was nice to see was Microchip. They didn't release earnings, but they pre-guided to the upside, and so that's up 3%. I've been watching the semiconductors. That's a sector or an industry that's been hitting record highs. If you look at the Philly Chip Index, and it's come under pressure over the last few days. Nothing disastrous, but especially with exposure to China, you want to see this outperforming.
Yeah, I want to bounce off the chip stocks there for a moment. Yesterday, we had the Dell CFO on, and they've been dealing with this supply shortage from Intel. They've been dealing with them for the past 30 plus years. And he actually said, we have to start looking elsewhere, and he actually named AMD. Do you think this is really going to have a material effect on Intel, this supply shortage?
Well, when we're thinking about just broadly diversifying supplies and where that could come from, from a big customer like Dell, I don't think that in the long term that should have a material impact on those supply chains because you've got so much time to plan for them. But I think in the short term, yes, that's probably going to be disruptive.
Intel has always wanted AMD to survive because otherwise they'd be named a monopoly at this point. But now I think they're getting pretty uncomfortable because they're becoming a real threat at this point.
What about within tech? We used to talk, seemed every day about the FANGs. We don't so much anymore. Are you still hot on them, David?
Tech is a big overweight for us. Look, I own Intel. It's a name that I own. I own other names as well. Even Apple is a fairly defensive name at this point. It's some of the software names that give me pause. Some of the valuations, even Salesforce today, it's about 94 times trailing. A lot is priced in for some of these names.
What's your feeling on cloud? Got to be in it.
Yeah, I think, again, long-term trends got to be there. But, when you look at software relative to semis or some of these more trade-sensitive sectors, I think there's probably more near-term upside in other areas relative to that.
What might those areas be?
Well, I think especially as we talked about semis, I think is if our overall outlook looks continues to really stay on this track where we see gradually improving growth and, again, some sort of near-term resolution to trade, that could be positive for some of those more trade-sensitive tech sectors.
All right. What about the NASDAQ? How's it doing here in the early going, Jared?
Well, lots of green here. And just to your point about Amazon, they had an investor day yesterday for AWS presentation, and they're in the chip business. I didn't know this, but they already had their first generation out. They just announced their second generation. Intel and AMD took a hit on that. I mean, Amazon AWS has nearly 50% of the cloud business, and they're just making huge strides here in terms of innovation, offering features. I think 30 new features were brought out yesterday. The competition is just having a tough time catching them. But here we're seeing Alphabet, they're up 1.6% today. I think we already won over Workday. They're down 5%. They're the biggest loser, and that's off of their earnings yesterday. But there are some outperformers too. We're talking about Expedia with that leadership change. They are up 6%, up nearly 5% over the last 2 days. So roughly, it's a pretty positive outlook here for the NASDAQ, but we're going to have to wait and see if there are any more trade headlines that come out today.
And I'm sure there will be. Before we let you go, Tim, I'll start with you. Just a few weeks left in 2020. Are we going to rally into the new year?
Yeah, we think so. I think unless there's a big setback on the trade front or elsewhere with sentiment, we think rally continued into the next year in 2020.
For me, one of the most important days is the end of the week. This week, we had an ADP number that was a little bit soft at this point. If PMI data starts to translate into the consumer and ultimately jobs, that would be a real hit for the. That's the one thing that's held us up is the consumer and the job market. That's what I watch closely.
All right. Thank you so much, Tim Horsburgh, David Nelson, Jared Blickery. Thank you for being with us this morning. And coming up, overhauling car manufacturers, the major impact electric cars may soon have on the auto industry. We are a few minutes into the trading day. Let's see what's moving the markets here at the open. Yahoo Finance's Inez Ferre down at the New York Stock Exchange. What have you got your eye on, Inez?
Alexis, we're looking at Expedia after the company announced a leadership change at the company with their CEO, Mark Okerstrom, stepping down as CEO and also board member, and their CFO, Alan Pickernell, also stepping down. Barry Diller, the chairman of the board, said that ultimately senior management and the board disagreed on strategy. Just last month, after their earnings report, that stock was down 27% after some commentary that Expedia made about challenges that they were having with SEO, that's search engine optimization, and how that was affecting their revenue. We're also watching Salesforce this morning. This is after their adjusted earnings came in as a beat for their latest quarter. Revenue came in above estimates. A big driver for them was Service Cloud sales, which was up 24%. Profit forecast, though, for the current quarter came in below what the street is expecting. And then we're watching GoPro seeing a bump. This is after the company says that their new camera, Hero 8 Black, was a hit in the start of the holiday season with record sales representing about 90% of sales for their website. Their CEO saying that this positions them to report a profit this year and also to increase earnings and revenue in 2020. Alexis?
All right, thanks so much, Inez. OPEC is sending mixed signals regarding production cuts. Yahoo Finance's Jared Blickery at the Wi-Fi Interactive Board with today's commodities report. So how is this affecting the price of oil, Jared?
Well, we've got oil up substantially. It's up 3% and back to our old resistance area around 58. And the news overnight really had to do with China and that Bloomberg report that came out that said the December 15th tariffs probably not going to happen. Not only that, existing tariffs could be rolled back. And so we got a boost off of that. We can see the overnight price action here with a spike up. Also that one that come at 9 a.m. here. If we look at a 3-month chart, we can see the resistance level that I was talking about here and kind of been in a trading range all the way down from about 53, 54, and then to the upside about 58, 58 and a half. So we'll have to see if we can break out of this and what the catalyst will be. But you were talking about that OPEC meeting that's happening this Thursday and Friday, which is right around the Saudi Aramco valuation time. And yeah, it's not surprising that we're seeing oil prices climb into that because that benefits the Saudis. And there was a rumor that came out Sunday that Iraq was saying that there's going to be a 400,000 barrel production cut in addition to the 1.2 million existing one. And so that gave a little bit of a lift to crude oil. And so I think we're just getting a little bit ahead of ourselves here. We're going to have to see what actually happens. Most analysts think that at the very most, we're probably only going to get an extension of existing cuts and not new ones. But again, the Saudis have it in their favor to try and get the price of oil up into that Aramco valuation date, which could be as early as tomorrow.
Wow. All right. We've been waiting so long. It's hard to believe it might actually be here.
I think Brian's not here.
I know. And also we've got soybeans, we know, sort of at the crux of the agricultural talk between the U.S. and China in the trade war. What's soybeans doing today?
Yeah, we have soybeans up just marginally, but this is a 3-month chart, and we can see the trend has been down. Now, part of this has to do with the trade negotiations with China, and also it has to do with the growing season in Brazil, which is going well. But the waivers for China issued to buy soybeans without soybeans without tariffs, those are done. So we'll have to see what the next development is.
All right, you can be sure farmers are listening closely. Jared Blickery, thank you. It is turning out to be a challenging year for the auto industry around the globe. Bloomberg is reporting that as many as 80,000 jobs are being cut by car manufacturers around the world due to the era of the electric vehicle. Yahoo Finance's Rick Newman is here with more. And Rick, we're actually getting a number, which is interesting, 80,000. Yeah. To be honest with you, I thought it might even be a little bit more in this age of the robot.
Well, Bloomberg is attributing that just to electrification, and that's mostly, the recent news is Audi and Daimler-Benz, a lot of cuts in Europe. We've seen the automakers here in the United States kind of retrenching. GM is closing 4 plants. Ford is downsizing, and they're also getting rid of their white-collar labor force as well. There's a lot going on in the auto industry. Sales are still pretty good here in the United States, and they've had a good run for the last 10 years. But one thing the automakers know is this is a highly cyclical industry, and they're trying to think ahead and not get just crushed when we have a downturn and people just don't buy that many cars when there's a downturn. So they're trying to get ready for that. At the same time, they're trying to prepare for whatever electrification brings, which is totally new ways of manufacturing the vehicles. There are fewer moving parts in an electric car, so that changes a lot about how you build a car.
You mentioned 2 European car companies by name in terms of job cuts. What about job cuts here in the U.S. because of electric vehicles?
Well, I looked up total employment in motor vehicles and parts, and I was surprised. It's actually down by about 60,000 since the beginning of the year. I mean, that's when it peaked. Now, that data doesn't tell you what caused those job cuts. I think electrification is part of it. I think there are other changes going on. Buying preferences have changed. Consumers just don't really want small cars anymore. I mean, that's another thing. And you've also, by the way, you've got non-traditional, non-automakers trying to get into this space. So there probably is some employment uptick. Oh, like
Tesla?
Yeah, Tesla, but also Google. I mean, Google.
You're right.
Apple has been doing some research here. I don't know if they're ever going to actually build a car. I kind of doubt it. But so you kind of have some jobs there, but those are not assembly line jobs for the most part. Those are research jobs and technology jobs. So there's a big shift coming in this industry, and we're starting to see the signs of it.
All right, Rick Newman, thanks so much. And actually, I'm going to talk about us right now because this week we saw Senator Kamala Harris drop out of the presidential race while Senator Elizabeth Warren slips in the polls. And many say it's because of her stand on Medicare for all. And Rick, in today's Ballots and Dollars podcast, we actually looked at whether or not Medicare for all is affecting her candidacy.
Yeah, I think this is actually starting to harm some Democrats as people. So Kamala Harris was a supporter, then she kind of backed away from it a little bit. Elizabeth Warren did the same thing, all in on Medicare for all, but then she also backed away from it. At the same time, she's kind of coming down in the polls. So I think this program is actually starting to hurt the Democrats a little bit.
We had an interesting conversation. I hope you'll all check it out on Apple Podcasts or wherever you get your podcasts. All right, thanks a lot, Rick.
Thank you.
Coming up on The First Trade, bringing home Baby Yoda. Finally, I have been waiting where you can pick up the much anticipated Disney toy, but there's a catch, of course. We'll explain coming up next. Here's another quick check of the markets for you. Continuing to build on that early morning rally with the Dow up nearly 180. Broader market is also higher. We'll be right back. Now for a look at some of the companies and stocks the Yahoo Finance team is watching for you today. A mixed quarter at Campbell Soup. The food maker beat on earnings, but sales fell short and it cut its full-year growth outlook. The CEO blamed the timing of the Thanksgiving holiday for delaying some shipments, but said Campbell saw sales of soup grow for the first time in 10 quarters. Johnson & Johnson says that new tests of its baby powder show no traces of asbestos. The company says it conducted 155 tests by 2 different outside labs, and they used 4 different testing methods on samples also tested by the FDA. It was the FDA that reported finding some asbestos in the baby powder earlier this year. United Airlines is turning to Airbus to replace its fleet of aging Boeing jets. The airline has agreed to buy 50 Airbus planes. They'll replace Boeing 757s, which are due to retire soon. The new additions will be used beginning in 2024 to fly from airports here in New York and Washington, D.C. to Europe. And fans of Disney's Mandalorian rejoice because Baby Yoda has arrived, but not in time for Christmas. Mattel's 11-inch plush Baby Yoda is available for pre-order. It's listed at $24.99. You're going to have to wait till April 1st to get your hands on one. And Funko is taking pre-orders for 2 Baby Yoda Pops. The regular size version for $12.99. There's also a larger 10-inch version for $29.99. They won't be available until June 3rd. So you'll have to just keep watching Mandalorian and wanting to hold that Baby Yoda. All right, the New York Yankees are reportedly teaming up with Amazon. The New York Post says the Bronx Bombers will be the first major league team to stream games to fans without cable subscriptions. It says the team plans to stream a limited number of games, likely on Amazon's Prime Video service that could start as soon as 2020. And those are your companies to watch for this Wednesday, December 4th. Coming up on the first trade, food for thought. We'll break down Grubhub's annual Year in Food report. There are some surprises. Stay with us. Grubhub is making us hungry with the release of its 2019 Year in Food report. It highlights top food trends of the year and shows that plant-based food is here to stay. Yahoo Finance's Heidi Chung here to break it down. I guess we shouldn't be too surprised about that.
Right, so the hype has been super, super real. Alexis, you and I have talked about this countless times again, ever since Beyond Meat hit the public market. Everyone wants to try it and are curious to eat it, and Grubhub's report reflects that.
Okay,
tell us. So when we take a look at the top orders of the year, though, take a look at this. Cauliflower pizza grew 650%. In 2018, cauliflower dishes were ranked 7th and 10th. So this is a huge move up for them. I love the things on this list, but a couple things that stood out to me. Bone broth. People are ordering bone broth on Grubhub and Seamless, and brown sugar milk bubble tea. Now that has been popular among Asian cultures for a very long time, but it looks like it's going mainstream here. Impossible Burger, 203%.
Now, interesting that it's not Beyond there,
so
because they're in restaurants too.
They are, but Impossible started out that way, right? So they have had a longer history with partnerships with restaurants. They just penetrated the grocery stores, so it makes sense that a lot of companies are offering Impossible over Beyond.
And now they're the top meat alternative of the year.
Exactly. It's so surprising to me that within the span of just a year, we have a fake meat burger on the top list. Look, black bean at number 2, tofu at number 3, mushroom burger at number 4. But it looks like the hype is not going away at this point.
Plant-based, as we said, here to stay. Now, what about when it comes to breakfast? I feel like real meat is still very present.
Bacon is still the top meat. It's bacon, egg, and cheese. People love it, especially on a biscuit. And a lot of sweets on here as well. We have mixed berry acai bowl, strawberry banana French toast. So the breakfast items,
waffles,
lots of carbs, lots of meat still. It looks like for breakfast, people are still opting for bacon.
It's okay. If you eat it early in the day, you can sort of burn it off throughout. You know what I found interesting was the states that are vegan friendly.
Yes, let's go over that.
Yes. Number 1.
Sorry, my list is so long here. I'm going to go find it. But number 1, New York.
Go figure.
But who's number 2? California.
Yeah.
But on the list of the least vegan-friendly states, we have Indiana at number 1.
Okay.
Iowa, North Carolina, Missouri, and Idaho. So are you surprised, really?
No.
Yeah.
But New York, way to go, going vegan.
Yeah.
All right, Heidi, thanks so much.
Alexis.
All right, that's going to do it for the first trade for this Wednesday morning. I'm Alexis Christoforous. Before we go, let's get one more check of the markets downtown with Inez Ferrer at the New York Stock Exchange. Inez?
Alexis, the Dow is up 200 points. The S&P and NASDAQ also higher. I want to give you some news about Bumblebee. The former CEO of Bumblebee was convicted in a tuna price fixing conspiracy that was involving 3 companies. This trial took place over a 4-week period, and Christopher Leshowski was found guilty after that trial. Bumblebee, for its part, had agreed to pay a fine of $25 million after it pleaded guilty to price fixing back in 2017. We're also watching Union Pacific not moving too much after the company lowered its guidance for the fourth quarter, seeing volume that will be down a little more than 10% versus some previous guidance of 8%, and also seeing fourth quarter revenue down more than 10%. That's a wider decline than what the street had been expecting. And then we're watching Expedia seeing a pop today after the company announced a leadership change there, with Expedia's CEO Mark Okerstrom stepping down as CEO and board member. Their CFO is also stepping down, and Barry Diller, the chairman of the board, said that ultimately senior management and the board disagreed on strategy. Much more on this story in Wi-Fi AM after the break, so stick around. The Dow's up 200 points.
How Good morning and welcome to Wi-Fi AM at Yahoo Finance in New York on this Wednesday morning. I'm Dan Roberts. We've got Heidi Chung and Kristen Myers here on the couches to go over all the business news of the day. Let's start by seeing what stocks are doing. You are seeing green across the screen because stocks are rebounding this morning thanks to an encouraging new report that the U.S. and China might be moving closer to that elusive Phase 1 trade deal we have heard so much about for so long. Bloomberg is reporting that some kind of deal could even happen before that December 15 deadline, which is very soon. Negotiators are reportedly zeroing in on how much to roll back tariffs, but agricultural purchases is still a sticking point. Now, that news comes just one day after President Trump said that he, quote, likes the idea of waiting until after the election to finalize a deal. So obviously, this is very different news.
Yes.
And excuse me if I'm not as excited and optimistic about this as the markets seem to be. The Dow is up 200 points right now.
I'm actually really surprised to see the markets do this kind of like whipsaw action, because what we've recently seen is the markets reacting, I feel like, more positively on the positive news that we've been getting, but kind of shrugging off the negative news. But to see this much back and forth, considering we keep going back and forth with this trade deal, is a little bit confusing.
I mean, it's no secret that trade impacts market action. Now, we've been following this literally every day, and I cannot even keep track of how many times we've seen a back and forth in terms of, are we gonna get a deal, are we not gonna get a deal? But it's always interesting to me when the markets are sort of a cushion for President Trump. So if we're near record highs, he's like, well, we have a little bit of cushion, so I can throw in a little, maybe we'll wait until the election.
Thank you, Mr.
And
President.
then, exactly. Exactly. So, I mean, what's going to happen? We have no idea. But at the end of the day, markets will react accordingly.
And even this positive news about, okay, we're going to get that Phase 1 trade deal by the 15th, no one still knows what that even means.
Also,
no one even knows what a Phase 1 deal even looks like. So even, let's just say they do sign a deal, right? Let's just live in this world, but let's just live in the world where they do, right? We're positive here. They sign that Phase 1 deal. It literally could just mean nothing other than we will keep on talking, and we are not going to add more tariffs. Like that, it could just really not be, but it might not be this huge, meaty deal
also,
that we're expecting or hoping for.
Is it a deadline? Because the only thing that December 5th represents is the fact that additional tariffs are going to go into, the 15th represents that additional tariffs are going to go into place. So they never said we're going to sign something by the 15th. They just said a Phase 1 trade deal will be signed soon.
Well, we've seen a lot of the deadlines get kicked.
Right.
Well, of course there's no deadline. And to be clear, it's not even technically a trade deal.
Right.
It's just a trade agreement. Trade deals have to be approved by Congress. I love how we always call it a trade deal. I'm like, it's actually not even that. So, I mean,
trade deal episode 1.
It's just this like gentleman's agreement between
like Star Wars. We're going to have like
a
bunch of episodes.
The text rolling across the screen. Phase 1.
Yeah.
There was a good graphic recently, I'll shout out Business Week, in print along the bottom of a page, and it had, you were saying it's hard to keep track of how many times there's been, and it had, Trump says this, and then like 4 days later says this, the exact opposite. Then he said this, we're a day away from a deal. Then he said we're 65% of the way. Then he said, we're pretty far from a deal. Then he said we're getting a deal. So you're right, it is head spinning. Now, speaking of Washington, let's go there, because while the House is busy with impeachment, there is a key hearing just getting underway right now in the Senate that could change how big tech gets to use all of your personal data. The Senate Commerce Committee is debating 2 competing bills regarding data privacy, and our own Jess Smith is live in D.C. with more. Jess, what is this hearing about? What might happen? What might come from it?
Well, the top Republican and the top Democrat on this committee each has a plan for data privacy. Senator Cantwell has released a bill. She released it last week. And then Chairman Wicker, he released a draft bill and a fact sheet about what he wants to do on data privacy. And they do have some similarities. They both protect consumer privacy, put more protections in place, put more requirements on companies on how they handle consumer data. But there are also some differences. One big difference is the Republican bill would preempt any state privacy law like California's, while the Democratic bill would not. It would allow states to put their own plans in place. So we'll be seeing today what these experts who are testifying think of these proposals and how they might work. There was a working group of lawmakers throughout this whole year who have been working together on a data privacy law, but those talks stalled. There are still some members who are working together, but it's not clear if they will introduce a bill or not. People I've talked to have been a little skeptical that anything is going to get done on this front, at least during this Congress. But now that we have these top lawmakers putting proposals on paper, we're having a full committee hearing. I think there's a little more optimism. Plus, we have California's privacy law going into effect in January, so that gives things a little more urgency.
Jess, what are the big tech companies saying in response to this? Is DC talking about that? Because so often, as soon as you hear even the threat of some possible change, then you get the retort from them of, here's why it shouldn't happen, or here's what we might do if it does happen.
I mean, we do hear from big tech companies like Facebook and Apple saying that there needs to be a federal privacy law. They've been spending a lot of time and money in Washington lobbying Congress, trying to push their vision of what a data privacy law should look like. And a representative from Microsoft is actually testifying today, and in her prepared remarks, she says the U.S. privacy law has generally failed to keep pace with advances in technology and to provide Americans with the protections they want and need in this digital age. Today, more than ever, there's an urgent need for a comprehensive U.S. privacy law that provides strong protections for all consumers. A lawyer from Walmart is also testifying today, so we'll be listening to see what they have to say as well. This hearing just got started a couple minutes ago. They're in opening statements now, so we'll be sure to keep you updated on what we learn.
All right, Jess, thanks so much. Check back with you soon. Well, the two co-founders of Google, the faces of the company for so long, are out as day-to-day executives of Alphabet, leaving both companies with one CEO effective immediately, and that is Sundar Pichai. Now, Larry and Sergey, that is Larry Page and Sergey Brin, have stepped down as Alphabet's CEO and president, respectively. Both will still be on the company's board, but Google CEO Sundar Pichai is now running the whole show, making him one of the most powerful people in Silicon Valley. Maybe it was inevitable, but it was a year of a lot of bad news for Google. So kind of interesting. Yahoo Finance's tech editor Dan Howley is here to shed more light. Big news for Sundar.
Big news. I think one of the things that's interesting is that there's not a lot that's going to change here. It's really, Sundar taking over Alphabet. He was already the head of Google. Google is where the business is done. Right. Alphabet is more like exciting, fun things that you might, see, like balloons that send internet to people around the world, and drones, and medical devices that they're working on. All this like kind of future visionary stuff. But he was running the business that makes Google all of the money. So the interesting part is, though, they still have all of their shares. So they have a dual class stock where the Sergey and Larry have the majority of control. So they're still on the board. Nice. They still control the board. And so they're really not going to be sidelined in any way, shape, or form. And they say specifically in their kind of leaving letter that they're going to be active in things that they're passionate about. So it's not
leaving, not leaving.
Leaving and not leaving. The way I put it was, it's like Sundar has a apartment in his parents' attic. And then when he tells friends to come over, he goes, come over and see my cool place. Yeah. But it's really your parents' place.
And he says, my parents are moving out, but they just moved downstairs.
Yeah, exactly. Yeah. So it's like, it's interesting. I mean, I think it was obviously, like you said, it was inevitable. This was something that they had been slowly kind of moving away from the company over time. They don't make public appearances. Right. When Google got called in front of Congress, it was Sundar there. At Google's I.O., their big tech event, it's Sundar there. On conference calls, it's Sundar there. So he's been the face of the company for a while, and they've just kind of been like, doing their own thing.
Right, Dan. So we are Yahoo Finance. We have to talk about what this means for investors of Alphabet. Not too much, right? No. Because Sundar Pichai was running essentially a lot of the conference calls. He was headed to the Hill to talk to lawmakers. So Porat and Sundar are just going to continue running the ship.
Yeah, Ruth Porat and Sundar Pichai are just going to be the people that you hear on the conference calls still. Mm-hmm. And I think, it's not that Sundar didn't do a lot for Google when he came in. He really kind of structured the company. It's always been kind of this weird laissez-faire attitude at Google, and he came in and said, no, this is the way it should be. We should kind of structure it properly, and it would be interesting to see if he's able to do that with the Alphabet side and the Moonshot projects, because maybe they would have a better chance of flourishing if there was more structure at the company rather than the way it was kind of built with Sergey and Page.
So speaking about what Larry Page and Sergey Brin were really, interested in recently, those bigger, more cerebral projects that were like forward looking, what do you think might be next for them? Obviously, I don't think they'd come out and obviously be direct competitors to Google, clearly, but like, what could their next act possibly be?
I think they're going to continue to focus on those kind of side projects. You have Kitty Hawk, one of the electric plane companies that Larry Page works on, and Sergey has his hands in a whole bunch of different projects. So I think that's really where they're going to go, kind of the cool, future-y ideas that they want to work on. Yeah, exactly. Well, Wayne's World came up.
That's for cool future ideas.
Yeah, it's also Wayne's World.
Yeah, right, that too. All right, Hallie, thanks so much. Really interesting. We'll keep watching. It almost a little bit cast doubt on why they split them in the first place. You know, why they created Alphabet, and now we just go back to one person running all of it. Thanks. Coming up here on Wi-Fi AM, Kamala Harris drops out, but what happens to all the money she raised? We'll tell you. Welcome back to Wi-Fi AM at Yahoo Finance. Markets right now very much in the green on that encouraging report about trade. Let's go down to the floor of the New York Stock Exchange where Ines Frey can tell us more. Hi, Ines.
Hi, Dan. Take a look at Expedia, up more than 8% this morning. This is after a leadership change at the company, with the company announcing that its CEO, Mark Okerstrom, is stepping down as CEO and also as board member, and their CFO, Alan Pickerel, is also stepping down. Barry Diller, chairman of the board, said that ultimately senior management and the board disagreed on a strategy. Now, just last month, you saw that the stock was down more than 25% in one day. This is after some commentary after their earnings report saying that they saw some headwinds with SEO, search engine optimization, and that those headwinds were affecting their performance. And that prompted 3 downgrades from Wall Street, one being from Piper Jaffray, which saying that this problem is going to stick around for a while, with the Piper Jaffray analyst basically saying that Google would put free links lower and paid links up higher, and that Expedia had to use higher cost marketing channels, and that you can expect this problem to stick around for a while. So we know that they've been having challenges with that SEO. Dan?
All right, thank you, Ines. And we do want to keep talking about Expedia, that news that Expedia's CEO
and CFO will be leaving the company.
Out.
Yes.
Another CEO shakeup. This is
like
the story of the year.
I mean, we're almost done with the decade, I should say, not just the year. And I thought finally, you know, after Under Armour, after all the news that we got recently, we might be not seeing so many C-suite shakeups. But surprise, surprise, here we are. Expedia has been massively underperforming for quite some time now. I mean, long time coming.
It's almost like we can't yet do our end of the year roundup of here were all the CEO exits because they keep coming.
Right.
I mean, we could do it this week, but there's still 2 weeks left in December, and there might be more.
Yep. You just never know.
So many more breakups to come.
Well,
I mean, the question is, did they want to leave? It doesn't seem like they did, just judging by what we have been hearing. But guess who used to work at Expedia? Dara from
Khosrowshahi.
Yeah, Khosrowshahi, yeah.
Really?
He used to be head of Expedia, yeah.
Wow, I did not know that.
Yeah, the CEO who just departed took over in 2017.
I feel like
there for 2 years.
We've seen that with a lot of these C-suite shakeups. I think with the exception of what we're seeing with Alphabet, where they're like, you know, I think it's time.
I don't know if that quite counts.
It doesn't, but I think with a lot of the shakeups we've seen this year, it's been I'm leaving with someone's boot in my back. Gently nudging me out the door.
But well, speaking of leaving, but no one's boot in the back. 2020 presidential candidate Senator Kamala Harris is out. Harris ended her campaign yesterday, but according to her filings with the FEC, that is the Federal Elections Commission, she still has over $10 million in campaign funds in the bank. So when a candidate drops out, where does the money go? Are they allowed to keep it? What do they do with it? Kristen has the story.
Hey.
Kristen, what's the answer?
Yeah, so Kamala, as you mentioned, she's got $10.5 million cash on hand. So that number actually might have gone up because that was at the end of September. So she actually might have raked in a couple million more for all we know.
Well, I wonder if you're frustrated if you just donated to her in the last few weeks.
I'm sure you probably are, especially if you might have just given her like $2,000 and then she drops out. So I think many people was like, well, what are they allowed to keep it? Yeah, in a way, they kind of are allowed to keep it. So there's a couple of things, according to the law, that they're allowed to do when they wind down a campaign. So for someone like Kamala Harris, she's up for re-election in 2022 for her Senate seat. She is actually allowed to roll that money over to another campaign. And a lot of politicians do this. If they fail at the presidential election, they say, oh, I want to run for senator, I want to run for governor or something like that, so they can actually just take that money and move it over to another account. You're allowed to donate it to charity. However, people I've spoken to that used to work at the FEC said not many people do that.
Surprise.
Surprise, surprise. Not many politicians choose to donate it to charity. They're also allowed to do things like donate it to, so for example, Senator Harris, obviously she's a Democrat, she is allowed to donate it to a political or local party committee. So she could donate it to like the local Democratic Committee of California or something like that.
She paid out to her volunteers.
So a lot of them do that, right? So to the end, they are also allowed to pay out like staffers. They're allowed to buy small nominal gifts, to people if they want to give like a parting gift or something like that. They're also allowed to do that. But here's the really interesting thing. They're not allowed to do it for personal use. They're not allowed to take that money and go buy expensive things or go on plane rides or take lavish vacations.
Good.
They're not allowed to use it for personal use. However, that happens all the time.
Are they allowed to donate it to a specific candidate?
Yes.
Okay.
They are. However, there's limits to that. They can't just, so Kamala can't just say, oh, I think Bernie's going to win. Take my 10 million, Bernie. She's not allowed to do that. There are campaign limits
that would really
to how much she can. Right, exactly.
For a Pete
that would be
or a
a
Yang.
huge injection of cash. She's not allowed to just give all of it over to a candidate. So she could just divvy up a couple thousand among each candidate.
And as of the most recent, findings, who currently on the Democratic candidate side has the most money right now? Is
Bernie
it still
Sanders.
Biden?
Bernie Sanders.
Sanders?
I
no,
thought you were-
Biden, no, not at all. He has,
I thought you were going to ask who seems most likely to get Kamala's endorsement. Because the next question, when someone who had some support, who's not a nobody, drops, is will they now back someone else and maybe bring their supporters to that candidate?
That's a really good question, but you have to ask herself if she's positioning herself for either a VP, like to run as like a VP on someone else's campaign, or she's positioning herself for maybe a cabinet position. So that's going
Probably meeting right now with
That's
people.
going to influence whether she chooses to endorse another candidate or not.
Sure. All right. Really interesting. And you can catch Kristen's whole story on yahoofinance.com right now. Now let's talk about a Heidi story. As we approach the end of the 2010s, Yahoo Finance takes a look at the best and worst stocks of the past decade today on our site. Heidi has the story.
Hi.
What are the best and worst stocks of the past decade?
So I looked at the top 10 and the worst performing ones, the top 10 of those as well. Exactly. So I took a look at the price returns over the past decade. It was as of yesterday's close. That's just a caveat. So this is subject to change given that things change significantly by the end of the year, right?
Tomorrow.
So we always have to make that caveat. But I was going around the newsroom trying to get people to guess what the number one best performing one was over the past decade.
Wait.
Did you look at this?
I had already
You're giving it away.
What was your guess?
I think I guessed like Apple or
Apple or
Amazon.
Amazon.
I haven't looked at any of the stuff. My
Yes.
guess is Amazon.
Well, Amazon is on the list, but they are number 9. Number 1 is Netflix, you guys.
Wow,
I was actually
soaring
surprised by
over
that. Yeah.
3,700%.
Wow.
And this is relative to the S&P. The S&P is up 177% in that time. So Market Access Holdings was sort of an under the radar name. That is a fixed income electric trading platform for institutional investors. I know you're bored at that, but look, we have 2 chip stocks. We have Broadcom, we have Advanced Micro Devices. Those, not too surprising, right? AMD was the best performing stock in the S&P 500 last year. And then we have Amazon and Ulta rounding things out. I love that Ulta made the list.
I'm
but
surprised
also,
Ulta made the list.
Invisalign maker, Align,
Wow.
at number 5.
Sorry, Smile Direct. You're coming up
Right,
against a giant.
right.
And look at this while we have this up. 2 of those 10 companies are past Yahoo Finance Companies of the Year.
And everyone should stay tuned to find out what 2019 is going to be, because that's going to be a good surprise as well, I think.
Right.
But also the worst performing list, we have to talk about it. The energy sector was the worst performing sector, and so no surprise, we had 4 of the 10 companies, energy companies. And if you recall, and if people don't recall at home, there was a big oil price downturn from 2014 to 2016. So no real surprises there. A lot of these companies are highly levered to the price of the commodity. So makes sense, right?
Which was the worst?
But also Under Armour on the list of the worst performers, you guys.
Yep.
Makes sense,
Sure,
right?
absolutely.
And a lot has been going on just this year when it comes to Under Armour.
Right.
Another company that I want to mention, Kraft Heinz. Now, Kraft and Heinz merged in 2015 and listed as a stock at that time. But before that, Kraft was an individually listed stock. So that's another caveat, but one of the worst performers right now.
Yep, and sorry, Buffett and Berkshire and 3G Capital, because the Kraft Heinz thing has not gone so well.
How badly have they performed over the last decade, right? If Netflix was up 3,700.
So those are some crazy gains.
Right?
But if we take a look at this, they're all under 100%. Now, another caveat that I do want to make is that this does not look at the companies that have been booted from the S&P 500 during the 10 years, or the companies that have gone out of business.
Schlumberger.
Schlumberger.
Oh my God.
Oil services company.
I know. I do know that. I've interviewed them before. I have not heard
but
that in a while.
a lot of companies on this list, like Freeport-McMoRan, that company highly levered to copper prices. So a lot of these companies, you know, it takes into account the commodity that they closely
Under
follow.
Armour.
Wow.
Yeah.
That is why
60%.
Under Armour getting a new CEO come January 1, Patrick Frisk, originally from Aldo.
Just a very interesting list, though, and you can catch the full story on YahooFinance.com.
Coming up here on Wi-Fi AM, we will tell you what stocks are trending right now on our site.
Time for today's trending tickers. First up, GoPro. The stock is jumping this morning after the company announced a strong Black Friday and Cyber Monday. GoPro founder and CEO Nick Woodman saying, quote, "We crushed it."
You're kidding.
GoPro total camera unit sales grew 120% year over year during the entire Black Friday and Cyber Monday period. And the Hero 8 Black sold at record levels, representing 90% of total sales. Now, GoPro seriously needs a big win like this. Now, whether or not this company's out of the woods is not really the main.
Out of the Woodman?
Oh, okay.
Look, you don't often see this from GoPro. I mean, this, by the way, we just covered in our last segment the worst performing stocks of the decade. GoPro has not been public for 10 years, but that has been a dog of a stock.
Yeah,
Right.
I think it's people upgrading, right? The people who bought the earlier GoPro models are finally getting newer models and upgrading their product. So I think that's what we're seeing going on here. I don't necessarily think that GoPro as a company is out of the woods because, like we mentioned, it's still a hardware company that focuses on one or two things.
Right.
That
you don't need to buy. Exactly. It does not have the appeal of like an iPhone where people are like, oh, I definitely want to upgrade. And even that, of course, as we've seen, people are not doing anymore. You buy a GoPro now and you literally hold on to it until it either just completely breaks or it's been like 10 years.
I just think And by the way, the company could continue for a long time this way. It might be okay. It can be a niche product. But what people thought was going to be this huge phenomenon actually is a niche product. You know, you're someone who snowboards, or you sea kayak, or you do some crazy outdoor stuff, and you want the special camera that you can affix to your helmet, fine. Otherwise, for the rest of us, a phone is enough.
But it was, I think, a huge phenomenon, but years ago. We have not seen the popularity around GoPro in quite some time, especially with these crazy new iPhones that you can use for the same purpose.
I mean, you can't strap it to your head.
I mean,
you can if you want.
No predictions, but at what point will an activist investor come in and say, well, you need to sell yourself or do something because the stock is massively underperforming the broader market?
And Fitbit, which in some ways was very comparable to GoPro, just sold to Google. And then we found out that the mystery other bidder was Facebook.
Yeah.
So maybe you do finally see GoPro sell to someone like a Google or an Amazon.
We will stay tuned. But another ticker we are looking at today is Campbell's Soup. Now the stock falling after reporting fiscal first quarter. It reversed, I'm sorry. It is higher now by about 2% after reporting first quarter fiscal results ahead of the bell. The company reported a decline of 1% in organic sales during Q1. The 3% dip in meals and beverages was offset partly by the 2% jump in snacks. U.S. soup sales were hurt by movements in retailer inventory levels in both broth and condensed soups relating to the timing of Thanksgiving. Campbell's maintaining its organic sales forecast of down 1% to up 1%. So it reversed its earlier pre-market moves, and I'm guessing that is a lot because of the current conference call that was underway. I was not tuned into that. So of course I will be looking at the transcript later today to see what was said. But condensed soup and the soup business in general has just been struggling. And this company was starting...
Love soup.
No, it was starting to show signs of life last quarter when they reported snack and soup sales better than expected here in the US. But how many people are buying, I say this all the time, creamed mushroom? How many people are buying, why?
Well, no, or if they're buying soup, are they buying Campbell's?
That's what I'm saying.
Looking at, hipster, artisanal, all natural, all organic, gluten-free, vegan-free, la la la.
I don't think it's so much that people are eschewing Campbell's soup for other hipster soup brands. I think it's just people don't really want to buy in general soup. Period.
What? But why? What would have changed if people don't eat soup anymore? I still like soup.
I get soup that's made by Whole Foods or by the specific.
Or Trader Joe's.
Yeah, exactly.
I guess I really like
That's what it is for me. I'm still buying soup. I don't buy generics.
I don't really buy soup much anymore.
But much like Kraft Heinz, much like a lot of other companies that sort of got their start back in the day when people were doing half prepared from scratch.
Although for me, Heinz is an example of it'll never go away because it's got to be Heinz. Every other ketchup just isn't as good.
But that's ketchup. They have to sell everything else too.
Yeah. Sure.
Yes.
But for ketchup, got to be Heinz.
True.
Okay.
I agree with that.
Heinz can't keep on keeping on with just ketchup sales.
Yeah.
They've got to do
there are
well.
examples of generic things that we say we still buy that food item, but we don't buy that brand of it.
Right.
But for me, for ketchup, no, still got to be Heinz. I'm not going.
Fair enough.
I'm not buying Sir Kensington.
I'll never bring
a
different brand to your cookouts.
Coming up here on the show, we'll talk about the impact one big, important influencer has on holiday shopping. Who is it? We'll tell you. Welcome back to Wi-Fi AM at Yahoo Finance. If you're still looking for gift ideas for the holiday season, you might want to take a look over at Oprah's favorite things. The list comes out every year. This time, Oprah has 79 gifts on her list, ranging anywhere from tech staples like Apple Watch to niche items like winter hats from small businesses across the country. Adam Glassman is the O Magazine creative director, and he joins us now. Hey, Adam.
Hello.
Thanks
Good
for coming
morning.
on.
Thank you.
Well, we will talk about all these products. You guys are wearing one. But let's first start, let's start macro, zoomed out. Talk to me about the Oprah effect, as it's called, on, on items.
I think Oprah really is the original influencer. She's been doing favorite things for over 23 years. It all started really with a pair of pajamas that she loved, and she wanted the whole audience to have these pajamas, and it grew into what is known as favorite things.
Wow. She
gave, and
so we have to ask. We have to ask. Oprah does not make any money from the items that are sold, but she is partnered with Amazon. So explain that.
The magazine is partnered with Amazon.
Right, so explain that partnership to us and how that sort of impacts the items that she's choosing, because like you mentioned, this all started out with her picking one pair of pajamas that she loved, but now is she influenced by having to pick within Amazon's site?
No, not whatsoever, and that's what we love about this partnership, actually. We love the fact that Amazon has so many eyes on it, and it goes across the world. You're on a billion phones, so to speak. But we pick the items, Oprah chooses what she wants. If they're not yet on Amazon, they can choose to sell through Amazon. Choose. If they don't want to, then they don't.
Right.
So to that point then, what has been the impact on some of these? So Apple, for example, is on this list, the Apple Watch, but for a smaller business that doesn't have, the logistics that a company like Apple has.
Apple doesn't need us.
How does this impact a small business that all of a sudden, boom, Oprah says, oh, this robe or whatever, this is now my favorite thing, and all of a sudden they have to scale?
Well, it goes totally up, and I have to say, honestly, that's what we love the most. We love small businesses like this one that you're wearing right now, House of Fluff. Literally, House of Fluff. It's faux fur, because fashion is all about faux fur right now.
It is very warm.
You know what? I will say it's
warm. Is this unisex?
It is warm.
It is unisex. Yes, you can get away with that blue for sure.
It's
and
really
it's
soft.
made with all post-consumer recycled plastic from the sea, 100%. And that's what we loved about it. And it looks real, but it's not at all.
So does Oprah really come across all of these items herself, or does she have people helping her? Maybe they send her a list of 500 products and she really goes through them and
You are looking at the people.
Oh,
I am the person, me, and I have a small team of 2 people.
Okay.
And Oprah sends us stuff. We send her things. We collect things. We are looking, we start in March, basically.
Wow.
We start in March, and we go through thousands and thousands of items.
So talk to me about the prices on this list. Is there something on there because I saw Flywheel, I was actually surprised she didn't necessarily pick a Peloton bike, but there's things like...
I guess is a good thing today.
Right,
yeah, but it seems as if there's a couple of products on there that are a couple $100, and then there's a couple of products on there that are like $20, $30. So talk to me about the depth and the breadth of the list.
We love to show things in all price points, truly. So our least expensive item, I believe, is about $14.99. Our most expensive is that Flywheel bike, which is almost $19.99. But we appeal to everyone. And during Christmas, people will spend some money, and then people are buying stuff for teachers and their friends and their next door neighbors. So we really have to have things for everybody.
And let's stick with the curation process. We mentioned that on her list there are 2 Apple-owned items this year. There's Apple Watch, also Beats, which is owned by Apple. And I just wondered whether she specifically tries, or I guess Oprah and you guys try, to have it heavier on the side of undiscovered things, small businesses, products that you may not know. Because as we mentioned earlier, Apple's going to sell stuff with or without Oprah's imprimatur.
Absolutely. It really is a combination. The Apple Watch is on her wrist every single day. So that really is one of her favorite things. She even takes a bath with it on now because it's water resistant. So it's on her watch, on her wrist rather. And this is the new updated one. So she loved all of the health benefits. It feels like a personal health coach. It was really perfect. Beats is something she uses all the time too. And she was using it even prior to Apple acquiring the company.
Then can we end on this? I'm a big reader, love to read kind of new fiction, and of course Oprah's book club has been very influential. I don't want to put you on the spot, I know we're talking about the holiday list, but are there books on the holiday wish list and or what's going on? What is she reading lately?
Well, there is going to be a new book club selection coming out. I can't tell you what it is, but it's very soon. Very soon. She just named one last week, actually, the Olive Kitteridge new book. And we have one book, actually, on the list. Two books, actually. One is about trees, because literally...
The Overstory by Richard Powers?
No. Oh. This is just a beautiful illustration book of all kinds of trees. She loves trees. She loves dogs, she loves trees, and bathtubs. And then the other book is Michelle Obama's journal. That is a book that's sort of a wonderful follow-up to her main book.
Becoming, right.
Yes.
All right, Adam, thanks so much.
Thank
Good
you.
stuff. Check out
Fun.
the list. Good hat.
It's
warm.
very
Winter
warm.
hat.
I'm not lying. It's very warm.
All right, and coming up here on Wi-Fi AM, we will stick with the holiday shopping season. We'll talk toys.
Welcome back. I'm Ines Ferre here with John Corpina, looking at a bounce back after some positive headlines regarding China. We had a sell-off yesterday. John, what do you make of all of this?
I mean, I think we've learned our lessons over a long period of time here, right? We've seen this time and time again, where we get a positive headline about U.S.-China relations, market spikes higher. We get a negative headline, market goes lower. So a lot of, the ball's going back and forth on this. Kind of not surprised that we're seeing this volatility. You knew after that comment that came out yesterday that the president said that, this could potentially go past the 2020 elections, that at some point after the market reaction, he was going to have to come out and kind of retract a little bit. And that's what we're clearly seeing today. This market has been clearly just dictated on the U.S.-China headlines. I wish we would get away from that and get back to the fundamentals and really watch what's important in this market.
So we saw the ADP numbers came out this morning, weaker than expected, and also the ISM service sector numbers as well. So what are we, as far as looking at those data points, and especially looking at this Friday that the jobs report is coming out, what are you going to be paying attention to?
Yeah, clearly, when we look at our calendar, it is the jobs numbers, and when you drill down there, like really, where are the jobs coming from, what areas, what are the hourly wages, which way are they moving? So I think from those numbers, that's something we're looking on. Any negative headlines that was out there this morning, other than U.S.-China,
shrugged off.
Completely shrugged off, non-existent, and everything is just kind of rising with that. Pretty good move in the VIX, which I like to see. I'd like to see a little bit more volume on this tape here to see if this rally once again is real, but S&P above 3,100, so we'll take what we get for now until the next headline comes out.
Some of the weakness that we saw in some of the sectors were manufacturers or also retailers. No surprise there. I mean, this is somewhat expected as well.
Yeah, we've seen this, coming into this, and that was expected. And kind of, as I said, any expectations or any unknowns is completely going to be swept under the rug when you have a headline that comes out that the president said overnight. So we're going to continue to watch this.
Like one trader said here, you have to apply the 24-hour rule.
Yeah, I mean, look, we've seen this time and time again over the last 9 months, where a headline comes out that says we're getting close, and then the next one says, a meeting's over, or the meeting that was supposed to happen has been canceled. So we have to learn this lesson. Unfortunately, there's been a lot of volatility to this lesson, but at this point right now, I think everyone's relieved to see that the market has traded back to where it is, but we need to get some stability here.
Okay, thanks so much, John Corpina, and stay with us. Wi-Fi AM continues after the break.
Welcome back to Wi-Fi AM. Now, with the holiday shopping season in full swing, some parents might still be trying to figure out what toys to buy right now for their kids. And joining us with some answers is Jackie Breyer from the Toy Insider. Hi, Jackie.
Hi.
Thanks for coming on.
Thanks for having me.
So let's talk about what's on the table here. Are these the hottest toys? Because what we've heard from some places right now is there isn't really one it toy this season. There isn't like one obvious, this is the hot toy. And why might that be?
Not quite yet. So sometimes that appears a little closer to Christmas. Now that we're in December, we've passed Black Friday, Cyber Monday. Now people are shopping in earnest. So now we'll see, stock is where it's at. It's not going to get replenished all that much at this point. So now as things sell, we'll see what becomes harder to find. But I think Ryan's World, any parent with a preschooler knows all about Ryan and his unboxing. He's got 30 billion views on his YouTube videos.
Wow.
Yeah, billion.
So this is Ryan.
That's right. That's Ryan himself.
Never
yeah.
seen him. Okay.
Yeah. So this treasure chest is filled with things that kids can unbox themselves. So they can pretend to be Ryan. They're like Ryan. Ryan's their best friend. They're unboxing. They're pretending to be a pirate. Super cute. Any kid who loves Ryan.
Wait, that is
flip.
genius. So this kid, Ryan, made his name by doing unboxing of toys on YouTube. Now he sells a box of toys in his own image.
Exactly.
Right.
Goodness
And you
gracious.
don't know what's inside. That's the
Don't know
that's
what's.
the
I know
point.
we're
So
kind of
it's-
spoiling it here. There's a variety of different things, but it comes full of these. So kids will be unboxing. They'll say, "What's inside?" Oh, cute character. Whatever it is. There's a whole bunch of gold coins and putty and a little rock dig out. And fun stuff.
So we've been talking lately about Toys R Us making a comeback, opening up a store. I'm wondering, where are most parents purchasing some of these toys? Is it from Amazon, Target, Walmart, or do you think they're actually going to head to Toys R Us?
This one, I believe, is a Target exclusive, but Ryan actually has a whole toy line. He's got a lot of products out, so parents can go to any major retailer and find Ryan's World toys that their kids will love. Kindy Kids I was actually at the Toys R Us in New Jersey yesterday having a lot of fun. Their Kindy Kid display was empty, sold out. I'm hoping they have some more to replenish it. So it is popular. We actually, over the weekend, our team was out at retail and we couldn't find Kindy Kids on shelf. So
wow.
Yeah. So
not Kindy, not to be confused with Kinder, the chocolate egg, not to be used with Tinder.
I mean, just because I see the B-roll running, and obviously I'm not a child anymore, so at heart, guys. So was this based off a show,
Yeah, like
or
what's
did the
special
show
about
was
this?
the show created after the toy? And the only reason I ask that is because we talk a lot about like Netflix, or Disney Plus with the Baby Yoda. I'm wondering which is coming first. Is it the content? Or is it the toy?
Well, it's interesting what we have here because obviously this is based on content and this is the content based on the toy. So it's actually not a TV series, it's a web series, and it's all about introducing kids to the concept of going to kindergarten and how it's fun and not scary and that kind of thing, which is where the Kindy comes from.
Oh, that's
so
nice.
they're super cute, friendly.
Just mentioned this, but Baby Yoda.
Baby Yoda.
Super hyped up right now, but Disney is...
Child.
The child, excuse me.
That's the funniest thing is that the character is not actually called Baby Yoda.
It's not even Baby
Internet
Yoda.
collectively
It's not
doesn't
Baby
care.
Yoda.
We're going to call it Baby Yoda.
So tell us a little bit about how Disney may have missed the hype, I guess, by not releasing these toys earlier than...
Yeah, totally. So yes and no. So it was clearly something they wanted to keep under wraps. It would have been a huge spoiler if anybody found out about the child, Baby Yoda. But now that it's out, people are demanding product, and you can pre-order. There are
no
toys
one wants
coming.
to hand their kid like a slip of paper that's like, you're going to get this Mandalorian toy eventually.
When does it come out? When in 2020 is it? Do you know when it's going to be sold?
So it kind of is a rollout. So we'll start seeing products in February, March, April, and then the more like the Black Series from Hasbro, the real adult collector product, is really not until later in the year next year.
Too late.
I was going to say, is that too late? If you are a creator, you have a show on Disney Plus or Netflix or Apple TV Plus, and you've started to create these products to go with the show, is it too late to come out with that product 8 months, a year later? Has the buzz in the toy world are people fickle, or do they move on very quickly?
It depends. I think in this case, because this is very much in 20s and above adult kind of phenomenon, I think it has legs and it'll continue. And Mandalorian, it's not over, it's just getting started. So I think they won't have a problem, and they're smart to have all these pre-orders available because people now in the hyped up phase are going to place their pre-orders and they'll get their product next year. So at least they're kind of getting it that way.
You can say, here's your kindy kid, and in 4 months, you'll get your baby Yoda. All right, Jackie, thanks so much. Thanks for joining us.
Thank you.
Coming up here on Wi-Fi AM, 6 weeks into the NBA season, ratings are down big. Why? We'll tell you. Welcome back to Wi-Fi AM. Grubhub is out with its 2019 Year in Food report, and the report makes one thing clear: plant-based food is here to stay. It's not just a trend. For Grubhub, the most ordered food in 2019 was cauliflower pizza. Very hard to believe, and of course,
you said
the
that so
Impossible
flat.
Burger is the most popular meat alternative option. Bacon, egg, and cheese remains the top breakfast item. Go bacon. Heidi is our food reporter and maybe can shed some more light. Heidi.
Guys, look at that list.
Bone broth.
Bone broth was number 7.
What?
Jumping
surprised.
298%. Now, number 8, my personal favorite, the brown sugar milk bubble tea. Now, huge among the Asian cultures, and Dan had his first try of it this year, actually, so it makes sense, but gaining popularity, not just among the Asian cultures anymore. You're seeing so many other boba places pop up. But yeah, Impossible Burger is number 10. On the list of the top plant-based products, Impossible is number 1. Beyond Meat is not listed on that, and that is mostly, I think, because Impossible has a larger and longer presence among partnerships with restaurants. They just penetrated the grocery market. So not too surprising when I think about it. But yeah, plant-based meat is, the hype is definitely real, and it's still continuing. Now, whether or not that popularity will translate into next year as well, that'll be another question. But like you mentioned in breakfast, bacon, egg, and cheese is still the top, best, most popular. Everyone wants bacon. Everyone
and yet
wants carbs.
More people are ordering cauliflower pizza than ordering bacon and cheese.
I was going to say.
Because if that top 10 were the 10 that grew the most,
that's
that
my
would
guess.
make sense.
That is
but
my
if
guess.
Those are the top 10 overall.
In 2018, cauliflower products ranked number 7 and 10, but they grew 650%. So if you're taking out the growth numbers, right, it's from the most popular in terms of growth to the least popular in terms of growth. And Impossible Burgers jumped 200% as well.
So it's not that more people on Grubhub in 2019 ordered cauliflower pizza than ordered a burger and fries.
No, it's just that popularity has skyrocketed, jumping 650%.
Yeah.
And I mean, if we show that list again, it's not just like it's the portobello, mushroom, and panada. Like there's a lot of like products.
The black bean and sweet potato
spicy
taco.
Brussels sprouts. I mean, clearly people don't want the health foods. I feel like are really starting to skyrocket.
Chicken burger.
Who orders delivery of health food? Come on.
Well,
you order
spicy
delivery when
Brussels
you're going to
sprouts.
get crap junk food, and you want to eat poorly. And
Evidently not. Evidently not. Look, people are getting vegan pad thai.
Yeah. Well, this is popularity growth percentage increase.
Right.
Yes. Really interesting. Grubhub's Year in Food. Thanks, Heidi. Well, the NBA's national television ratings are down double digits compared to this point last year. We are 2 days away from the 6-week mark in this NBA season. And NBA on TNT is down 22%, NBA on ESPN down 19%, and NBA viewership on the RSNs, the local regional sports networks, is down 7%. Now, people are chalking this up to a variety of factors. Too many injuries. You've got a lot of stars who are injured, from Steph Curry to Kevin Durant to the rookie Zion Williamson. We haven't gotten him him playing yet, so that hurts. You also have too many stars playing on the West Coast. Suddenly all the star power is with the Lakers and the Clippers. That means later game start times. A lot of other fans are blaming a weak schedule to start the season, but Dallas Mavericks owner Mark Cuban, for one, has shared his opinion. He tweeted out, and he said, ratings are down because all of our national broadcasts are exclusively on cable, which is losing subs daily. Football benefits from being on broadcast TV. What he means, of course, is TNT, ESPN, NBA TV. That is cable, whereas ABC is broadcast. Everyone can get it. I'll give you guys my theory.
Okay.
I think it's a combination of A, there are more clips and bits and highlights available on social platforms. Pick your platform. Twitter, Snapchat, Instagram, TikTok than ever before. And also there's just more stuff to watch, whether it's sports or even Netflix, Amazon Prime, Apple TV, Hulu. There's so much stuff that if you're just a casual NBA fan, you have less of a motivation to sit down and watch a full game, unless you're a diehard fan.
So I am a really big NBA fan. I am not a football fan, so whenever you guys talk about NFL, I'm just like, what? But when it comes to NBA, the NBA is so much more exciting this year. So I have consumed more NBA this year. Now, well, am I watching it live? No. Am I watching it via clips and highlights? Yes.
Right.
But I will also say the fact that the NBA is allowing players like Kawhi Leonard to sit out specific games, that is also hurting
Load
it. Because
management.
if you think about it, I don't care who you are. If you're Shaquille O'Neal, if you are Michael Jordan, if you are Kobe Bryant, you played all of the games that you had to play. Exactly. They played all the games because that is what is expected of you. It is your job. And as a fan, you are paying money to see your favorite player play. So that is another reason why I feel like a lot of people are not tuning in because your favorite player is not playing. So what's the point?
I
get so heated about
this. I can feel
this.
the anger just steaming
Because I
off
love
of
it,
him.
but it's so true.
Yep.
They shouldn't be allowing him to do that.
Heidi never goes off, but
on sports, especially.
NBA, but on NBA, she's there.
And by the way, the NBA, I think a lot of its rise in popularity is thanks to there's such a culture there. The players love to talk on social media, but none of those things are in game. Like I think of myself as someone who really loves the NBA, and yet I almost never watch it until the postseason.
So I love the NFL more than I like the NBA, but I'm a cord cutter. And to Mark Cuban's tweet, I can watch NFL games off of Fire Stick and stuff like that.
Ways.
Right.
But I don't care enough about the NBA to actually go forth and create a cable package so I can watch it. I just don't care.
Lots of problems.
I do think that the trend will get a little better. I think it's just a tough start. It's hard to really freak out only 6 weeks into the season, but the numbers aren't great so far.
It's true.
Well, speaking of sports and streaming, the New York Yankees could become the first major league team to stream games on Amazon to fans without cable subscriptions. According to the New York Post today, the team plans to stream a limited number of games, likely on Amazon Prime Video, and that could start as soon as 2020. Of course, I've written about this. This was one expected outcome of Yes Network's sale to Sinclair, which was backed by Amazon as well as some private equity groups. As soon as that sale happened, you did wonder if what would happen next was that Yankees fans would be able to stream some games. Otherwise, why would Amazon get involved with the deal? And it's worth mentioning that all the RSNs, which were originally owned by Fox, then they were included in the Disney deal, but the DOJ told Disney you must immediately sell them off, all have sold to Sinclair. And people wonder, does this mean that in some form or another, all the little local channels will offer a few games streaming? I won't be surprised if the Yankees and Yes are the first since Amazon was involved in the deal.
I have to say, my question with all of this is, okay, so is this the shift that we're going to start seeing? Because the Yankees, huge franchise, right? Yankees, the New York Yankees.
Yeah.
If they're kind of, all right, we get it.
Boston Red Sox.
But if they kind of set the stage and they are sort of the guinea pigs in this movement, we're going to see a lot of other franchises follow, right? That's my guess.
Yes, although the cable networks don't like it.
Of course not.
And the only thing, the impetus here with the Yankees being the first, it isn't, oh, the Yankees are so innovative. It's that Amazon is involved now. Yes Network was the gem, the crown jewel of the RSN portfolio. So yes, Yankees are the guinea pig. Yes, it might be a success, but if Amazon has no involvement in the others, I'm not necessarily sure which player will come along. Now, of course, other leagues and Major League Baseball have streamed a couple games on Twitter before.
Yeah.
But not not any large number of games with no cable subscription.
If I was a Yankees fan, I would be very, very excited about this because it's so easy to get it.
Sure.
Yeah.
Sure. And there are people who are cord cutters who don't get the RSNs, who want to watch the games.
Cable's out.
So let's see it. We'll be back here at Wi-Fi AM after a quick break. Welcome back to Wi-Fi AM. Portland, Oregon may be adding a twist to facial recognition bans. The city is now considering banning facial recognition software from city agencies and additionally expanding the ban to include private retailers and airlines. Portland would join San Francisco and Oakland in banning the software. A lot of cities considering this, but this is the first we've heard of also saying we won't let retailers use it.
Right, because in San Francisco and Oakland, it's the
city agencies.
Just the city, right.
You know, street corner.
I mean, I guess, what does this mean for the long-term game of facial recognition? Because we know so many tech companies want in on this.
Well, and Amazon is already actually
dealing with the Nest
taken
stuff,
hits
or not the
for
Nest.
partnering up with a lot of local law enforcement, giving them facial recognition tech.
Right. What is that? Is it Nest? Am I missing what company? Or not? The Amazon camera thing.
That was called Recognition with a K, which I think is so funny that they spelled it that way because it sort of makes it look even more evil. But
look, I think this is just.
I don't know if Nest is in it.
It's not Nest. I'm missing the name right now.
Yeah, I can't remember either. I just think this was inevitable. We started off the show talking about data privacy, right? We have this legislation moving through Congress right now. I think you're getting to a point where people do not want their personal data, including what their face looks like, for companies to,
I'm
to
happy
have that.
to
And
argue the
tech-
opposite. I don't think most people care. I think maybe they say they care, but in the end, they don't care, especially if it'll make your life more convenient.
I remembered. It's Amazon Ring. It's the doorbell that has a camera
yeah,
on it,
right.
and there was
Amazon
a lot of
acquired.
talk about
Shack-backed.
whether or not anyone who's picked up on the camera, if law enforcement would be able to use that footage, and that was a huge, huge issue, right?
Okay, to your point, you're right. I think that people are willing to give up their data, you know, if it makes their lives easier, but they are going to say they don't, and I think it pushes lawmakers to do something.
Right. Well, we will see. It is very controversial. I think when people complain about privacy, it sounds nice, but then at the end of the day, you say, "Oh, but you'll be able to check out of this store faster." They go, "Okay, whatever. No privacy then. Do whatever you want with my face."
Are we really being listened to by Alexa? Are
Yes.
we really being
Yes.
listened? No,
Yes.
I mean, how many times are they going to be like, I'm going to listen to Dan Roberts today and
no one
store
wants to
all of
listen
that?
to Dan Roberts.
Exactly. So my
Yes.
point is they're picking and choosing in different scenarios. They're not constantly tuned in to what we're saying, right?
Right.
Bottom line.
But I still don't want one in my home.
True. Same.
All right, that is Wi-Fi AM for today. Thanks, Kristen and Heidi, and thank you for watching. We'll see you right back here tomorrow. But don't miss On the Move. That is our next live show, and it starts in just 2 minutes. Stay right here for Julie Hyman and Adam Shapiro.
It's 11 a.m. here in New York City. We're 90 minutes into the trading day, and stocks are rebounding after the sell-off earlier this week. The buying comes amid renewed trade optimism and hope that stopped a three-day slide for stocks. It's all just ahead. Talking trash, world leaders, including Canadian Prime Minister Justin Trudeau, well, they were caught on a hot mic appearing to bash President Trump. And the founders fly on. What's next for Alphabet as Larry Page and Sergey Brin hand the reins over to Sundar Pichai? Welcome to On the Move. I'm Adam Shapiro.
And I'm Julie Hyman. Thanks for joining us. Let's get to our top story, and it is progress on trade. Maybe, possibly, at least that's what we're hearing. The U.S. and China are moving closer to a phase one deal despite tensions over Hong Kong. That's according to a Bloomberg report. Negotiators are expecting a phase one deal with China to be completed before tariffs are set to rise on December 15th. President Trump, changing his rhetoric from yesterday, now says things are going well.
We're talking to China, as you know. Those discussions are going very well, and we'll see what happens. But we're talking to China. We're talking to others.
We're joined by this hour's panel to discuss Invesco Chief Strategist Christina Hooper and Yahoo Finance's Scott Gamm. Also joining us from Washington is American Apparel and Footwear Association CEO and President Rick Helfenbein. Rick, we have been talking to you consistently as this trade war has been going on, and you've been talking about the hurt that this has put on your industry. How hopeful are you that those tariffs will not go into effect on December 15th?
Given that we have a hot mic here equally as well, I will tell you it's probably not a good idea to speak to the tariff man when he's jet lagged. And we saw what that did to the markets yesterday. Quite frankly, talks are still going on. We have essentially 14 days until the December 15th deadline. And we remain hopeful, and all the shoppers in America remain hopeful, because we just finished a banner 5-day, 190 million people shopping over the Black Friday weekend. So right now things are good, and as you saw yesterday with the jet lag question, things can get ugly in a heartbeat.
Well, and Rick, it's Adam. It's good to see you. In an email to me, you said that the potential for, quote, retail ugly is alive. Let's assume the manufacturers who you represent, some of them, a lot of them, as you've pointed out, made the calculation that this will get resolved and kept their, production facilities in China, while others went to Vietnam and they've doubled up. Those who stayed in China, they must be sweating big bullets right now.
They're obviously very concerned. Perhaps they would have reduced their exposure. Perhaps they would have vacated the China space. The only problem is they don't really have a good place to go. There's no good second choice. Second choice would obviously be Vietnam. Vietnam is full. They're running double shifts there. There's no capacity. So people figured, well, we'll ride it out. But if we get hit with these tariffs, it will be retail ugly. It will be beyond ugly, because when we first learned of the current tariffs, which hit us on September 1, we all rushed overseas and said, help us get through the holiday season, and they did. So we're getting through holiday, but now we're actually planning for fall of next year. If we suddenly get whacked with the 15% or higher increase, we're in trouble. We're really in trouble. The American consumer is in trouble. And that's why you saw the shiver run down the spine of the stock market yesterday. One bad comment could make this unravel real quick.
Rick, this is Christina. What is your best guess as to when a phase one trade deal could be arrived at, if it is arrived at?
I think what they're negotiating on right now is how much ag the Chinese will purchase and how much rollback will be tariffs. In other words, will the December 15th tariffs go away? And what about the September 1 tariffs? September 1 tariffs are particularly important to our industry. 91% of all apparel and 53% of all footwear was hit on September 1 at 15%. So we need that to go away. We need it to go away promptly. And I think that's what the hangup is. There are hints out there. Secretary Ross said something to the effect of, maybe we'll defer the December 15th, and, maybe they will. Maybe they can get it done on time. Maybe they won't. At the very least, they have to defer the December 15th to give us a little more time to get this resolved. If not, problem.
Rick, just quickly, I mean, I know the market likes to look at the trade situation on a day-by-day basis, but shouldn't we be looking at this over a longer-term perspective? I mean, the trade issue is something that the U.S. hasn't dealt with, at least with respect to China, for decades now. So this is quite a process to really undo some of the damage that's been done over the past couple of decades.
Well, you know, there's all sorts of damage. There's big picture and small picture. Big picture is, you know, is what about the transfer of technology? What about intellectual property? What about purchases? What about market access, financial access? All these things are long-term important. Short-term, we need to look at getting a phase 1 resolved and getting all the chips in place for a phase 2 and even a phase 3 discussion. You cannot solve all these problems with one deal, but you can perhaps put the concerns to the side, and then perhaps we can get going on the bigger picture items. Right now, it is day by day for us. We are 14 days away from December 15th. That's real important to us.
Rick, great to see you. Rick Helfenbein is CEO of the American Apparel and Footwear Association. Thank you.
So shakeup at Expedia, the company announced that CEO Mark Okerstrom and CFO Alan Pickrell are stepping down. Ines Ferre is on the floor of the New York Stock Exchange with more about that and what's driving markets.
Adam, and investors seem to be liking that change. You can see Expedia seeing a pop today. The chairman of the board, Barry Diller, said that ultimately management and the board didn't agree on strategy, that the company had earlier this year embarked on a reorganization and that it lost focus. Also, earlier last month, the company announced its earnings, disappointing earnings, and in one day the stock was down more than 25% after comments on their conference call about some challenges that they were having with SEO, that's search engine optimization on Google. And Piper Jaffray had downgraded the stock and has put out a note this morning as well saying that those problems that they faced in the second half of 2019 are likely to stick around for a while, namely their vacation rentals by owner and those headwinds with SEO, meaning that the company has to spend more money really on marketing in order to get more customers. We also have some news on Facebook's Instagram requiring Instagram users to now give their birth dates when they sign on for an account for Instagram starting today. And this basically what this does is this expanding its audience for ads and alcohols, of course, to the age appropriate, and also it's a safety measure for younger users. And then we're also watching Salesforce this morning. This is after its adjusted earnings came in as a beat. Revenue came in above estimates, but their profit forecast for the current quarter came in below what the street was expecting. That's why you may be seeing a little bit of pressure on the stock. Adam, Julie.
Thanks, Inez. Well, it's the end of an era. Alphabet's co-founders Larry Page and Sergey Brin are stepping down from executive roles with the company. Sundar Pichai, who is currently CEO of Google, will become the chief executive of both Google and Alphabet. The founders will remain on the company's board as the two largest individual shareholders with majority voting power. Joining us now is D.A. Davidson senior analyst Tom Forte to talk us through this. Tom, what strikes me as part of this is, I don't know if it's a fallacy or what you would call it, that Google and Alphabet are really not just, I mean, why don't they just go back to calling the whole thing Google as part of it? Because effectively the non-Google parts of Alphabet, are they even that significant, and are they ever going to be?
Well, I think the distinction between Alphabet and Google is important. When you think about Google as what is today the most important operating businesses, you think about their efforts in search, you think about YouTube. And then you think about the umbrella of Alphabet, and that gives you some of their longer-term initiatives. Think about drone delivery, things of that nature. So I do think it's an important distinction. It's, you know, sometimes it's funny that you have Alphabet versus Google, but I do think this is an important handoff where you have Larry and Sergey handing over the reins of the whole company to Sundar. And I think that the important thing here also is that Google faces a lot of challenges when you think of regulatory challenges and things of that nature.
So let me ask you, as an investor, what do you like about Mr. Pichai, now in charge of all of it? Because there's so many different parts of this. We were asking, is YouTube under Google? You talk about the different things that they do. It's not just advertising, but ventures that you wouldn't think about, self-driving cars. What does he have that makes him the right person for the whole big picture?
Sure. So he's a long-standing executive with the company, and I think that's important. And then I think that to their credit, if you look at some of these long-term bets that they've made, they actually beat Amazon on the first commercial drone delivery, which was Google, not Amazon, with Walgreens. And I think you're starting to see some traction on the self-driving car front. So, but the most important thing here is that you have a long-standing Google executive who's taking the reins of now the combined company at a very important time, because I do think that they face some very significant regulatory challenges, not just regulatory challenges, but also some competitive pressure from Amazon, which is turning the digital duopoly and advertising to a triopoly, along with Facebook. So I think this is an important changeover for the company.
Tom, I just find this whole succession plan fascinating because for a long time, Wall Street has wondered who is going to take over these big FANG companies. And I think there are still questions about the succession plan at Amazon, for example. So I guess what can we learn from this situation and apply that to some of these other big tech companies?
Yep. So if you look at the gold standard of transition, it's clearly Tim Cook at Apple. So I think what you can learn from Tim Cook is if you take an excellent person in operations and give them the role of CEO, and they surround themselves with talented other executives, including help necessarily with the vision and things of that nature, that you can still have a very successful stock. So I think it'll be very interesting to see when the time comes for Jeff Bezos to step aside and hand off the baton to the next CEO of Amazon. It's something I've thought about a lot. If you look at their immediate senior management, there's a number of executives who've been there more than 20 years. So I think that it may be a smoother transition than some fear. But yeah, it's interesting to watch the transition for the FANG stock.
This is more a political question, but how is he going to do when he gets hauled up to Capitol Hill and has to be the public face of the company, now responding to men and women, on the different committees who really don't understand what Alphabet does?
The answer is I think he's going to do incredibly well. So his manner of speaking, he's very poised, very calm. I think he'll do really well as the day comes. And I think it's important because if you look at governments across the globe are struggling with the influence of the four big horsemen of technology, Amazon, Apple, Facebook, and Google. And I think this is a very important issue, especially heading into 2020. And I think he is actually the right man for the job in that regard.
Tom, great to see you. Tom Forte of D.A. Davidson. Thanks.
Thank you.
Drama at NATO. Canada's Prime Minister Justin Trudeau was caught on camera appearing to make fun of President Trump. Well, Trump responded to the comments from Trudeau this morning. Let's take a look first at the exchange.
He's too fast.
Do you think that Germany's too naive?
And honestly, with Trudeau, he's a nice guy. I find him to be a very nice guy.
Okay, he's two-faced, but he's a nice guy. Speaking of nice guys, Rick Newman is here, Yahoo Finance.
You're going to call me two-faced next?
No, yesterday it was the comment about we'll take advantage. What was it? We'll take advantage of our
only
companies.
we take advantage of U.S. companies.
By the way, he also then canceled his press conference after Trudeau commenting on that. Apparently, they bust a bunch of reporters out to attend that press conference and then abruptly canceled it.
And we should point out, Trudeau and the others, Macron was in that group as well as Boris Johnson, who's a friend of the president's, by the way. Obviously, he's talking about Trump, never said Trump, but he was talking about, why are you late? There was a 40-minute impromptu press conference, and then there were the other comments. What do you make of this?
I mean, it's just this kind of shambolic show we've gotten used to. I think that something important is happening, though, beyond sort of the, the racy headlines. I think world leaders are now pushing back more against Trump than they did during his first year or two, for example. So Emmanuel Macron sitting next to Trump saying, I stand by what I said. NATO is brain dead. Trump saying, no, it was brain dead before I got here. Now it's super strong. And Macron pushing back. Boris Johnson saying, don't get involved in our internal politics here in the UK with an election coming up. I feel like these world leaders have sort of had some time to take Trump's measure, and they're sort of figuring out how to push back against him, which frankly I think is a welcome development.
And speaking about pushing back against him, the impeachment inquiry continues. Of course, we've got the House Intelligence Committee already coming out with its report saying, indeed, the president acted improperly. I would say the common interesting thread between these is there's nothing in here that doesn't solidify Trump's base. In other words, he is seen as the sort of embattled leader who everyone's coming at him, the establishment is coming at him, and he's fighting back, whether it's other world leaders or the Democrats on the Hill.
Well, that's certainly Trump's narrative. I did read through the report last night. I think everybody should read this, frankly.
300 pages.
Well, you know what? It's got headlines, though, and you can kind of go through it. You don't have to literally read every word to understand it. By the way, I think the report is very thorough. It's got, I think, 1,500 footnotes. I mean, it's actually kind of remarkable. They put out this detailed of a report in just a couple of weeks. But I think we're now moving from the flashy part of this process, where we had the witnesses going up to Capitol Hill and telling us all the inside dirt about Rudy Giuliani cooking up a drug deal and all the other stuff we learned during the last couple of weeks. Now it's going to be more procedural and a little less interesting, probably. I think the House is going to vote to impeach. I actually think this does matter for the election. So Trump's base isn't 40 or 50% of voters. That Trump base is maybe 20 to 25% of voters. I think he gets another 15% or so. I mean, his approval rating is now around 40%. I think there's another 15 that say, don't particularly like the guy, but the economy's doing great. The things I care about are doing fine under Trump. But 40% is not enough to win the presidential election. He won with, I think, 46%. So who are those other people? Independents, who some of them do care about this. They're very turned off. And if they get somebody they consider an appealing opponent of Trump in the Democratic nominee, whoever that is, we don't know that yet, Trump could lose those people. So I think impeachment could for sure work against Trump in the election. And let's also remember, this is going to be done within a couple of months. So I think 6 months will pass before the election happens. So the impeachment process is not going to be ongoing during the election or while everybody's campaigning. So we're going to have some distance between impeachment and the election, and I still think there's a lot that could happen that we're not thinking about.
All right, well, we'll be talking about it throughout that whole process.
It's
Thanks,
such
Rick.
an interesting time.
It is. All right, coming up, Postmates announces layoffs, why the company is struggling to compete in the crowded food delivery sector. Plus, bad news for real estate, why a new report predicts the housing market is poised for a slowdown in 2020.
Welcome back to On the Move. I'm Jared Blickery. We got stocks up today instead of down, so that's good news for the start. Dow Jones is up 183 points, about 0.2%. S&P 500 up about the same amount. NASDAQ up just a little bit less, and the Russell 2000 up 0.75%. Here's the intraday price action. We gapped up on news. Favorable trade news hasn't been walked back yet, so stay tuned for that potentially. We're right back up to some resistance, and yesterday we fell back down to support. So let's take a look at a candlestick chart, because something pretty interesting that we were highlighting yesterday came to fruition. We were looking at the CBOE Volatility Index, so let's take a look at that first. And we are looking at, and let's take a 6-month view here. We are looking at a trend channel that perfectly captured yesterday's high. We said look out for the 18 level, got to 1799 around 10:51 a.m., and that was the bottom in the S&P 500. So it looks like we have a momentum low. Will it be be a price low? We have to wait and see. So here's the S&P 500, and here's the move down yesterday into support. We still have support below at the breakout area around 3,023 to 3,032, but so far so good. And if we can close above 3,122, probably in the clear here, and we can make a run at the highs again. Otherwise, we could roll over and watch out for another potential spike in the VIX. So here is the 10-year T-note yield. It is up today. Yesterday was a huge drop, as we know, tying for the biggest in 1.5 years. But it's up today, and so we're seeing some of the sectors that are outperforming, the cyclicals, value, and here we have energy and industrials, financials, all outperforming, and to the downside, defensives. On that note, we will be back in 1 minute.
We jump back into the stream with new numbers out today showing some possible cracks in the economy. The ISM Non-Manufacturing Activity Index fell to 53.9, showing activity slowed more than expected in the service center, and private payrolls tumbled in November. Payrolls grew by just 67,000. That was well below expectations. Christina, your team at Invesco looks ahead to the new year, and you're out with a 2020 forecast. This is just 1 month of data, but what is it telling you as we look for next year?
Well, it's confirming some of our concerns, right? Our big fear was that the trade situation would have spillover effects. That, for example, the drop in CapEx ultimately would lead companies, the companies concerned about trade wouldn't just be depressing CapEx spending, but in fact it would spill over into decisions around hiring. Concerns that what is isolated to the manufacturing sector of the economy would spill over into non-manufacturing. So we're seeing both those things, or at least some hints of both those things with this morning's data. So that is something we factored in. Our expectation was that we would see the economy decelerate modestly, really hit an inflection point early in 2020.
You're still positive equities. I mean, we had Jeff Sott on earlier this week, and he was saying, look, this secular bull market still has room to go forward.
It is, and for the simple reason of the Fed. The Fed is in an unusual position right now in that it has been very accommodative, cut rates 3 times in an environment that otherwise would suggest it should be hiking rates. And then, of course, ending balance sheet normalization and maintaining a dovish stance, saying that the bar is high to raise rates, suggests an environment that's very supportive of equities, even if we have a lackluster economic experience.
What's interesting, too, is we've had a number of guests come on and say monetary policy has sort of reached or is reaching the end of its usefulness. Fiscal policy is going to step in. And you say, don't hold your breath.
That's correct. Well, certainly that would be ideal, is if we could have fiscal policy step in. But we've actually heard that mantra for a long time from central bankers, begging governments to step in, and they've been unwilling. And the reality is that many governments have levered up so much that it would be difficult to lever up even more, despite low rates, in order to provide fiscal stimulus. So we're really between a rock and a hard place. Now, there are some options. For example, we could see something extraordinary happen, like central banks might decide to follow a route like helicopter money, which is essentially monetary stimulus that simulates fiscal stimulus. Now, we're a long way from that, I think, but there's certainly some options. The reality, though, is we're between a rock and a hard place.
Although I think, Christina, to your point, with the Fed back in play, at least from the market's point of view, perhaps that is because of the trade uncertainty. So now you have a situation where the trade overhang has really shocked the Fed so much so that they're cutting interest rates, or at least not raising them anymore. So maybe that's a good thing for the market. The other thing I just wanted to point out at the top of the segment, the economic data that was released, especially with ADP, the 50,000 jobs that came back online because of the ending of the GM strike was not included in the ADP report. It should be included in Friday's jobs report. So there's always a footnote with a lot of these economic data points.
Yeah, but it is important to point out that the economy could keep on, maybe slowing growth at the same time that the market keeps going up.
Exactly.
Yeah. All right, well, let's turn to this. Tough times for one food delivery startup, Postmates. It's laid off dozens of workers in San Francisco, Los Angeles, Nashville, and other cities. That's according to a report from CNBC. It has also reportedly closed its Mexico City office. Postmates had planned an IPO in the second half of this year, but the company is now reportedly looking for a buyer. So obviously we have seen a lot of unicorns experience difficulties this year. This is just the latest one. So Scott, does this mean, I don't know, that Postmates is going to get bought? Or I'm also curious what it tells us about the bigger landscape.
Well, I think within this particular space, there seems to be a lot of players, almost too many players, right? I mean, you had legacy players like Seamless, and then all of a sudden all these new companies come up, and you kind of wonder, well, what was the need for them? And perhaps it's just a zero-sum game where a new player just takes the market share from an existing player. You may not necessarily be growing the pie. I think on the other side, and this applies to probably most of the unicorns out there, or at least companies looking to go public, it's no longer okay just to be there. You have to be profitable. You have to keep your costs under control. You can't just be like this, okay, well, we got a lot of funding, we're just going to keep hiring and spending like crazy.
Yeah. You just raised a real issue, though, and not necessarily Postmates, but they just had a $225 million funding round. That was to take them to the IPO. These so-called professionals and experts in venture capital, what did they miss? Because yes, the appetite for IPO may have changed, but the company's fundamentals seem to be missing if they're now in this layoff streak. These are the people we trust to get it right, and it doesn't seem like they do.
Well, sometimes you can have that mismatch. And what we're really seeing is the public market scrutinizing companies in a way that perhaps other parts of capital markets aren't necessarily scrutinizing them. And that's a good thing, though, for investors in the stock market, because it suggests that there's a high bar. This isn't 1999.
Well, and they may not have missed anything. I mean,
they might have pushed them to do this move. Possibly.
I mean, if you can sell an apple for $15 versus $5, and someone's willing to pay for it.
But if the core of the apple is rotten.
But if someone's willing to pay for it, I mean, they're gonna try to get away with it. I don't know, maybe.
I don't know if we know the core of the apple is rotten.
I'm not saying it is. Well, maybe it was.
Maybe not the best analogy.
Coming up, the hottest toys of 2019, and Poopsie's not even on there. Why Disney's
Poopsie
Baby Yoda
is on there.
Is Poopsie on it? I missed this.
Yes, Poopsie.
Oh, you missed it last year.
We'll
talk.
explain.
It's something they say up in the Bronx. Also, we're going to talk about Baby Yoda. We got it right. Plus, before we go to break, let's take a look at some of the top trending tickers on Yahoo Finance right now. Look at that. Salesforce is trending down.
up on 11:30 a.m. here in New York City. We're about 2 hours into the trading day. Stocks are rebounding today on some bouncing back and forth trade headlines between yesterday and today. Let's look at oil prices as well. We saw oil rebound in yesterday's session. It's continuing today, up better than 3%. Moving forward, UK Prime Minister Boris Johnson says he'll push forward with the digital tax despite anger from President Trump on the issue. Inventory concerns, why 2020 may not be the right year for you to find your next home. And missed opportunity, toy companies make big plans to bring Baby Yoda to life, but it's after the holiday season. Welcome back to On the Move. I'm Julie Hyman.
And I'm Adam Shapiro. Good to have you here. Mortgage applications dropped last week. Applications fell 9.6%. A cooling in the refinancing market was largely to blame. It's the latest sign of the challenges the U.S. housing market could face going into 2020. George Ratu, senior economist at Realtor.com, joins us with more about the forecast for next year. And one of the big headlines from the forecast is that prices will decline in more than 25% of the 100 largest metro areas, among them Chicago, Dallas, Las Vegas, and Miami. I just got to tell you, my folks are in Miami, and I've been watching some condo prices. Condos are sitting on the market in places like Miami. There's one that's been on the market in a very good building for over a year, and that's not unique.
You're absolutely right. In fact, we're seeing that across many markets where affordability is becoming sort of the name of the game. We're having buyers, particularly young buyers, who are really running into this wall. And in fact, I'll bring up the fact that we are facing the largest generational cohort in U.S. history, right? 85 million or so millennials who have come to the market. And based on marketing buzz, we've been told that they're never going to own a home, they're never going to own a car, they're never really going to own anything. Well, it turns out when they were 25, yeah, they were not going to go into sort of that long-term commitment. But now the oldest of them are turning 39 next year. They're approaching 40, middle age. They're having kids. And so their biggest challenge is finding the right home in the right price range. And Miami is right up there with San Francisco and New York, some of the other high-priced markets.
So the fact that we're going to see prices flatten or decline maybe would be good news for some of these buyers, no?
Absolutely. In fact, we in our research, what we're finding that next year is going to be a little more nuanced. For some buyers, it can be a good year. We expect mortgage rates to remain fairly steady. We look at an average of 3.85 for the year, not much higher than we are today. So for some buyers in certain markets, they're going to see opportunities. For us, the really hot markets we expect to see in Midwest, in the Southeast, we're actually seeing this migration away from coastal cities towards mid-sized cities in more affordable areas.
So I guess the price isn't the problem, it's actually finding the house, perhaps, that's the problem.
Absolutely. We've had 5 months this year, so the last 5 months of declines in inventory, and what's more interesting, under 200,000, we're down by double digits every single month of the last 5 months.
So help us understand that. We're going to have prices coming down, and yet we're still going to have an inventory problem. That's only going to get tighter. And with this migration out of, Florida, my people call it the promised land. Mm-hmm. That's where you're supposed to go when you retire.
That's right.
What does this mean? Because we also have a huge generational transition of wealth coming. Mm-hmm. And these millennials you talk about are going to have funds, perhaps, to put down payments down to get these properties. We're not seeing that yet.
So we're seeing a little bit of that, whereas a lot of millennials, for one, are actually having to take on large mortgages. In fact, a lot of them have skipped the starter home and are moving into what traditionally was a trade-up home. And they're getting help from their families, but that's not by and large.
Despite the fact that the median age is also, this is from Deutsche Bank, Torsten Slok was actually pointing out, the median purchasing age is 47. Roughly 10, 15 years ago, it was in the 30s.
Right. So this has been the real trend with millennials, not beyond sort of the, they're not going to own anything, is they've been delayed in major life decisions. They've started their careers later. They're also the most educated. They spend more time in school. They started families later. They're having kids later. So obviously all these milestones, including home purchases, have just come later.
Christina, what implications does this have for an investor and for the economy? Because there would seem to be, on the one hand, that seems to be sort of negative for housing. But on the other hand, does that mean then that they have if they're not using their money to buy a house, maybe they can use it to buy other stuff?
Well, certainly that's the hope, but we have to keep in mind that one reason that we're seeing a delay in household formation is because of high levels of student loans. That's why it's become such a big campaign issue, really. And so while certainly millennials are delaying major home purchases, and so it does free up some spending, I would argue that they don't have as much as a previous generation would, because many of them are servicing student loan debt.
And I want to bring this bigger than just millennials, though. Is there any way to attribute, yes or no, did the tax reform that removed the state and local tax deduction issues and lowered the cap on how much you can deduct for mortgage interest, is that had a real effect on the housing market, or has that really been negligible since not many people out of the total population actually itemize?
So in high-priced markets, absolutely. You look at New York, you look at New Jersey, Connecticut, states with high property taxes, where home prices are also higher, so you had a lot more of homeowners that were itemizing. You are seeing that effect in when you look at especially the luxury end of the market. It's sort of a bellwether for incoming trends. We've seen a decline in prices already this year. So I think that certainly has had an impact, probably not as broad as some people had feared, but we're seeing that show up in the markets.
All right. George Ratou, senior economist at Realtor.com. Good to have you here. We look forward to the update when we get into 2020.
Certainly.
Well, UK Prime Minister Boris Johnson says he will move forward with the digital sales tax that would affect big U.S. tech companies. That's despite the Trump administration's threat to punish France for putting a similar tax in place. Yahoo Finance's Edmund Heafy joins us now from London. I imagine all this drama unfolding at that NATO meeting.
Yes, Julie, this is an unusual move from Boris Johnson to make such a pledge while President Trump is still in the country for the summit. But this proposal was first made by former Chancellor Philip Hammond last year. And on the campaign trail in the past 24 hours, Johnson forged ahead with it, saying that he would introduce this tax next year, as outlined in his Conservative Party's manifesto. Of course, as you said, this risks escalation in the US-Europe trade war at the moment. Trump yesterday railed against France for introducing his similar tax and pledging to introduce 100% tariffs on $2.4 billion worth of French goods. The statement was made on the campaign trail yesterday, and of course is a risky move, but I think what we're seeing here is a momentum in Europe towards pushing for this type of tax. The UK tax will be slightly different to the French one in that it will target 2% rather than 3% of revenues of digital tech companies. The Conservative Party manifesto says that the UK will hope to raise about £500 million initially from this proposal, and it will come into force in April 2020 for the first time. But that's obviously all contingent on the Conservative Party winning next week's general election, which looks all but certain at this point in time.
And we're keeping an eye on it, but thank you very much. Before we go to break, I want you to take a look at what's happening with oil. Futures actually popped almost 4% at one point for two reasons. One, you had U.S. inventories decreasing by 4.9 million barrels for the week that ended November 29th, and the expectation was that the decrease would only be 1.4 million barrels. So there was a much bigger drawdown than had been anticipated. We're also on the eve of OPEC once again attempting to recalculate its production numbers because of the oil market. So oil has jumped on U.S. inventories falling greater than expected. Coming up, Christmas tree, why a nationwide tree shortage could spoil your holiday cheer. Plus, things are smelling fishy at Trader Joe's, why that store's ready-to-eat sushi is facing a recall.
Let's take a look at a couple of stocks on the move in midday trading that are making outsized moves. Let's start with GoPro. The company said it had record sales over the holiday weekend. Nick Woodman, the CEO, in characteristic fashion said, "We crushed it." Black Friday and Cyber Monday, the company sold a lot of its Hero 8 Black cameras, which are new. Camera units overall were up 120% year over year. Actually, the stock has just turned negative now, so it came down sharply from those highs in the wake of those sales. Also, we're looking at a company called Instructure, which is a development applications company agreeing to be bought by private equity firm Thoma Bravo for $2 billion, but the shares are down. The problem, it's a so-called take under. They're buying the company at a discount to its current price, $47.60 a share. Instructure had announced back on November 14th that it was reviewing strategic alternatives, and the stock has been up since then, now pulling back. We'll be right back. Frozen 2 toys, LOL surprise dolls, Nerf products, Nintendo Switches, they're among the top toys this holiday season, or they're expected to be. But with the recent viral sensation of Baby Yoda, Disney and Mattel may have missed out on an opportunity to score even bigger this holiday. Linda Bolton-Weiser is D.A. Davidson Managing Director and Senior Research Analyst. She joins us now. And Linda, we'll get to the top toys for the holiday season, but I do want to ask you about Baby Yoda because Funko's coming out with a version of it early next year. This is, by the way, from The Mandalorian, which is the new series on Disney Plus. I believe Mattel is coming out with a plush toy next year also. Why did they wait, and is this a missed opportunity?
Well, yeah, I mean, clearly Frozen 2 and Star Wars are going to be some of the hottest toys, and they're very prominent in the store checks that we've done. You see big displays out there on Black Friday and on Thanksgiving. So, but oftentimes with the late year entertainment properties, you will have carryover demand into the next year. So, you know, it could be that they're targeting to hit that carryover demand into the next year.
I want to get into the stocks for Mattel and for Hasbro, and both are trading higher today. Hasbro got really hit by the tariffs because they couldn't get all the toys to the United States in time. And with Mattel, I guess the CEO is saying they're going to make 7 movies, but it's not about selling toys. If I'm a shareholder, that's not a message I want to hear. I don't think of them as a content creator. What would you say to these people?
Yeah, with Hasbro, you know, they should have a better fourth quarter, even though they are talking about not completely fixing some of these supply chain issues. Really, the tariff situation caught them by surprise because it caused some retailer uncertainties with regard to ordering patterns. So even though the tariffs haven't hit, it had impacts on the companies. But Hasbro should have a better fourth quarter. Comparisons are very easy relative to last year because during the liquidation, consumers stocked up on toys earlier last year. So the comparison during Christmas, it's actually an easy comparison. So we're actually optimistic that we can have growth in the fourth quarter for Hasbro and the other companies. With regard to Mattel, Ynon Kreiz, the CEO, is a big media entertainment guy, and he's setting the stage for them to really follow the blueprint that has been followed by Hasbro, and that's been successful for Hasbro. So I'm optimistic for Mattel. It will be a while before these movies hit. And I think what Ynon is talking about when he talks about this is that you make good content. That's your number one priority. And perhaps he's been misunderstood when he says that, but of course they're going to sell toys. Of course they will sell toys.
And every business is trying to get into everyone else's business, so why can't the toy companies become content producers as well?
Yes, exactly. And toy companies have their own libraries or vaults of content.
Transformers.
Please, no Poopsie,
Exactly.
Mon. I mean, seriously, the Poopsie movie, because that's one of the top toys, right?
Yeah, Poopsie Surprise from MGA is one of the top toys this season.
Has that been, so speaking of surprises, has it been surprising to you how enduring the appeal of, I mean, for those not familiar with this, the Poopsie Surprise is a unicorn that poops slime. We talked about it before because we had the MGA, had Isaac
We had
Larian
Poopsie on last year.
And we had Poopsie on
Incredibly
last year.
difficult to operate. Lots of tears for adults and kids, I'm afraid.
But what is with the appeal of this thing?
Well, slime is a big trend, and the idea of pooping, sorry to say it on the air, is a big trend as well. So if you combine the two,
Look, everybody poops.
Right,
3-year-olds
exactly.
love it.
And one thing to keep in mind too about the toy industry and about toy consumers, which are kids, is that they grow up and they turn over every 5, 7 to 10 years. So that's why they can bring back and they can have popularity of My Little Pony today when that was something that was years ago. So that's something to remember about the toy industry.
Talk to me about channels. Where is this stuff getting sold, right? Because there was this conception that Amazon had changed the game entirely, but you do still have a lot of parents going to stores, various stores, to buy this stuff too.
Yes, correct. So with everything online, the toy industry is one of the ones that has the highest percentage of sales online, and that's nearly 30% in the United States. But that still means that 70% of toys are purchased in brick and mortar stores. So you have to remember, and especially with the 6 fewer shopping days this year, it may mean that people are going to be more going to the brick and mortar. They forgot and they're rushing on Christmas Eve.
Realize we're all adults. You got a favorite? Do you have a favorite toy?
I guess because it takes me back to my little children when they were small. I'm a fan of the Paw Patrol, and there's a lot of content there backing that up. So the Paw Patrol Lookout Tower is one of the hot ones, and we've seen many out of stocks of that in our checks.
Paw Patrol, be there on. Linda Bolton Weiser, Dave Davidson, thank you. My kids have outgrown that stuff too. Also, we should mention MGA Entertainment CEO Isaac Larian, who's behind that Poopsie Slime surprise. He's going to join us tomorrow at 11:40 a.m. Eastern Standard Time, so we can talk to him about the enduring appeal of Poopsie. Thanks, Linda.
Thank you, Linda. Here is something that may put a hole in your wallet this holiday: a Christmas tree. In recent years, the cost of a tree jumped nearly 50%, bringing the average price to $76.35 for a live tree. Yahoo Finance's Ethan Wolfman joins us for more. And I thought they cut the top of the tree off. That's what you're really buying. So it's not as if there's ripping it out of the ground and there's a shortage, or what am I getting wrong here?
That would take far too long because you would have to wait all of those years for that tree to grow.
Right, so they chop the top off and that's what they're selling us.
Well, they start from the bottom and then they get here, as the song goes. But essentially what it takes is about a foot a year. And so all of the trees planted during the recession actually are kind of coming to the market now, which has kind of created this squeeze over the past few years. Prices have gone up significantly. Only a couple years ago, they were about half of what they are now on average, unless you live in certain markets where, my home market of Vermont, they're still very cheap. The cheapest, I think, in the entire country at around $40 each. But it really kind of depends where you are. There's a lot of shortages, in specific little pockets that kind of make it actually especially difficult to get them. But obviously you can't just order a tree from somewhere else and ship it because they're very, very localized markets. But essentially this is kind of causing a little bit of changes in, whether maybe people will go with an artificial tree or not. Although right now the trends seem to be squarely within real trees. That's sort of interesting. The market is always very nervous, sort of the Christmas Tree Sellers Association, that if you have a lot of people buying artificial trees one year, they might reuse that tree the next year. And that might have future effects on the demand. But demand is actually very high right now. There's a lot of kind of whimsy and outdoor trends that are being pointed to by kind of the trade group as the reason for more of this.
It's interesting that the whole eco trend has not hit Christmas trees. In other words, like, how wasteful is it to cut down a tree every year, throw it away after you're done with it, and then buy another one the next year?
Yeah, it's kind of funny that this has continued to be like this. However, you could maybe think of it another way, that there's all this land that's being dedicated to growing trees. One thing that I found interesting was that artificial trees are more expensive, but then that's sort of obvious, I guess.
Because it's meant to last.
They're meant to last. They're quicker to make, but you really don't have to do much for a real tree. You just wait,
They smell so good, though.
They do. They do. Maybe, I don't know, maybe you have to just, with an artificial
buy a
tree.
spray.
Buy a
You can buy an
candle.
artificial tree
Yeah.
and then spray. You can also have one in a pot, right?
You can have one in a pot, I suppose.
Is that a
You're
thing?
so sustainable.
Yeah. All year
No, I'm a
round.
Jew. We don't
I
have,
mean, the
I don't have
roots
a
go
Christmas
deep,
tree.
but
Get a silver. You get one of
Thanks,
those metal
Ethan.
silver trees with the spinning light things from the 60s. Call it a day. Ethan, thank you. Coming up, the FBI is investigating death threats against presidential candidate Andrew Yang. Plus, SpaceX plans to launch a resupply rocket to the International Space Station. We're going to be right back. Presidential candidate Andrew Yang's campaign has asked the FBI to investigate several death threats that have been made against Yang and his staff. Several emails sent to the campaign threaten to shoot members of Yang's staff when they campaign in New Hampshire. The emails are from a person who calls themselves Hitman Yang. Buffalo Bishop Richard Malone resigned this morning after several people, including priests and church staff, criticized the way he's handled allegations of clergy sexual misconduct. 220 people have filed lawsuits claiming they were sexually abused by priests when they were children. Several of those cases took place before Malone became bishop. Trader Joe's supermarket is recalling several ready-to-eat meals, which include California rolls and several sushi-like products, over possible listeria contamination. An FDA inspection of Fuji food products in Brockton, Massachusetts, led to the first recall of products in that plant's history. SpaceX plans to launch a Falcon 9 rocket within the next 2 hours as part of a resupply mission to the International Space Station. The Dragon capsule contains 40 genetically engineered mice, which are part of an experiment to learn more about bone and muscle loss while in orbit. Part of the cargo also includes an experiment that could lead to brewing beer in space. Beer, mice, you pick. We'll be right back.
It's time for Word on the Street, where we check in with our panelists and find out what stories they're watching. Scott, you're looking ahead to Friday's jobs report. What do you think? You mentioned earlier slowdown.
Yeah, well, we got the ADP report today, 67,000 private sector jobs added in November. That was way below the 150 some odd thousand jobs that analysts were expecting. But, some of the analysts are already coming out today and saying, look, in this ADP figure, you didn't get the boost from the GM strike ending. It's not counted in that, but it should be counted in Friday's jobs report. The consensus for Friday is the addition of 180,000 payrolls. That would be a big increase from the 128 we got in October. Potentially that 128 gets revised higher or lower. But I think the overall trend of the job market may be slowing, but you're still near that 200,000 monthly average. So, and we're late in the economic cycle.
What we're seeing, the gains right now on the different indexes, a lot of people saying about the potential for a China deal. Do you think there's anybody out there saying, well, if we have a slowdown in jobs, maybe the Fed's going to be forced to do more as far as monetary policy?
Maybe not from jobs specifically, but I think there's this overall expectation that the Fed is not doing anything anytime soon to mess with this market or to undo the work that they've done over the past year. They learned their lesson from 2018, I think.
All right. Christina, talking about learning your lessons, maybe not just yet, the trade war is now expanding beyond China.
Yes. Well, we've certainly had an expansion for a while now, and it's gotten worse, where we have threats of applying tariffs to Argentina, other countries in South America. We've got concerns that we might see even tariffs against EU autos. But I wanted to focus in on something even beyond that that's not getting a lot of coverage. Now, the U.S. has veto power over any appeals judges to the WTO, and it has used that as a weapon to try to exact reforms on the WTO. It hasn't been successful, but it has been successful in blocking appeals court judges. So we're now in the situation where by next week, we will not have enough appeals court judges in the WTO to issue binding decisions. And that presents a pretty significant issue because while they can have arbitration panels, these are not binding decisions, and this lends itself to an environment that could be even worse than what we're having already in terms of the Wild West.
Listen, I'm thinking back to 2017 when the Trump administration came into office and Wilbur Ross was first there, at the podium, and they talked about they wanted to get rid of the WTO, death by inaction. Is this the strategy?
I think so. I mean, the argument, the apparent argument is that we want to reform it, but it seems that this is really what is happening, whether by design or not, is that the WTO is no longer has the power that it had. And what that suggests to me is that we're likely to see more in the way of vigilante protectionism, if I can coin that term. I grew up in the New York City area in the 70s and 80s, and there was something called the Guardian Angels. The idea was that New York was lawless, law enforcement wasn't working, so we needed all these private citizens wearing red berets patrolling subways. I think we could have something like that, of vigilantism with trade, in that you could see countries just deciding they're going to levy tariffs against another country. I mean, the U.S. has really already started that trend. It's bypassed the WTO, but it actually could spread, and we could see more and more countries doing that, really because they have no alternative if the WTO can't issue binding decisions.
That's a pretty scary scenario.
It is. It could mean that a greater breakdown could occur, even if we, for example, get a phase one trade deal with China.
The scarier was that 1970s film Escape from New York, but that's another discussion. Christina, thank you for being here. Say hi to the team at Invesco.
Will do.
Scott, thank you. Tell the team upstairs to save us some lunch.
Will do.
All right, coming up, major shakeup at Google, why the company's co-founders Sergey Brin and Larry Page are stepping down. Plus, before we go to break, take a look at some of the biggest winners in the Dow today, besides Alphabet, that is. 3M and Goldman Sachs are also gaining. It's noon here in New York City, about 2.5 hours into the trading day. Stocks are bouncing from yesterday's losses. The Nasdaq, though, lagging. The other major averages up just about 0.5%. Yesterday, it was leading the downturn. The buying comes amid renewed trade optimism, the hopes that stopped a 3-day slide for stocks. That's just ahead. The founders fly on. What's next for Alphabet as Larry Page and Sergey Brin hand the reins over to Sundar Pichai? And another change at the top. Expedia shares pop after both the company's CEO and CFO resign. Welcome to On the Move. I'm Julie Hyman.
And I'm Adam Shapiro. We're going to turn our attention to farming. It's our top story right now. Did farmers get paid too much? President Trump's $28 billion farm bailout may be paying some farmers more than the trade war with China's actually cost them. The U.S. Department of Agriculture's calculations may have overshot the impact of the trade war on the price of American soybeans. According to 6 academic studies, this is the issue that we want to discuss and bring in this hour's panel. Yahoo Finance's Dan Roberts and Emily McCormick, along with Adriana Belmonte. And also joining us from Maplewood, Ohio, is soybean farmer Christopher Gibbs. And Chris, I want to start with you because we do know that farmers have had a difficult time with the soybean issue because of the trade war, and that farmers don't want handouts from the government. So when you hear about this report that maybe some of your peers have been overpaid, what would you say to the people who authored that report?
Well, I haven't seen the report, certainly, but I can say that on my farm, we certainly haven't been overpaid. For 2019, and this is based on my 2018 gross receipts, it looks like I'm going to receive, or actually have already received, about 6%. And that amounts to a fuel bill for me. And while that is very helpful, and we certainly thank the taxpayers for that, because all these dollars come directly from the taxpayers, it's the long-term effect that bothers me on the farm. What's it going to be for my sons and daughters? What's it going to be for my grandsons and granddaughters as this farm gets passed on down the road? Are we going to have these trading relationships? And these trading relationships have been adversely affected for many years to come because they took decades to get here. So that's my worry.
Well, you're proposing to do something about it in a more active sense. I know you're exploring a run against the Congressman Jim Jordan for his seat. What do you, if you end up running, if you end up winning, what do you think should be the trade policy of the U.S.?
Well, I'd want to start, number one, agriculture is a national security interest, plain and simple. Never again should agriculture be put as the tip of the spear on geopolitical turmoil. You know, I've been through 2 of these now. I was through it in 1980 with Jimmy Carter when he embargoed grain to the USSR, one of our biggest customers at the time, because they invaded Afghanistan. And the retaliation came that we couldn't sell agricultural products, and we ended up with extreme surpluses in the mid-'80s, which led to the farm crisis. And now we're right back here again. So for me, agriculture is a national security interest, and it should be treated no different than Social Security or Medicare, Medicaid, where it should be the third rail of American politics, never to be touched. And wherever I end up in an election or what have you, it's going to be certainly my life's work to make sure that politicians, president, no matter what, know that agriculture is off limits, no more.
So switching gears a little bit, you and I had spoken last week, and we talked a little bit about the USMCA because, farmers are still waiting on ratification for that. And one thing in particular that you had said is that the administration has failed on NAFTA. Could you elaborate a little bit more on that and how the Trump administration could try to fix the USMCA were it to finally get passed?
Well, let's start with what the USMCA is. It's certainly it's like new paint and a new roof on a comfortable old home. Okay, it's just NAFTA 2.0, and there are good provisions to be sure. NAFTA was put into place in 1994, middle of the 1990s, before we even were using cell phones. But the failure here has been not to get it ratified. And that starts all the way back to the 2018 election, where the president lost 40 seats in the House. It would be really easy to get this ratified if he wouldn't have lost those seats in the House. So, but what we need, let's bring it forward. What we need right now, we need to get this passed, because in trade, and particularly for agriculture or any other business, you need predictability, you need consistency. And the fact that we have NAFTA, that is, or USMCA, which is hanging in the balance here, whether or not we're going to get that approved, doesn't give agriculture any solace that there's any predictability. And certainly that's true in China and so forth with the China phase 1 trade deal. So we're looking for predictability. Let's get it passed.
So at this point in time, what do you think is more crucial to get passed first? Would it be the USMCA or a US-China trade deal in terms of priorities for farmers?
Well, probably priority for farmers would be some kind of a phase 1 China deal. And the reason is because NAFTA continues today. And so we'd still have NAFTA. Just because we haven't passed the USMCA, we're still operating under NAFTA. And the Mexico and Canada did lower their tariffs or take a lot of those tariffs off here a few months back on the retaliatory tariffs against agriculture products. So we've still got that. So for me, and it's pretty close, but for me, the China situation where we were selling $21 to $23 billion a year to China and bringing all of that money back to agriculture and rural communities, that needs to be straightened up. The president continues to promise, and we haven't seen any results.
Christopher Gibbs, you're a soybean farmer from Ohio. If you decide to run, we would love to have you back on to discuss that. If you challenge Jim Jordan, we'd love to have you back on just to discuss the issue for farmers, whether or not you run. So all the best to you, and we appreciate your being here on The Move.
I'll be here. Thank you.
Well, shares of GoPro are marginally higher after the company said its new Hero 8 Black camera sold at record levels over Black Friday and Cyber Monday. Inez Frey has the details from the floor of the New York Stock Exchange. And Inez, initially when the company came out with this, after the bell yesterday, the shares spiked, and since then they've been coming back down.
Yeah, Julie, this morning they were up more than 8%. This is after that Hero 8 Black camera came in as a real hit for their holiday, for their Thanksgiving holiday, making up more than 90% of their total sales on their website for Black Friday and Cyber Monday. And the company says that it's well positioned for full year profitability for 2019 and revenue and earnings growth for 2020. But certainly the stock has moved around quite a bit today. And then we're watching Campbell's Soup not moving too much after its adjusted earnings for its fiscal first quarter came in as a beat. Sales came in shy of expectations. The U.S. soup market, which they have been trying to revitalize their soup share market, increased for the first time since 2017. The company did lower its sales guidance for its current fiscal quarter. And then just watching WTI oil is seeing a bump today, up around 4%. This is after U.S. inventory, weekly inventories dropped more than expected. And also OPEC's biannual meeting will be happening tomorrow in Vienna, starting tomorrow, and some deeper production cuts are expected, and that's what's sending oil prices higher today. Julie, Adam.
Inez, thank you. End of an era. Alphabet's co-founders Larry Page and Sergey Brin are stepping down from executive roles with the company. Sundar Pichai, who's currently the CEO at Google, is going to become the chief executive of Google and Alphabet. The founders, they will remain on the company's board as the two largest individual shareholders with majority voting power. Joining us now from Maui, Hawaii, is Technalysis Research President and Chief Analyst Bob O'Donnell. Before we get into the discussion, we envy you in your tiki hut in Hawaii.
Yes, thank you. You can't beat the surroundings here.
All right, we're watching founders leave a silicon giant. What does this mean going forward? Are we going to see more of this, or do you want to keep this focus just on Alphabet? And what does that mean for people who now have to trust Mr. Pichai going forward?
Well, a couple of things. Practically speaking, for Google and Alphabet, I don't think this is much of a change, really, because Sergey and Larry have both been pretty much out of the picture for a while. And you've got the gentleman who's been running the largest part of that organization, Sundar, who's been doing a fantastic job, now simply moving in to take that role. Philosophically, it's sort of an end of an era, right? Because this was the last, arguably, of the big early day .coms where the founders are finally stepping away. And so it marks an era of maturity, shall we say, or a different sort of era for tech companies in general, because we've moved from being these, idealistic companies started by these young folks who did all the early Silicon Valley stuff to now a mature, enormous company, run by someone who's got experience in running a company now. It is a little bit of a different era, but practically speaking, there's not much. I do think Sundar. Sorry, go ahead.
I just wanted to ask you as well, is there anything culturally to take away from this? There had been some criticism of Larry and Sergey and the sort of culture at the company that was sometimes sexually charged. There were relationships between some of the founders and some of the employees at the company. There have been some criticisms of them based upon that. And to my knowledge, there hasn't been as much around Sundar Pichai. Is there anything to be drawn from that?
Well, sure. I mean, I think that's inevitably part of it. I mean, some of that, to be fair, goes back to the very early days of the company where you had a bunch of young people working together and, things may have happened. Now, leave that aside. But I think it is obviously a much more mature company. I think the thing is, Sundar now has to deal with other issues, which is all of the regulatory concerns, the privacy concerns, the concerns around employee unionization. And again, these are the concerns of a big company. So we have a different set of issues that the leader has to face. And I do think that one of the challenges for Sundar moving forward is going to be sort of really taking the reins on some of these more controversial issues they're having to deal with. But fundamentally, yes, I think it's when you get the company as large as it is, to answer your question, I think the culture has changed. We've seen that. And they're trying to adjust. And I think it has been a little awkward. And that's why we're seeing some of these things like the efforts at unionization and the recent employees that were let go and all the controversy around that.
Bob, what do you think this means in terms of the succession plans for other Silicon Valley giants, particularly those like Facebook or, of course, Amazon, which are still actually run by their founders? Do you see those succession plans playing out similarly, where the founder eventually takes a little bit more of a backseat and sort of phases someone in? Or do you think those will be fundamentally different when that succession actually does take place?
That's a great question. And it's hard to say for sure because it's the personalities as well, right? I mean, clearly with both Facebook and Amazon, you've got the leaders still very, very actively involved with their businesses, which was not the case here with Google and Alphabet. So I certainly suspect that we'll continue to see Facebook and Amazon moving forward with Bezos and Mark Zuckerberg. But do I think we're going to see other big companies start talking about succession plans, including at Google? Right now, Sundar's there, but they're going to have to line up the bench as to who's coming next. I think we will hear and see those discussions again as tech companies reach this new level of maturity that we haven't really seen before, and they become part of the way other big companies work.
Bob O'Donnell, thank you for joining us. You are in Hawaii, and you are also a big guest on this show. We appreciate your being here.
All right, that wasn't the only CEO shakeup that was announced today. There was also shakeup at Expedia. CEO Mark Okerstrom and CFO Alan Pickerel will be resigning. This is just the latest in what's been a crazy year for CEO departures. Over 1,000 chief executives have left their posts in 2019, although a lot of those were not obviously at the biggest companies, but still there have been some high-profile
huge names
departures, right? So what is it about 2019?
Well, first of all, if we can stick with Google for just a second,
Sure.
I think your question last segment is the right one, which is, there has been so much negativity out of Google in the last year, and actually I would argue it's been still, even though we've discussed each instance, undercovered in light of Facebook. Facebook has done a favor for these other tech names because all the talk in the last year has been about Facebook, and so the issues, real serious issues at Google, I mean, there's a reason employee activism has picked up so much at Google in the last year, have kind of been ignored, and so some people were pointing out, I think rightly so, interesting to see Sundar Pichai elevated after a year that really in some ways was a tough year for Google. And yet, all that being said, I think the example of Larry and Sergey is different from the rest of what we're talking about. There's the CEO exodus of 2019, and Larry and Sergey is a different example. I know all the headlines are saying they're out. They're not really out, by the way. I mean, they're staying on the board. They own a ton of stock, so they're not really out. But
why would
Brin
or Page, why would they have just done it this way without a kind of build up to it?
Well, look, I think that they, even considering the issues that have come out, they clearly feel that Sundar Pichai has done a good job steering the ship.
Well, and the stock has done well.
And I would argue that in a way that they did kind of gradually phase this out. I mean, they were running Alphabet, which has investments, it has other bets. It's not the moneymaker for Google. Google is the moneymaker. It's the advertising business. Yep. And when we think about who actually went and testified before Congress, it was Sundar Pichai. It wasn't Brin and Page.
And actually, Facebook, too. You can make the same argument. It's the same story where even despite all the negativity, despite what feels like scandal after regulatory issue after threat after fine, look at Facebook stock and look at Facebook's earnings. The ad sales are booming, baby. So it doesn't really matter that much. But on the note of the CEO exodus, some of those names have been huge. I mean, Nike and Under Armour on the same day. And we still don't really have answers on exactly why those CEOs stepped down. That's not really, I don't buy that that's a coincidence. There's something, there's clearly more, at least, especially with Nike, there is more to the Nike story.
What about the Expedia story? I mean, Barry Diller, not a happy man there, but, he's still in charge.
That one a little more cut and dry in sense of the stock, though.
Exactly. I mean, that stock had lost about a third of its value since Åkerström had taken over back in 2017. So pretty much his plan wasn't working. They started a turnaround at the beginning of the year. That wasn't showing any results. They guided down their last quarterly report. So just really losing out to the competition from Google and its own travel business, Booking.com, Airbnb, just not keeping up.
The clear takeaway? Maybe being a big corporate CEO in America is becoming more like being a college or pro football coach, where, man, you don't get long. It's a short leash, and if the stock ain't doing well, and if people aren't happy, if shareholders aren't happy, you're not going to be given as much of a long leash as you once were. You're out.
Maybe.
You might get to say, I resigned. You might have a boot in your back, as Kristen Myers said on our earlier show today.
But we'll see what 2020 holds, and if it really is a trend, or if this was just a one-off.
Coming up, taking on student debt, Education Secretary Betsy DeVos has a new plan to tackle that issue, and it does not involve her. Plus, take a look at some of today's trending tickers on Yahoo Finance, and there you see we were just talking about Expedia. It is trending higher right now. Apparently, the street likes what Mr. Biller has done. Welcome back to On the Move. I'm Jared Blickery, and we got stocks up today for a change. Not like yesterday. Dow's up 184 points, about 0.2%. S&P 500 up about the same amount. NASDAQ giving back a little bit. It's only up about 0.5% right now. And the Russell 2000 up about 0.8%. Not much has happened over the last hour. You can see this is the intraday price action, gapped up, rallied a bit into resistance, actually hit about 31.20 or thereabouts, and it just kind of maintained the gains so far. 31.22 is the level we're watching in the S&P 500. Want to close over that to signal the temporary all clear. Maybe can make a run at highs. Otherwise, we might kind of roll over. Got to watch the VIX for that. 10-year T-note yield is up quite a bit, and what a reversal from yesterday. It was down about 12 basis points. Today it's up 8 basis points, and it is just continuing to climb here. And as you can imagine, some of the sectors that are doing well, value and cyclical, looking at energy and financial. Speaking of energy, crude oil is having a heck of a run here. The weekly inventory report came out, and it was up 5 million barrels in crude, although there was pretty big draws in distillates. And the reason I bring this up is because tomorrow and Friday, really big days here. Now, we might have Aramco pricing as early as tomorrow. Remember, the Saudis want higher oil prices. We also have the OPEC Plus meeting tomorrow and Friday. Probably going to get more rumors out of there. Brent, for its part, is about $5 higher, about $63 a barrel. Let's take a look at what the heat map is telling us about stocks today. Here we have the NASDAQ 100,
can see Apple up 1% after being down about 2.5% yesterday. Alphabet up nearly 2%. And if we sort on an equal cap or equal weight basis, we can see Expedia with their leadership change. They're in the lead with 6%. To the downside, Workday after its earnings giving back 5%. On that note, we will be back in 1 minute.
The Department of Education oversees the government's $1.5 trillion loan portfolio, but now Education Secretary Betsy DeVos says it should be someone else's job. In a speech yesterday, DeVos said student loan financing, currently under the DOE's Federal Student Aid Office, should be under the purview of an independent agency that doesn't currently exist. Danielle Geltrude, who's Geltrude & Company's founder, joins us now to talk more about this and what effect this could have. She basically said, if you are going to have student debt that's held by the government, you should have the same level of services as the professional financial services industry, and we're not able to provide that. What do you think of this idea?
Well, the first positive in all this is that you actually have the government admitting they can't get something right. They can't possibly service these loans the way they need to be. So there's no question about the fact that there has to be a significant change with the way student loans are being handled. But if you step back and really look at what is the root cause of this whole situation beyond just servicing the student debt, is really that students are taking on too much debt. And the question is taking on that debt a good investment? Now, that may not be something too popular to say, but you have people that are going to expensive private universities, taking on an enormous amount of debt, and then what's going to be the return on the investment of what your career is going to hold? Because you could put yourself in a situation where you will be in debt forever.
Well, this is the Peter Thiel argument of, four-year college maybe not as worthwhile as it once was, not as valuable. And certainly we've seen that trend happen in law schools where you're seeing people decide that if I can't go to one of the top 30 or whatever it is, I'm not going to go. But, at the same time, we've had a lot of startups on this show, Dan, come in and say, here's how we're fixing it with tech. And, they all have different approaches. Remember, Adam, we had a startup come on and say, we're fixing it.
Yeah, but it was a private loan.
Yeah.
It was just refinancing. Who's going to wind up holding the bag on this?
Exactly.
We have 1.5 trillion taxpayers. Yes.
Yes and no, Adam, because the interesting thing about this is for these students that are taking on all this debt, they actually can't get out of it. Bankruptcy is not going to help them. They're on the hook until death do they part. Well, so, yes, it is a taxpayer issue. Ultimately, if these loans are not paid back, because you do have default issues inching into the situation right now, but it's really something that we have to take a close look at.
Well, then if that's the case, does the solution that DeVos is proposing actually get at any of that? Or is it really just moving oversight to this new agency that will then report to Congress and try to fix it that way?
You can keep trading the debt around wherever you want.
Well, listen, in football terms, this is called punting on first down, right? Because I think she's looking at it and saying, this is a no-win situation for my department. So the best way for me to handle is to push it somewhere else. Now, that could be the right answer if they have have the ability to do a better job, but I'm not so sure that I trust government to really be able to get this situation under control. I would actually like to see this become privatized and have a little bit more oversight.
It somewhat is privatized, except it's the U.S. government's kind of like Fannie Mae and Freddie Mac. The U.S. government backs it. And that in itself, the simplest solution actually, because taxpayers be on the hook, is bankruptcy. Change the bankruptcy law, because I think the default rate is actually, it's a little bit less than 10%. Right. So bankruptcy would allow people to clear out the debt if they can't manage it.
But that's the people who are at the extreme, Adam, right? Because you have so many people that are struggling, they're getting by, but they never have the ability to truly get ahead because this debt is strangling them.
They're not bankrupt, but they're being killed by the monthly payments.
Right, and it affects all of their decision making as well. What do you counsel clients when they have a heavy student debt load? I mean, what?
Well, the counseling, right, Julie, the counseling actually needs to start before you're actually taking on the debt. So I try to look at this as an ROI, return on investment decision. And I say this, when it comes to college, go state or great. Right? So look for the bargain education in a state university where, quite frankly, it's just as good as what you'll get at a private university. Or if you do have the ability to go to a really top-notch university, well, then make that decision, because it will be a good return on investment, because that debt you take on, presumably with their network, you will get it back.
If you do a medical degree, there are some states where they'll actually, Alaska does this. You give them 4 years, they pay your medical bills. That's another discussion. Not a lot of doctors.
It's almost like ROTC.
There you go. Yeah. As we leave this decade and transition into the 2020s, our own Rick Newman is taking a look back at a few failures that made big waves in the U.S. economy. Tell us about your list.
Well, the 2010s were a good decade economically. We got out of the recession. We've had a bull market the whole time. Housing has recovered after that huge housing bust. But I think there are some really tough problems that have actually either kicked off in the last decade or gotten a lot worse. And top of my list is wealth and income inequality. This has been getting worse since about 1980, but it continued to get worse. In the 2010s, the top 1% control basically record levels of wealth in the United States, and they control record levels of income as well. This is a problem. I mean, this is part of the reason that the middle class is struggling. You're hearing this show up in political debates. I think it contributed to President Trump's victory.
But what's the failure that sort of led to that, do you think? Whose fault is it?
I don't think you can pin it on a person. I don't think it's a policy fault. I think it is a
people, or I mean, what's to blame then, if not who?
It's a 40-year trend. I mean, that has a lot of causes. The decline of unions is probably part of it. The decline of manufacturing is probably part of it. Sort of this is the hollowing out of the middle class that we hear politicians talk about a lot. We hear voters get very angry about it, but nobody's done it. Nobody has done anything about it. And there's nothing on the table that would actually address it.
That's one of the failures. The other failure, though, is I believe is the low interest rate environment that we have in.
Yeah, I mean, it's fine for now, but we've never had interest rates for as low as they are for as long as they've been. And, when the Fed stimulated going into the recession and through the recession from 07 to 09, it cut from short-term rates from 5.25% to zero. So more than 5 basis points of cutting, which is normal. That's what the Fed normally does in a recession. And by the way, short-term interest rates used to be 7%, used to be more or less normal. So interest rates right now are around 1.5%. And what can the Fed do when it has to cut? I mean, it doesn't have to do this now, but it doesn't seem likely that the Fed is going to raise rates to create more headroom for cutting. So this is going to be ugly. I mean, the Fed just doesn't have much room to stimulate when we have another recession.
Dan, is that a failure in your view? And is it also a failure for savers?
Well, it certainly is going to hurt people that are saving money because there's nowhere to go. And but that is also what's juicing the stock market, because people are looking for a better return. The banks are safe, but the return is so low. Hey, let me go into the market. So I think that's what we're seeing as far as the stock market.
If you have the risk right now. Well, and by the way, juicing the stock market is not the greatest. I mean, you want stocks to rise for fundamental reasons, right? And nobody knows, are they overvalued right now? But, I mean, we are going to have another recession, and it's going to be difficult to deal with.
And I'll tell you one other thing, too, that's going to be an issue. You have record amounts of corporate debt because there's incentive to borrow money. And sooner or later, when those rates change, you're going to see what's juicing the stock market come right back around on these companies.
when are those rates going to change? We're already 10, 11 years into a low-rate environment.
I don't think that we're going to listen. There's people calling for rates to drop down to zero, and negative.
Powerful
I don't think
people,
is
such as
Those
certain
rates aren't
person.
changing for what, a year, 2, maybe 3 years out? I mean, I don't want to say Japan, but they're not changing.
Well, plus you have a president who's putting enormous amounts of pressure on the Fed. I think it's having an impact, by the way. Some would say no, but I think
it's
it does.
worth looking at the way debt has changed during the last 10 years. So we know now, going into the Great Recession, the problem there was too much household debt, especially on mortgages where the underlying asset didn't back the value. That's not a problem now. Household debt levels, consumer debt levels are fine. I mean, consumers have gotten their act together and they can pay off their debt. The problem now is corporate debt, as Dan mentioned, and government debt. I mean, we've had a giant
Well, that depends on who you talk to, whether it's a problem or not.
It's worse than it used to be.
Yeah,
Put it
we'll
that
save
way.
that.
It's a lot worse than it used
Worse
to be.
is also in the eye, but that's a whole other discussion if you're an MMTer. But that's a discussion for another day. Rick, we only got 2 out of 5, so we'll have to have you back on to get
That's
into
fine.
the other
The
ones.
problems aren't going
or
anywhere.
you can read them online. Rick Newman, thank you. Dan Geltrude, good to see you. Coming up, lacing up success. We'll speak with the CEO of StockX about the company's quick rise and what he's seeing from consumers this holiday season. What shoes are hot? That's what I want to know. Plus, take a look at some of today's winners on Wall Street.
$12:34 here in New York City. We're 3 hours into the trading day and stocks are trading higher. We're going to talk about that. Take a look at what's happening with gold as well. We were watching gold earlier this week. Gold right now is trading down $1,480 an ounce. Kamala Harris, she dropped out. Why she failed to connect with the voters, that's just ahead. Has the brewing bubble burst? The new warning sign for craft beer makers. And a smart perk the new employee One Coffee startup is bringing on in an effort to end, quote, bro culture. Welcome to On the Move, dude. I'm Adam Shapiro.
I'm Julie Iman. Thanks for sticking with us. Well, brands are marking National Cookie Day with fat-free cookies. Mrs. Fields naturally is one of them, and the company's CEO, Josh Kirschbaum, is with us now to talk more about what to expect this holiday season. Thanks for being here.
Thank you. Good morning.
Not to mention National Cookie Day, but I imagine the holiday season is probably, the busiest season of the year for you guys because of mall traffic and because people want to indulge a little bit.
Well, that's right. Well, thanks for having me, and happy National Cookie Day. But you are right. We actually look at National Cookie Day as the start of the holiday season at Mrs. Fields. We had a phenomenal Black Friday and Cyber Monday just a few days ago. But we're really excited about today, and we brought you guys some treats.
We're going to taste. I'm curious, how many locations? Is it franchise or is it all owned corporate?
So that's one of our strengths, is we're actually able to penetrate a number of different channels. And today I'm proud to talk about our 200 plus stores nationwide, as well as our MrsFields.com e-commerce platform. We're penetrating a number of channels and really having a great season.
It's good too.
Thank you. Yeah, we think it's the best cookie on the market.
Where are you actually getting most of your sales from? Since you mentioned all those different channels, is it really foot traffic? Is it online sales? Is it people gifting? What are you really seeing in terms of trends?
Yeah, we're winning in each of our channels right now. We're, as I mentioned, Black Friday was double year over year. Cyber Monday up 30%. Really heading into the season with some great momentum. Our e-commerce platform is on fire. I want all of your viewers to go to MrsFields.com and take advantage of the promotions we're having today for National Cookie Day. But we're winning on the ground at our store locations as well.
But how do you deal with an environment in which the world is afraid of butter, gluten, and sugar? I'm loving it, by the way. This is peanut butter.
No, listen, that's a great question. I think diet's all about balance. We're not afraid of who we are. We are a decadent treat. We want you to enjoy eating the cookie, and we're not afraid of who we are. We think we're the best cookie on the market, and we're proud, and I hope you enjoy it too.
How has your store footprint changed over the years? Because we've heard a lot about bricks and mortar retailers, not so much who sell food, but who sell clothing, for example, that are shrinking, that we had sort of this overstored situation. Have you guys had to pull back at all?
That's a great question. Certainly we are focused on those high-performing malls. You see the mall, the new mall going here in East Rutherford, New Jersey. You're going to see a Mrs. Field location in that mall. We have a new store location in Aventura. That's a great mall in Aventura. We're building in the right malls, and we're growing in the right places.
Who's your biggest competition? I mean, is it other food retailers, or is it people who just want to bake cookies at home?
So, as I mentioned, we're competing on a number of different channels. So we have competitors at each of our channels. On the e-commerce side, of course, we're competing with some of the other e-commerce players who also offer cookies, David, Cheryl's. But quite honestly, in my opinion, we are a far superior cookie.
Well, is it Christmas the big season for you, or is there a different time of year where actually things are much larger?
Great question. So we have great programs behind each of the holidays. Christmas is certainly our biggest. We're well poised for an excellent Christmas season and kicking off today with National Cookie Day. But we have some great products around Valentine's Day, Mother's Day, Halloween, and we're partnered well with some big box retail as well.
We've talked a lot here about the trade war, the effect that that's had on prices for different products. What's happening with sugar and cocoa and flour prices for you guys?
Great question. I've watched you all morning. Certainly, we want to have some fun with this segment. I heard you talk a lot about trade wars. For us, we're winning on the ground. We've got a great product. We're not necessarily affected by the trade wars. We're certainly paying attention to them. As a business leader, I got to make sure I understand its impact on the economy and the consumer. But most importantly, we're proud of our product, and we're really winning each day. We are seeing some commodity increases, maybe specifically on milk, but we've got a great team based here in Salt Lake City, Utah, who does some great sourcing of our all-natural ingredients.
We had great questions. You had great answers. Josh Kirschbaum, the cookie tastes wonderful. Thank you for joining us on
Thank you.
Thanks. Well, coming up, something smells fishy. It's definitely not the cookies. The details after the former CEO of Bumblebee Tuna is convicted in a price-fixing conspiracy. Plus, take a look at some of today's most actively traded stocks by volume. We got some trending tickers for you from YahooFinance.com. Chesapeake Energy shares up 16% today. The company has a $10 billion debt load, and there have been signs that it's heading towards insolvency, but it's taking some steps today to address that debt load, including getting a new $1.5 billion loan package from banks. It's also buying back $700 million worth of its notes. We should mention, though, as we see that big pop today, we have to put it in context because the stock has just collapsed when you look at what's happened year to date, down 65%. We're also looking at Salesforce.com. Now, those shares have gone up year to date, but they're going down in today's session by almost 4% after the company's earnings report. Third quarter earnings beating estimates, but its forecast is a bit short of what analysts had been anticipating. Workday, we're seeing a similar situation there. That company's earnings beating, but it said new product launches and a recent acquisition will not necessarily help its performance going into next year. So those shares down 5% today. If you look at the year-to-date performance there, they've kind of come full circle. And if you're following today's trending tickers, make sure you're watching the ticker. It's right here at 2 p.m. on Yahoo Finance.
Sneakers are on the top of some people's holiday lists this year. Among the top picks during the Black Friday weekend, Adidas, is it Yeezy? Yeezy Boosts and Jordans. I wear old man shoes. That's according to the Sneakers Stock Exchange, StockX, and Scott Cutler is coming back to talk to us. StockX CEO, he is here now once again. And also Yahoo Finance's Reggie Wade is here. So Scott, you know, the sneakers that become popular, what's behind the success of a sneaker?
Well, it's driven a lot today by obviously the heat and high demand that comes from social influence, from music artists, from athletes, from DJs that are wearing, you know, essentially now, which is a fashion item. And that becomes a thing that everybody wants, and then you can't find it anywhere else, which is really why we exist as a marketplace.
One thing, you know, everyone's talking about Yeezy versus Jordan this holiday. Yeah. Had the Yeezy 350 non-reflective black coming out, had the Jordan 1 Bloodline. Who do you think is going to win this battle on the resale market?
Oh, it's a battle. You know, the Adidas and Yeezy and Jordan brand obviously are one of the top selling items. That 350 Boost in the black and Citron were a great hot seller. Jordan is a great brand, but we also saw sort of that crossover into the collaboration with Virgil Abloh and IKEA in our collectibles category. And again, these are things that you couldn't find in a retail location that you're finding on the site. But I think it's a classic battle, but it's two great brands that are doing extremely well over what we see in the Black Friday holiday.
And so what you guys do at StockX is it's almost like a stock exchange for shoes, right? So what's happening with pricing when you get some of these hot releases? I mean, how much are people having to pay up when you have some of the scarcity around these hot releases?
The great thing about our site is that we provide that opportunity to get access for that thing at that super hype moment that might result in you paying a lot for it. But we have most of the people that come to the site they come for the release and then they look at the back catalog. And that back catalog item, which would be beyond its 8-week release cycle, you can find amazing value of items that are trading below the retail value. And so since we're stock market-like and we reflect that intersection between between demand and supply, price fluctuates. And it's not only just that high heat, high priced item, but it's also sometimes a very low priced item. On Black Friday, we had sneakers that traded as high as $5,000 and as low as $20 on the platform. So it's tremendous range.
Now, speaking of range, earlier in the year, you had your IPO with Adidas. This was a model that you guys had gotten into, very successful for you guys. Could you speak a little bit about that? And what I want to know is that the future for StockX? Will we see more of these IPOs with different brands coming out?
Well, we think it's the future for pricing of products. And so we've called it an initial product offering. We were so excited to be able to partner with a great brand in Adidas through a creative product out of their Maker Labs, where we released these unique items out into the market. And we did it like stock market and we had a blind Dutch auction in terms of how these things were priced. So it was priced based on demand. And we think that's a very different way of bringing product to a market rather than choosing a price that you don't really know it's going to sell at. You actually let the consumer dictate the price. And in this case, they were highly sought after. They traded for what they would have above retail price. And that value went to the brand, in this case, the creators of the product.
Right now, and we were showing some of these new kinds of things like streetwear and watches. Where is the growth going to be? Because I imagine you're not stopping just there.
Yeah, well, we started as obviously a stock market of things. Sneakers been the biggest category. We recently launched a new category in collectibles. We trade handbags, watches, and streetwear. Those would be our categories. The other big opportunity for us is, quite frankly, global expansion. So our business, a quarter of our business is outside of the United States, and some of those big markets, largely in Asia and in Europe, have been growing at an extraordinary pace for us as a business as we service customers in over 170 countries around the world.
I always have to bring it back to the shoes. We know the Yeezys, the Jordans, but what are some surprise shoes that are moving on stock? It's something that someone might say, oh, I didn't consider that to be heat.
Well, I mean, I would say the most high heat item that we have is actually a charity auction that we're doing in a couple of weeks with a designer, Colette. We actually launched this in Paris just a couple of weeks ago. That's a highly sought after item that we're going to be doing as a charity auction. I think what surprises us is just more that, as I talk about the back catalog, sometimes it's the thing that's been released even several years ago that's inspired by a new release, and you go back and you find that product in a different colorway. And so again, when we're looking at a catalog of 29,000 items just in sneakers alone, that's not the 200 items that you would see at a retail store on the shelf.
Scott, thank you so much. And are those a size 14? Because if they are, I'd love an early Christmas.
I got a size 14 for you, actually.
Scott, thank you so much for being on with us.
Great. Thank you so
Scott.
much.
Thank you, Scott.
All right, we want to turn to Black Friday just across the board. It's our record number of online sales, but not all stores were winners. According to Susquehanna Financial, Deckers Outdoors, Canada Goose, Lululemon, and Steve Madden were among those that had to go. Meanwhile, Foot Locker and Under Armour were among the have-nots. And Reggie is going to help us break down some of the winners and losers here of those.
Well, Sam Poser, he really broke this down. He actually went to the stores, and what he saw with Deckers is that Uggs is really what helped them out this Black Friday. He said the interesting thing is they had their Black Friday models, but people were flocking to the full price items. So you get them in with the Black Friday sales, and they stay for the regular price. So they moved a lot of regular price Uggs. Lululemon was the king and queen of the day. Just their customer service, how they help people in the fitting rooms, how they're attentive, how they're well-staffed. Sam said they were the most well-staffed store he's seen this Black Friday, and it's really shown in what the business they're able to do.
What do you think Abercrombie, though? Because I thought that pretty much that the world had written them off as they were trying to transition. They were years ago. It was all the much younger, teenagers in the young 20s. So what are they getting right now? Because people were not happy with them not too long ago.
No, and as you can see by me, I'm not the regular Abercrombie shopper, but I think social media really plays a big role. You see more and more brands, especially on Instagram, they're able to get their product in front of their customers. For instance, if you follow the brand, they're able to get their sales out there. They're able to get the items that they want in front of the customer. And I myself am guilty of being an Instagram shopper. So once those ads are there, I'm like, you know what, I could use this, so I like this. So I think that they're doing a good job at that, and a lot of other brands as well.
All right, Reggie, thank you. Coming up, stopping the bro culture, the new employee One Coffee startup thinks will actually be the key to change. Take a look, though, at some of today's losers on Wall Street, and there you see them. Let's take a look at the top trending stories on Yahoo Finance right now. Former Bumblebee Foods CEO, he was found guilty today of playing a part in a fixed tuna price conspiracy, and he was not alone. Starkist and Chicken of the Sea were also involved. This was back in 2017. Bumblebee Foods agreed to pay a $25 million fine after pleading guilty to the accusations against them. Constellations Brands is saying goodbye to craft beer brand Ballast Point. Back in 2015, it bought the brand for $1 billion. That was the largest single amount ever paid for a craft beer company. It is being sold to King's Convicts Brewing for an undisclosed but significantly discounted price. Oreo revealed its mystery flavor churros. While many consumers guessed the flavor was funnel cakes, graham crackers, or gingerbread, the person who guessed correctly won the mystery Oreo sweepstakes and got a prize valued at $50,000. We'll be right back.
Now it's time for our buzzer beater round. 3 stories, 1 minute each. Let's get started with Kamala Harris. The California senator is suspending her campaign for the Democratic nomination for president. We're seeing some backlash on the heels of her announcement, and indeed, even in her announcement, she threw some shade at the billionaires who are still in the race. I've also seen a lot of commentary that the one black woman who was in the Democratic field is now gone, and that there's a lot of sort of hand-wringing about all of this.
Well, I think what it really comes down to is that she didn't really clearly define what she stood for early enough. It took her a long time to really outline her health care plan. She had sort of this convoluted plan to forgive those on Pell Grants who started a business for 3 years in a disadvantaged area. And a lot of these policies just really didn't resonate with voters early on.
Bye-bye. I'd like to see the field get culled further. It is time for people to be dropping. Kamala, you know, I like a lot of what she stood for. But look, the Times, let's give credit where it's due, had a very good report about a week ago detailing all the problems with her campaign and the way it sounds like it was very poorly run. I would like to see more people drop because the field is just too big at this point. And so I do think that the shade she threw at people like Deval Patrick, Bloomberg, is correct.
A coalition of gun reform advocacy groups put out a scorecard grading companies on their stance on guns. Only 4 companies got A's, including Walmart, while 16 of the companies got F's. Want to weigh in on this?
Well, Walmart should be very pleased. As we know, Walmart just recently changed its stance on guns, and of course Dick's did a little over a year ago, and eventually that has done well for them. They had a very good recent earnings report. Of course, the stock dipped at first when Dick's announced first we'd no longer be selling assault-style rifles.
But did you see
some of our stores, Field and Stream?
Pull that graphic back up, please. Did you see Chick-fil-A and McDonald's?
Well, it's because they're not actively lobbying for gun control.
Right.
Exactly. I mean, what this criteria was really based on, it was in-store open carry bans. You got points for that. A lack of political giving to some of these NRA recipients, essentially in Congress, and then public demands on action for gun reform. So that's how we actually arrived at this list.
But do companies have to be activists now?
Right. Why does McDonald's or Chick-fil-A have to weigh in on
Well, I think there is an expectation now that companies do have a certain responsibility to not only to shareholders, but to the general public.
And when there's a shooting in a store, like at Waffle House, then there is
public safety issue.
All right, here's another part of the culture that maybe needs to change. The bro culture. A New York-based coffee startup has hired a philosopher in an attempt to change its corporate culture. It's a former professor of one of the founders of the company. And apparently the founders looked around one day and realized it was all white dudes they had gone to college with, and maybe they needed to take a harder look at things.
I think this is a commendable move. I mean, especially when you're a startup. The first hires that you make are going to be the ones that ultimately shape the culture. I mean, whether or not this actually results in change remains to be seen. I mean, that's something that this article actually caveats, is that maybe changes haven't taken place as quickly as it could have, but it's a starting place.
It's a starting place, but there is some irony. I mean, yes, I hope it helps, and maybe this will be a great new model, but there is some irony in, like, this is where we are, that you have to bring on this zany from left field of a type of person to block your own unconscious biases against hiring.
Can I just go get a cup of coffee is what you're saying?
No, just hire better. When will we get to the point where enough examples of this happen that people realize, instead of needing to bring on a philosopher?
I know we got buzzed, but I have to read my favorite quote from the story. Philosophy tells you how to spot BS, was according to the guy who they hired.
Kierkegaard, for sure.
And he's owned and managed a wholesale fireworks company for 15 years, so he's not just out of left field, he's a businessman.
Sure. Sounds like Nietzsche himself.
Dan, Emily, thank you very much. Let's take a quick last look at the markets as we leave you. They are all rising today.
We want to thank you for being here, but make sure to tune in at 3:30 Eastern. The final round is going to speak with President of Nestle Foods Division on their new plant-based meat product. You don't want to miss that. It's all the rage, but right now, Wi-Fi PM is going to take you through the next hour of trading.
It is 1 p.m. in New York City, and all three major indices are rebounding today, on pace for December's first close in the green, fingers crossed, on the back of a positive U.S.-China trade update. On tap for today, U.S. negotiators reportedly warn against reading too much into President Trump's trade rhetoric. And we're breaking down a new report noting that the odds are good to get a deal before more tariffs kick in just 2 weeks from now. Plus, weak private hiring data hints the economy could still be on shaky ground, with the latest reading showing the fewest workers hired in 6 months' time. And caught in the trade crossfire, how American winemakers could take a hit if a trade deal is not reached in time, and how a new tariff war with France could shake up the battle for Burgundy lovers. The CEO of famed winery Silver Oak will join us to discuss that. All that and more. This is Wi-Fi PM. Good afternoon, everybody. I'm Zach Guzman, and joining me on Wi-Fi PM today is Yahoo Finance's Sabeel Marcellus, along with the Morning Brew business editor and podcast host Kinsey Grant, back with us in studio.
Always a pleasure.
Always a pleasure. Sabeel, always a pleasure to have you here on Wednesdays as well. We're taking a look at the market action here, and it's green across the board. As I said, on pace for the first green day in December. It's been a lot of red, though those are Christmas colors. The Dow up 196 points, the S&P up by about 21, and the NASDAQ right now up by 0.6%. We'll see what happens throughout the hour. But first, the reason why we're seeing green today, Bloomberg is reporting that U.S. and Chinese negotiators are moving closer to a phase one trade deal. Markets rebounding over those renewed hopes after the Dow ended 280 points lower yesterday. American officials reportedly expect an initial deal with China to be completed before December 15th, when another round of tariffs are currently slated to take effect. And this comes as President Trump expressed optimism during the NATO conference earlier today. Take a listen.
We're talking to China, as you know. Those discussions are going very well, and we'll see what happens. But we're talking to China. We're talking to others.
All right, well, there you go. Guys, previously Trump suggested he could wait until after the 2020 election to get a deal done with China here. What do we make of the back and forth? I mean, that's somewhat to be expected. That's the way we've seen this play out since the get-go here in the tariff war. But at least negotiators saying don't read too much into what President Trump's been saying ahead of this.
Really smart move by President Trump. He was totally bluffing yesterday when he said that he could wait until after the 2020 election, because that says to China, well, this economic pain is going to go on for many more months, and it did bring them back to the table. And now we know what's holding them up. It's really how much the U.S. is willing to drop in terms of tariffs before we can get this mini trade deal. That's the sticky point, and that's where President Trump is obviously trying to save face when it comes to how many tariffs he wants to leave on imports and how many he wants to take off.
Yeah, Kinsey, I mean, when we look at it, I'm having flashbacks to November when it was just the idea of taking these tariffs, planned tariffs off the table, suspending those. I would suspect that would be base case expectations for what we have coming up in December.
I mean, you could expect that, yes, but I think that the norm now is expect the unexpected with this whole U.S.-China trade deal, right? I mean, the last time I was here, we were talking about them trying to strike a phase one deal. That obviously hasn't happened yet. And I think that using these sort of leverage points with, like you were saying, that he was bluffing yesterday, it almost makes you think, is President Trump eventually going to become the little boy who cried wolf? And all of a sudden, all of these headlines are not going to mean anything eventually.
Yeah, well, I mean, he is playing, when we talk about 2020, there is some kind of doubt to the idea that he can wait until after the election, because we're already kind of seeing some data sticking here when we talk about companies not sure about hiring, where to invest, when we talk about the question marks that are surrounding the trade war right now. I mean, do you buy the idea that he can wait? I mean, you call it a bluff. I'm not so sure that everyone agrees that it was a bluff so much as him just talking kind of the points that he's been talking throughout as he gets ready for the election in 2020.
Yeah, no, President Trump, the reason why I'm calling it a bluff is because he desperately wants a trade deal to the point where he's willing to accept a mini trade deal. He's willing to settle for that because he knows the impact this has on the markets. And yesterday, when he said that he'd likely wait for the 2020 election, well, the Dow dropped more than 400 points. Today, we're seeing it recover from a 3-day slide. He knows it's a headline-driven market, and he definitely wants China to come to the table as quickly as possible.
Yeah, over those 2 days, it was a 400-point drop roughly when we look at it. I mean, that was, he called it peanuts.
Right. This is my favorite part of this story, is that he says he doesn't pay attention to the markets, but, you know, that's half of his Twitter feed right now.
Yeah, every day we get a new all the
however
records.
many points, right?
And when it's good news, it's definitely on the Twitter feed. You can just wait on it.
Yeah, so the idea that it's just peanuts and he's not too worried about it, I mean, you can doubt that, I think, fairly when we look at this. But nonetheless, U.S. negotiators saying don't read too much into the idea that President Trump is comfortable waiting till after 2020 for that phase one deal. We'll see what happens. As we said, only a couple weeks' time, and we're going to focus in on how it could be impacting winemakers later on in the show. When we talk about the underlying data here and the impacts the trade war are having on the U.S. economy, jobs are closely watched, and the November ADP report is out. The private sector only adding 67,000 jobs last month, missing the median estimate in a Bloomberg survey of economists. They had expected 135,000 jobs. So we're waiting on, of course, the official numbers when we come out this Friday. But that's not necessarily a good sign ahead of the big Friday jobs report, because generally these tend to go in hand, and missing that estimate does not bode well for Friday.
So all eyes are definitely on Friday. We'll see what happens with the jobs report. But we're seeing a lot of problems in the private sector, especially when it comes to the tariffs. They're dealing with the cost, trying not to pass it on to consumers, and they're trying to, at the same time, shore up their margins. So we're seeing them slow down when it comes to hiring, and that's definitely reflected here. Now, this is worrisome because if the private sector continues to add less and less and less jobs, we're going to see the unemployment rate eventually tick up. And that's pretty much President Trump's bragging right there, is that the unemployment rate is at a 50-year low. It's at 3.6%. But it'll be hard to keep that low if the private sector continues to struggle this much to add more jobs.
Yeah, I completely agree. And I think that one of the talking points that we've been talking about for almost this entire year is this tight labor market, that there are, just not enough workers and people are trying to hire a lot. But now this ADP report kind of suggests it's more of a demand side as well, not just the lack of supply of able-bodied workers. It's that these people just aren't hiring. That, and also I think it's interesting to note here that GM doesn't use ADP. So GM's strike ending, they're going to have a huge influx of workers. I think it's something like 48,000. So that might be a little more promising for Friday's report, but at least for today, not so good.
Yeah, that's something that we've been watching. I mean, GM has played out a role across the board when we think about the labor sector.
Yeah, for sure. I mean, definitely, when we talk about the power of unions nowadays, we definitely saw that GM strike. It cost the company about $3 billion. So it shows that unions are still strong. But at the same time, there's also an investigation into auto union having to do with Fiat Chrysler, and GM is also suing them. So it'll be interesting to see what the corruption federal investigation, what comes out of that. But when it comes to union power, they're showing they have more power. When it comes to the jobs report, so those who are bullish are saying that, well, the jobs report won't be as bad as the ADP report because of that strike. So we'll see if that actually pans out.
I mean, the trend has been lower in terms of hiring regardless. So, I mean, that's one of the things we hear from people all the time, including the Fed. Don't take one jobs report out of context, kind of pair it with the last three, take the average. But that has been the trend, fewer and fewer jobs being added when we look at it. So any downturn, obviously, investors are always skittish when we talk about trade concerns. That would be another thing to point to and say, uh-oh, this could be bad news and more pressure on the president, perhaps, to get a deal done. Well, coming up, what the big leadership shakeup at Google parent company Alphabet means for the tech giant as Larry Page and Sergey Brin step aside. More on that when Wi-Fi PM returns. Welcome back. Today we're chatting a leadership shakeup at Alphabet. Co-founders Larry Page and Sergey Brin are stepping down as CEO and president, respectively, with Google CEO Sundar Pichai taking over. Pichai will now become the chief executive of both Google and parent company Alphabet. The company's founders will remain on the board as the two largest individual shareholders with majority voting power. But the question remains what it means for the tech giant's future. But guys, I mean, Sundar has been leading this company for quite some time now. He's been in the role for years, controlling the piece of the company that brings in all the money. So, I mean, you don't just give the keys to something like that to a guy you don't trust and respect. And obviously, I think by stepping aside, they're kind of saying that, look, he's been fine in the role, and he's going to be fine with an even bigger role now.
Yes, but is it a vote of confidence or setting him up to take the fall? I mean, that's the big question, because Google is facing a lot of internal challenges right now. They are firing employees, and there's other employees saying, well, they were fired because they're trying to form this union. Also, employees are upset with Google for several number of reasons. One of the reasons is for working with the military. Number two, for trying to build this censored search engine in China, which many say was against, American principles of free speech. And number three is the sexual harassment issue. executives who left the company with $1 million in their pockets. I mean, what does that say about accountability? So there's a lot going on in Google internally, and now Sundar Pichai is going to have to ride that wave. Meanwhile, the co-founders kind of take a step aside. They're going to be on the board, and he's going to have to fight the battles, be the front person to the media and to the world and to the company dealing with all that.
He's kind of been the front person since 2015 when he came in, though. I think that he kind of did take that role a little bit, and kind of what we're seeing from the two co-founders there, I mean, they had already kind of been in the back seat a little bit, and now you kind of wonder how much further can they be in the background than what they already were, because they weren't doing, at least in my opinion, too much.
Well, the challenges have gotten worse for Google than they have over the past couple of years. So it's definitely going to be a test of Sundar Pichai, whether he's able to help the company grow and also deal with the internal struggles.
Right, but I think it's a good sign that Google is offering this kind of test, whether it's a test or not, for Sundar Pichai, because this is a different company than it was 21 years ago. And they made the example in their blog post that a 21-year-old child, you would not want to, still live at home. You want that child to go out and experience the world and grow up and face challenges that are inevitable in life for a person and for a company.
Yeah.
And so I think that, saying, hey, we'll step aside. This is a different company than it was when we founded it, but that's a good thing, is what we need to see more of in tech.
And reading that.
Try telling Mark Zuckerberg that, because I don't think he's going to leave that leadership seat.
Do we want to
soon.
talk about dual shares, right? Some of these CEOs, they just have complete control over all of the operations of their company. They are virtually unfireable. So for someone to take leadership here and say, we've done a good job, we're proud of what we've built, let's let someone else take the reins now, I think is pretty admirable.
I mean, in terms of separating it, right, everyone made a lot of the idea of separating Google from Alphabet and that whole structure when that announcement was made years ago. But I mean, a lot of people did also, on the flip side, support the idea that, okay, you can have your moonshot ideas separate from the core business when we talk about ads and how Google actually makes its money, and keep those things separate. But now to have one person manage all of that, does it seem like, to use your words, maybe not setting him up for a fall here, but could it be potentially too much for someone just to have all of that on one plate?
I think it's definitely going to be a challenge, so he's going to have to rise to it. But at the same time, it didn't really make sense. Most analysts, people on the street, when they're talking about Google or Alphabet, they say Google. It's pretty much like he might as well be the CEO of Alphabet if he's going to be the CEO of Google. And also, I don't think it really made sense to just have two CEOs and one president. I mean, might as well just clean it up and just put one front person dealing with everything.
Yeah, maybe he'll be able to answer some questions when regulators do start pressing him for those. As we know, Google's kind of been a little bit absent from some of those discussions, and now that Sundar Pichai is running the whole company, perhaps he'll be able to answer those questions. Well, Uber, speaking of tech companies in the spotlight, Uber is joining that realm in the spotlight yet again after the ride-sharing giant CEO Dara Khosrowshahi addressed the company's responsibility when it comes to data transparency. Take a listen to his remarks at the Economic Club of New York earlier.
We have to be transparent with our stakeholders, society. We, for example, share traffic data, anonymized to make sure that we protect data, et cetera, with our cities. That's data that we could keep to ourselves or data that we could share with our cities to actually help them shape how they think about traffic, et cetera. And you will see more from us as it relates to this theme of transparency, kind of opening up and telling the world, hey, this is how we see the world internally. We're going to put that same exact picture externally, and we're not going to hide anything.
All right, guys, obviously transparency, a constant theme when we talk about tech giants. Do you buy what Dara Khosrowshahi is saying there? Kinsey says no.
I do not. I do not buy it. I think that these CEOs make appearances like this one and say, we promise we'll tell you everything you need to know. We'll be transparent, no more secrets. But do we ever see any real action on it? And is anybody really going to care that Uber is coming out and saying we're sharing your data with people to make cities better? I don't think so. I mean, I think that they're interested in some more of the nitty-gritty of what's happening with their data. Can they trust a company like Uber, which has had many a transgression in even just recent years and months?
Track record, not the
Not
greatest.
great, yeah.
I mean, the proof is definitely in the pudding. Don't tell me, show me. I want to really see how you're going to actually be transparent with the data. But we have to kind of separate it. Is he talking about transparency with consumers? So like our data when we go on Uber, so the kind of data like, oh, she went here and she picked up groceries here, that she went home, like basically like the layout of what I did for my day with Uber, driving with Uber? Or is it about the data that cities need when it comes to traffic? Because we know that Uber faced a lot of challenges, for example, New York City, cracking down on ride sharing because of the traffic it creates with a lot more cars on the road.
It seems more like that. I mean, especially when we're talking about their battle with New York City to kind of prevent getting drivers shut down because of all the congestion. I'm not entirely sure a company like this would share data that would kind of seem to bolster the efforts of a city to shut you down and prevent you from making more money. I don't know why, especially when you're a public company, you have to answer to shareholders, and what we've seen from tech companies in the past, why you would present that data that would ultimately work against you.
Yeah, I have no idea.
I think they would. I think
no tech company would do that.
Yes, but I think he feels obliged to because of, for example, the situation that happened in New York City, where you've got city officials who can actually pass laws and ban Uber from the streets, and that will definitely, crash their business right there. So in terms of transparency, I think he's talking about lawmakers, talking about city officials, people who actually can impact Uber and prevent it from being on the streets.
Yeah, and let's not forget, too, I mean, all this comes against the backdrop of losing their license in London, too. Still fighting over there across the pond to make sure that they're still able to operate. A lot of question marks from people saying, can I even order an Uber? Obviously, that doesn't look good. And maybe that, too, working with local officials, clearly something that the company needs to work on if that's something that's up in the air. Those concerns had more to do with actual rider safety concerns, which might also play into data, whether you have data on drivers and what they've done in the past. Also potentially something worth looking into.
Exactly. It's such a broad issue. That's why I asked, what data are you talking about specifically? Because there's a way you can play around and say, I'm being transparent. Meanwhile, he's only talking about city officials, but he's not talking about consumers.
Right. To me, Uber has bigger fish to fry than am I sharing data with a city? Are they sharing data about where I'm going and what my location is? That safety issue is definitely more pressing to me than trying to reduce congestion.
Yeah, for sure. All right, well, we'll leave that there for now. A lot of tech companies facing that drama. Uber has their own devils to work through. But just after the break, with Senator Kamala Harris dropping out of the 2020 race, what happens with her endorsements? And more importantly, what happens with all the cash her campaign raised? We're answering that next. Wi-Fi PM is back in 2. Welcome back to Wi-Fi PM. We're checking the market action we're seeing right now. And the major indices on track to post their first green day in December so far, with the Dow up 187 points and the NASDAQ, as you can see there, up just shy of 50 points. We'll see what happens throughout the hour. But first, we're chatting politics. Senator Kamala Harris ended her 2020 presidential bid yesterday, dropping out with more than $10 million of campaign cash on hand, according to recent Federal Election Commission filings. So where does that money go now? Kristen Myers is joining us on set to answer that question. So where's it go?
She has to take the money and run. I'm just kidding. She's not.
She's
not allowed to do that, guys. So there's actually several things that a candidate can do when they decide to wind down their campaign. You notice they always use the delightful phrase, they're suspending their campaign. It kind of leaves the door slightly open that maybe they'll run again in the future or, pursue something else. So obviously Kamala was pursuing the presidential bid, but she's up for re-election in the Senate in 2022. And one of the things that she can do with that money is take it and move it over into an election campaign for a Senate run or a gubernatorial bid, for example, or if she decides to join Congress, she can do that. Now, there's a couple of other things that she can do. She can pay for moving expenses. Wherever her, campaign headquarters are, she can pay to move all of her stuff out of there. She can buy gifts of a very small, I want to say a nominal value to people that aren't in her family. So maybe she wants to give maybe a parting gift to everyone who worked on her campaign. She's allowed to do that with some of the money. With $10.5 million, that's a lot of gifts that she's going to be able to buy. She can donate it to charity. She can donate it to another candidate. I will say, however, she can't just inject almost $11 million into someone else's campaign. There are actually caps and limits to how much she can give to any candidate. But often, because I spoke to some people that were previously at the FEC and some campaign finance lawyers, they said most often they choose to donate it to local party committees. So let's say she wants to donate it to the California Democrats or something like that. She's allowed to do that.
That's still a lot of different individual kind of divvying up to do in terms of getting that. $10 million is a lot of money to kind of slice and dice.
They can also give it back. I mean, that's also allowed. They can also just give it right back to the donors that gave it to them, although a lot of people said that's kind of more trouble than it's worth. Well, because it's a very big pot.
Also awkward.
How do you decide, right?
No, I mean, they know you dropped out.
So. Right. So, but do you give back the money that's unused? Do you just try to divvy it up among all the donors and just give back an equal amount? It's a lot of work to try to give money back. The one thing, and I will say this, the one thing no candidate is allowed to do with their money, use it for personal use. However, it happens all the time. It's
I'm so glad
all the time.
So glad you mentioned that because we don't expect Kamala Harris to do anything wrong with this money. She should probably do the right thing. But then there's Congressman Duncan Hunter, who's in the headlines because he pled guilty.
Yes, he's going.
So what was he up to?
So he took his, and I actually mentioned this in my piece, which is now on yahoofinance.com for anyone that wants to read it. He took his money and he used it to take vacations. Allegedly, he used it to pay for vacations, to pay for his pet rabbit Egbert, to fly on a plane.
It's a nominal gift, though. I mean, we're talking.
That's what he did with his campaign funds. And listen, there's actually something called dormant campaigns, these zombie campaigns, where they just keep on paying money out of their funds to people, consulting services, even though the campaign is dead. Mitt Romney's campaign was found to be one of those dormant campaigns, and Congressman Mark Takei from Hawaii, he died. And his campaign continued to pay money out to people.
Interesting.
So, I mean, exactly.
Any repercussions for a situation like that?
Very good question, Sabeel. No, there isn't.
Fantastic. You love to hear that.
No, but I mean,
phantom account.
The FEC,
the loose ends to tie up.
The FEC has regulatory authority over this type of thing, but they right now don't even have. 3 of them are missing, so they can't investigate anyone, and they definitely can't enforce any sort of election or campaign fraud laws. So.
Yeah, well, let's talk about candidates that are still in the race. Then still have cash to put to use here. Joe Biden being one of those, one of the leading 2020 candidates right now. And he's taking aim at companies criticized for U.S. tax avoidance. Bloomberg reports the former vice president plans to pay for $3.2 trillion in policy proposals with new taxes on massive corporations like Netflix and Amazon. And Kristen, according to Biden's campaign estimates, that tax would raise $400 billion over a decade.
$40 billion a year for 10 years,
Yeah, I mean, you've written about this, and Senator Sanders has retweeted your article about this, and you talk about Amazon and other companies not paying
hair flip.
anything in taxes. So, I mean, at least Joe Biden's trying to kind of siphon off that interest and kind of address the problem.
Yeah, so, I mean, Biden has kind of famously been far more centrist than some of the other candidates on that stage. And he has come out, and even his campaign has come out and said, and even in reference to some of these taxes, that they want to actually put forth feasible policies, things that they believe that he's actually going to get done. And what we saw with the Tax Cuts and Jobs Act, you saw the corporate tax rate lowered, which meant that the effective tax rate was lowered even further. Companies like Netflix, like Amazon, Chevron, Delta, for example, they don't pay anything in tax. And so what Biden wants to do is essentially put a minimum tax rate, effective tax rate, that book tax, at 10%. And then he's got a whole multitude of other taxes that he wants to add, taxes on things earned abroad by companies earned in foreign countries. He wants to double that to 21%. Right now it's like a GILTI tax, GILTI. That's 10.5% right now.
And sanction, interesting to sanction countries that are also kind of tax havens that we've seen some
Yes,
corporations.
Cayman Islands, for example. I think Bermuda is another one. Ireland, I believe, was also named. So he wants to sanction those countries, essentially to prevent companies from just hiding money in those countries.
So here's the thing, right? So recently, Biden was saying that Pete Buttigieg stole his healthcare plan because he's offering Medicare for all who want it. So you have both the public option and the private insurers. But now when it comes to Biden, is he stealing Warren's plan? Because he wasn't really the one on the debate stage, criticizing all these corporations, saying, I'm going to tax the wealthy, tax the corporations. Right. But now he's come out with this plan. So is he basically ripping a page out of Warren because he's realizing that he's going to need that kind of constituency, that part of the Democratic Party, if he wants to be the nominee?
I mean, I would say both yes and no is the answer to that question. I think that when you have Bernie Sanders and Elizabeth Warren on that stage, if you are a centrist candidate like Klobuchar or like Biden or even like Buttigieg, you're going to have to swing a little bit further to the left, really, in order to get that nomination. You're seeing those two candidates really push the other candidates on that stage further and further left. And it's forcing those candidates to talk about things like wealth tax, like corporate tax, really drilled in on who is your healthcare plan going to help? How many people is it going to help?
That's kind of the question in my mind, because we're seeing a watered down version, right, kind of offered by Joe Biden. But from what we saw in President Trump's victory is that how can you win if you're catering a more watered down version to the base, especially in the primaries, when we're talking about the way that he rose, playing to the far right. And you've got on the left side, you've got people like Biden now inching slower and slower to the left.
You have to wonder what's more effective. Is it these giant Warren kind of plans that are maybe unheard of in the business world? Or is it someone like Biden who has kind of occupied that more moderate space in the candidate?
Things that he can actually
I think it's just, at that point, I actually just think it's your thought process on actually how you're going to get to the White House in reality. Because while your plans might be incredibly grand if you are a Warren or a Sanders, right? I think we've all discussed this. It's unlikely that they're going to be able to get all of their plans through that they've been proposing on stage. But what they do for the people is show them what kind of candidate they are and how they are thinking long term of their strategy for the United States, right? Now, Biden is coming out and saying, and look, these are plans that I actually think I'm going to be able to take effect when
they're all saying that. They're saying my plan is going to, they're not running on, my plan
I don't know.
maybe will get blocked.
Do we all
by
think
DC?
that Warren and Sanders, all of Warren and Sanders' plans are going to take effect? I don't know.
Green New Deal might get through all
but
very
they're campaigning
lofty.
on it. But here's the thing, they view Biden as a non-event for markets. That's how investors feel about him. But now that he's inching more to the left, it'll be interesting to see how investors start to feel about him if he continues pounding on this idea of more corporate taxes.
I think Biden knew that he was not going to be able to move forward unless he introduced some of these plans, but staying true to himself, it's a very watered down version of what we're seeing from the other candidates.
No malarkey from Joe Biden as he continues his no malarkey tour around the country. All right, Kristen Myers, thank you so much. Appreciate it. Got to take a quick break, but we're back with the market's biggest movers on Wi-Fi PM right after this. All right, let's check in with Scott Gam on the floor of the New York Stock Exchange. Scott?
Hey there, Zach. Well, stocks rebounding from yesterday's losses. Take a look at the Dow, up nearly 200 points, led by names like 3M, Goldman Sachs, Dow Inc., and JP Morgan. Even the laggards in today's session are down by less than 1%. Those names are Visa, Intel, and Walgreens. Now, we haven't completely recovered from yesterday's nearly 300-point drop in the Dow, but there is some trade optimism, and we're on our way towards recovering some of those losses. Today, in fact, is the first up day for stocks for the month of December, Zach.
All right, Scott Gam on the floor of the New York Stock Exchange. We'll check back in with you later. But next on Wi-Fi PM, Americans still getting crushed by credit card debt, but some are getting more crushed than others. We'll break down which states are in the worst shape. We're back in 60 seconds. Good afternoon and welcome to Wi-Fi PM. I'm Zach Guzman, and joining me today is Yahoo Finance's Sabeel Marcellus, along with the Morning Brew business editor and star of their Business Casual podcast, Kinsey Grant, back with us in studio.
Thank you. Star of a podcast.
Star of the podcast, and now star of Wi-Fi PM as well. We're checking the market action right now, and you can see there green across the board. The Dow approaching a 200-point gain here as the S&P and the NASDAQ enjoy the rally as well. We'll see what happens in Act 2 of Wi-Fi PM. Well, 9 out of the top 10 states with the highest credit card debt burden in America share two things in common, according to a new study by creditcards.com. And Sabeel, you have been digging into what those are.
Yes, absolutely. So credit card debt is highest in the South. And that's really because of the economic conditions in the area. So the top 5 states with the highest credit card debt are number 1, New Mexico, which did vote blue, but the next 4 are all red states: Louisiana, West Virginia, Arkansas, and Mississippi. And the way creditcards.com was able to figure out and rank which states had the highest credit card debt burden is that they looked at the annual household income for those states and compared it to the total credit card debt. So you're able to tell how many months it's going to take them to actually pay it down if you use the recommended industry 15% rule, where you set aside 15% of your earnings to pay down debt and how many months that would take. So New Mexico, residents there, it would take them longer than anywhere else in the country. Now, when it comes to the geography of who has the most credit card debt, so when you look at it, it's mostly states in the South, and it's because of the economic conditions there and also what led to President Trump being elected. A lot of them voted for President Trump because they're facing high unemployment and also lower household annual income than the rest of the country. So President Trump has been elected, and the question is, of course, has anything changed for them on the ground economically? And these trends are actually very slow to change. So the short answer to that is no. Conditions are pretty similar right now in the South as they were when President Trump got elected back in 2016. But the question is, who are they going to blame for that? Do they want President Trump to get another 4 years to help fix those economic conditions? Or do they actually believe that a Democrat would actually make a difference? For example, like Elizabeth Warren with a wealth tax or something like that.
Well, especially when we're talking about people who may feel left behind, right, by the system when you're struggling with credit card debt and you're stuck in that system and you're hoping for anything to change. You're supposed to be an outside candidate, someone that would change the whole system. And maybe if you're someone who's still stuck in credit card debt, maybe someone who hasn't had that happen. Although you would look at the headline numbers and say unemployment's still at a 50-year low. Things seem to be working at a macro level, but on a more specific level, obviously, perhaps in the South, when it comes to credit card debt, still problems.
Yeah, and I am from the South. I know I don't sound like it, but I have to say,
Which state? Yeah, you got to specify.
I'm from Tallahassee, Florida.
Oh, there you
which
go.
Is,
Florida.
It's basically Georgia. So in Tallahassee, I was just there for Thanksgiving, home for a full week, and opinions have not changed in my experience when it comes to President Trump. The fact that they haven't experienced any sort of meaningful change to their median income in my hometown has, basically no bearing on the fact that everybody is still wearing Make America Great Again hats.
Yeah, it's true. I mean, I guess, in the grand scheme of things, it's not that you put your own physical, financial well-being squarely on the president's shoulders.
Right, but at the same time, voters do tend to look at their wallets, at the ballot box. But we can see it be different here when it comes to states in the South. But when it comes to Wall Street and what they're hoping for, so a lot of people are hoping for President Trump to be reelected because they believe it's good for stocks. And in fact, Eurasia Group actually came out with this new report saying that they believe that President Trump has a more than 50% chance of having more electoral college votes than he did back in 2016.
Yeah.
And that's despite the fact that his national approval ratings are below 50%. But when it comes to those key swing states, his approval rating is good enough that he could squeak by and possibly win re-election. So it's going to be tight no matter what.
Yeah, I mean, it's just funny, though, when we look at the map of breaking all this down again, kind of to square it away with another creditcards.com report that we got before, looking into how Americans are, whether they're good or bad at managing their money. It was red states where people were better at managing their money, but those red states were not predominantly in the South. So those do square away with that because the South, a lot of credit card debt here. And in their other report, it was mostly the red states in the North, such as the Dakotas, where people were doing the best. So very interesting.
This is on average, right? So
Yes.
there are still individuals who have a lot of credit card debt, like in the Northeast.
Indeed, there's problems. I mean, people have problems in all those states. You're going to find them out there for sure. All right, well, after the break, Cowen naming its best stock ideas for next year, including one retailer that's been on a tear in 2019, topping the S&P 500 and the overall retail sector by a wide margin. So what retailer is it? We'll tell you when Wi-Fi PM returns. Welcome back. Target is hitting the bullseye, according to Cowen. The firm is naming the retailer a best idea for 2020, noting the retail giant's digital business is keeping up against the threat of Amazon. Cowen analyst Oliver Chen stating in part, quote, "We continue to foresee an environment of accelerating bifurcation in retail with Target well positioned as a long-term winner." And guys, I mean, just looking at 2019, Target's been a winner this year, up 88% on the year, destroying the 6% gain posted by the overall retail sector. But do you buy the idea that Target can keep up the pace in 2020?
Absolutely. In fact, over the first 2 weeks of November, Target and Walmart had more online sales than Amazon did. So they can definitely keep up. They've learned from Amazon. They know how their warehouses work. They know how quickly they can deliver, and they're basically copying that format, and it's delivering huge dividends for them.
Yeah, I have to agree. I'm pretty bullish on Target right now. Like I mentioned, I was just home and went to my hometown Target for the first time in years and was blown away by all of the different products that they have there that you either wouldn't be able to find on Amazon or it would be too difficult to find on Amazon. You know, they have the end of aisle units with flamingo razors for $8 that, you know, that beats a lot of prices
Like the scooters
elsewhere.
you're talking about the scooters?
The razors?
Actual razors?
No, like shave your legs razors.
Okay.
I know, a scooter.
Last time I was in Target, it was a riding scooter, and I was like,
I know,
if that
I
was
know.
that cheap,
You weren't shaving your
I'm
legs.
buying it too.
They make it easy to get the things that you need, and sometimes that is not the case on Amazon, even though that is one of their core tenets, is making your life easier. Sometimes you just can't find what you need on Amazon because it's too hard to search.
That's true.
Right. And it's also Target's e-commerce has gotten so much better. The experience from the user perspective is so much stronger than it used to be. Target used to be notoriously bad when you're trying to order something online, and I think they've really stepped it up.
Yeah, and speaking of stepping it up, now Amazon has to step it up, and this is an opportunity for them to clean up their act because there's so many complaints about counterfeit products being on Amazon's website and all that. So Amazon needs to clean that up because Target has those brick and mortar stores that people can go to touch the actual items and make sure that they are legit.
I mean, when we look at it, they've obviously been focusing on e-commerce sales, the digital side for Target. Year-over-year revenue rise 31% last clip. That's been a big area of the company. When we talk about things that the company's doing well, still has room to run though, and that's kind of the point here. In the third quarter, e-commerce represented only 7.5% of the company's overall sales. Of course, not neglecting curbside pickup either. The first retailer to get to all 50 states offering curbside pickup when we talk about e-commerce. Working well in tandem with the in-store experience, the one you're speaking to. I don't know if the one that back in Florida has the Disney component too, but they have also teamed up with a lot of different people out there, companies, to sell their products, Disney being a huge one, to get people in store as well.
See, Walmart is bringing the item to your fridge. So can Target do that? Right?
Can they hop on that train as well? We will see in 2020. Cowen certainly seems to think it will still be a winner next year as well. But coming up, wildfires and tit-for-tat tariffs hitting America's winemakers hard with another round of tariffs slated potentially in just 2 weeks' time. We'll chat with the CEO of famed Northern California winery Silver Oak for more on how it's affecting our vino right after this. Well, it's a whole new take on grapes of wrath. French wines are in the crosshairs of trade tensions. The Trump administration is threatening tariffs as high as 100% on roughly $2.4 billion worth of French products, including French wines. And the move comes in response to a new French tax on digital services that will impact American tech giants like Google and Amazon and would come on top of a 25% tariff already in place. Joining us to discuss is Silver Oak Cellars CEO David Duncan. David, thanks for being here.
Hi, Zach. Glad to be here.
One of my favorite wine brands out there. So to see all of this happening right now, I want to get your take first on the way that tariffs are impacting the product you make, 400 acres of vines out there that you're talking about here. How do tariffs impact your business?
So this is new information, obviously, and I can't totally address that.
Yeah.
What's been happening, the tariffs that Canada put on American wines has affected our ability to sell wine in Canada.
Uh-huh.
And I think if French wines are coming into the U.S. at twice the price, it's going to affect people's French wines, and they can come drink California wine.
Right, it'll be good for you, right?
I think it would be a plus, right? Because you've got the French wines getting hit potentially here with those tariffs, but also in China, one of the fastest growing wine markets out there. I'm not sure how much business you do with Chinese consumers.
We do a lot. And
yes,
so the
we're potentially
unrest in
talking about-
Hong Kong, then those things, we actually sell wine in 52 countries.
Yeah.
And so there's a real international presence, and so having the tariffs and the trade wars and all that kind of thing, I think affects everybody. And we have exported our first 2 cases of wine into France too. So we're selling wine in France, which is fun.
Yeah.
Something new for us. But yeah, so it does have an impact, and I think it primarily impacts the consumer ultimately.
What is interesting about you importing wine into France is that I was reading Oregon has become kind of the new Burgundy U.S. capital, going up against French wines as well. So, how much of a push for Silver Oak is there when we talk about global dominance of really establishing U.S. wines?
Yeah, so my family also has our Toomey wine brand, and we actually purchased a property in Oregon in 2017. And so we have a new offering of Oregon Pinot Noir that's fantastic and really beautiful. We just released the first wine from the winery, and I think the potential for Oregon is huge. There's a lot of interest from the wine business, and there are excellent wines being produced, and I think it's kind of really honestly probably one of the most exciting regions in the world in terms of future potential.
With the California wildfires, I'm always worried about people's properties, number one. But number two, the second thought in my head is, what about the wine?
Save the grapes.
Right, exactly. It's so important. So how have you dealt with the wildfires?
Yeah, we've had now kind of effect the last 3 years in a row, and the most recent wildfire did burn the mountains behind the winery, but we had no impact on the wines really whatsoever. We have generators at the winery, so while the power's out, we can continue to do the winemaking operations. This is obviously just at the end of harvest. This is a critical time. And I think we, weathered it, very well. We actually had a couple of buildings on one of our vineyards destroyed and a little bit of damage in the vineyard, but that's something that we can bounce back from.
Yeah, minute and something that I guess is kind of act of God there. But when we're talking about you being a business owner and kind of running a business, trying to figure out where to invest, is it frustrating at all to kind of have to deal with question marks around tariffs and say, okay, well, I don't know where to put my money because I don't know how much my product's going to cost to the end consumer around the globe?
Yeah, it certainly is, and I think that uncertainty always, breeds decisions, and you come to the crossroads. But I think the vast majority of our wine sold in the U.S.
Yeah,
and so I think there's an opportunity for maybe new customers who appreciate the wines that are being tariffed to try to go to California.
Yeah.
And maybe ours.
Well, speaking of customers, I'm always curious. I love my red wine, my white wine, but who are the customers that you're finding are buying this? Is it lower income Americans? Is it high income Americans? Is it women? Is it men? Kind of what is the breakdown?
So I think for Silver Oak in particular, our consumer tends to be the person who's celebrating something. So, the Alexander Valley is an $80 bottle of wine, so it's not inexpensive, but I meet so many people who have, they will celebrate a promotion or a birth or an anniversary,
graduation,
and it's a splurge for them to spend $80 on a bottle of wine, and they know what they're going to get. The wine's excellent, and they get to create that moment in their life around a bottle of wine, whether it's our wine or somebody else's, and I think that's a special thing. So I think we kind of run the gamut from the I put it in American Express card terms sometimes. So from the green card holder, up to the black card holder.
Yeah, from your everyday wine to your celebratory.
Everyone wants to be a black card holder. Can you?
I do have to ask, though, as a millennial, I will admit to that. Do you see any sort of changes with this millennial trend of drinking less or drinking less expensive options or maybe alcohol light options?
Absolutely. And I think it's a great thing because wine in particular is not something you really normally drink to get a buzz, if you will, And so I think the millennials that are drinking less and drinking better, they want brand. They want to know what they're going to get. They want to be pleased. And so I think that really fits in well. And what we're like, our sales to millennials has doubled in the last couple of years.
Interesting.
And one of the other observations that I've had is that for our brand, it's a family tradition. So the children of the boomers are drinking Silver Oak because their parents had it on the table. And so, I said to a wine writer one time, when are we going to be celebrated for being, 50 years old? And because in France, you have to be 200 years old or you're not cool. And so, so it's an exciting time. And we're, if you just come hang out in our tasting room or look at our social media, millennials are drinking our wines.
Yeah, I got to say,
Guilty as charged.
fellow millennial, been out there, very beautiful. David Duncan, thank you so much for joining us. Appreciate it, and thank you for bringing the wines by as well. Kinsey Grant, our thanks to you, and Sabeel Marcellus, thanks as always. Thank you for tuning in, and don't go away. We're headed to the New York Stock Exchange in 60 seconds. All right, let's check in with Scott Gamm on the floor of the New York Stock Exchange. Scott?
Hey there, Zach. I am joined now by Kevin O'Leary, chairman of O'Shares ETF Investments. All right, Kevin, we've got the market up, but stocks have had a rough couple of days, largely on trade worries. How do you see the situation?
Well, the trade worries are expanding toward our European partners as well, but the next big event is going to be the December 15th lift in more tariffs. And I want to point something out, Scott, that I think that people ask me, why haven't the tariffs affected the advance of the market? All year, we've been ratcheting on tariffs and the market just keeps marching north. Here's my new thinking on this. We're the only country in the G7 that doesn't charge a VAT tax, a value-added tax. What are these tariffs? These tariffs are actually a value-added tax. I mean, that's the way to look at them, except only on Chinese-produced products. Most economies can absorb value-added taxes. They're very strategically absorbed, and which is why the market's saying to themselves, okay, even if more tariffs come, it's not as damaging as we thought. And the Treasury ends up with a value-added tax of billions of dollars to be redeployed to help the sectors that aren't doing well, like farmers. I think you're going to be surprised that the market won't react as badly as people are anticipating, even if we ramp up to December 15th. And I keep saying to the Trump administration, keep going, because I want to deal with China. Keep squeezing Chinese heads. Don't stop now.
So do you think we'll get that phase one deal signed this year, or does it even matter? And if so, how would you be repositioning your portfolio?
I like phase one because it's at least an indication of things that could get better, but it's meaningless if I don't have IP protection. I want to be able to litigate and protect my IP and sell to that emerging Chinese market, the middle class, which I can't do now. I'm being ripped off and have been for 15 years because I've been doing business in China for a long time. So I'm one of those people that really knows how painful it can be, and I really want this administration to finish. So I don't care if we get phase one, I want the real deal. I want the IP and access to market deal. I don't care if I have to wait for a second term for that one. I really don't. And I think the market's going to wait right behind me.
Do you think the market can be okay with waiting?
The potential, Scott, of a Chinese deal, a real Chinese deal, and what it can do for S&P earnings is so spectacular, the market's going to wait.
You just got back from Riyadh, Saudi Arabia. What did you find there, and what does the investing landscape look like there?
Saudi Arabia, and I'll make this statement because I'd never been there before, is the most misunderstood country on earth. I know it's been a controversial place. The investment opportunities there are staggering in real estate, in commercial real estate, in development of resorts, in healthcare. Do you know that 70% of the Saudi population is under 30 years old? The amount of healthcare needs they're going to have over the next 10 years are extraordinary. I came back stunned at the opportunity there. I'm going back. There is so much opportunity there because the place has been ignored for basically 25 years. And now they're opening up the markets for a whole bunch of reasons. You can get a visa online now, which you couldn't do. You can, and they've opened up for tourism now. The place was stunningly beautiful. I couldn't believe it. I was there for 4 days. I'm going back next quarter.
In the last 30 seconds, what was your reaction to the looming Saudi Aramco IPO? Is that good for them? Is that a good investment in your view?
I'm looking at the deal because the extraction costs are under $3. It's the lowest extraction cost on earth. And if you're going to be in energy like I am, that's one of the sectors I'm looking at for 2020. I love healthcare, I hate utilities, and I'm warming up to energy. So now I've got to decide, do I put a little bit of that Aramco into my portfolio?
All right. Kevin O'Leary, we will leave it there. Thank you so much as always.
Thank you.
All right, Zach, we'll send it back to you.
All right, coming up, another exodus in the C-suite. We're breaking down the leadership shakeups at Alphabet and Expedia. Next, the ticker starts in 2.
Good afternoon and welcome to the ticker on Yahoo Finance. I'm Shauna Smith. Checking in on the market action today. We are seeing a rebound from yesterday's losses. The Dow is up 192 points. The S&P up just around 0.7%, and the Nasdaq up just around 0.5%. Well, first, let's get to a latest report by Bloomberg, and this is that U.S. and Chinese negotiators are moving closer to a phase one trade deal. Now, markets are rebounding, like we just talked about, over those renewed hopes. American officials reportedly expect an initial deal with China to be completed before December 15th, when another round of tariffs are set to take effect. Now, this comes as President Trump expressed optimism over trade talks during the NATO conference earlier.
We're talking to China, as you know, those discussions are going very well, and we'll see what happens. But we're talking to China, we're talking to others.
Joining us now for more on this is Dan Deming. He is the managing director at KKM Financial. And Dan, when you take a look at the market's rebound today, it was a totally different story yesterday. What do you make of today's bounce back?
Well, you're seeing the prevailing winds shifting back and putting sails in the trade negotiations, storyline, and I think that's really driving factor here. There was some hesitation really coming out of the end of November, Shauna, into those first two trading days of December, the concerns that maybe this thing might get pushed into 2020 or after the election, as President Trump indicated just a couple of days ago. Now you're seeing that storyline being washed out of the marketplace, and you saw some rotation here early part of December, but ultimately, the market's still hopeful that they're going to get something done before the deadline, and you're seeing, I think, the reaction to that as you see the equity markets rallying, and you're seeing the bond market coming off as well.
Dan, how important is the fact that we need to get a deal before that December 15th deadline? How important is that to the markets?
It feels like I think it's fairly important that they solidify some type of phase one or however you want to quantify what they're trying to get accomplished, because the market has that expectation built into it. And we saw the last couple of days, Shauna, the reaction to shifting of those expectations. So I think it's important that they get something done by the deadline so that there's the uncertainty going into that deadline is kind of taken out of the market. If we get close to that weekend and there's still no deal in place, you're going to see volatility pick up, and I would expect the market's going to react negatively initially to the fact that they didn't get something done headed into the weekend. So I think it's important from a short-term perspective. Longer term, I'm not so sure. The market's valuations here are pretty lofty. It wasn't surprising to see the market back off a little bit, but I think just as long as they continue to move forward, the market's going to be supported by that type of storyline.
Dan, we had 11 new closing highs in the month of November. When we talk about the market as it stands right now, do you still think that there's a willingness to buy?
It feels like there's the rotation under the market, Shauna. It does feel like there's still money flowing into the equity markets. And, certainly at these valuations, you need to see the growth pick up into 2020. I mean, if we get through the threshold of the trade situation and it gets resolved, at least phase one, the market's going to start looking at earnings and other things to drive it forward. And if we don't see any pickup in that in the first quarter of 2020, then I certainly think that there's a chance for some, moderation or maybe a little bit of back and fill. But I think ultimately it does feel like on any type of dip, we continue to see the equity market supported, and you're seeing a reversal here today with pretty decent volume. And certainly when you look at the broad spectrum of how the money's being allocated in the equity markets, you're looking at all sectors really being well supported today.
Switching gears just a little bit, we had Jeffrey Gundlach of DoubleLine Capital on Yahoo Finance earlier this week, and one of the things that he says that he sees a scenario where stocks get crushed in the next recession and then likely not recover for quite some time. I know it's hard when we're continuously seeing new highs to say that, hey, we might see a recession anytime soon, but what do you think? I mean, what do you make of his comments? Do you think there's any truth to that?
Well, I think at some point we're going to see a fairly decent retracement. Now, if it's going to be 5%, 10%, if they're going to get crushed, I don't know. I mean, as long as I think as the Fed continues to show that it's going to be accommodative moving forward, that I don't think the downside is too much risk at this point. But there's always that potential out there, Sean. I mean, we've seen it happen, and it can happen pretty quickly. But if you look at the kind of the driving factors within the market structure right now, I think, we've been able to maintain, these valuations, and it still appears that there's buyers under this market, and we're doing this on a very low growth type of profile. So if we see growth pick up, you would expect that that's going to continue to at least hold the valuations in the corporate structure as far as earnings and all the other things that are going on that should propel us, to some type of appreciation in 2020.
Dan, lots of important events next week. We have the Fed meeting, we have Brexit vote, we also have the trade deadline that we were talking about earlier. Out of those three, what's the most important event to watch, do you think?
Oh, I think the trade deadline, just based on how the markets reacted the last 48 hours. Certainly the Fed outcome is kind of expected that they're not going to move and they're going to take a wait and see type of attitude. The Brexit situation also is somewhat resolving itself going into the election. Now, if the Conservative Party doesn't get the votes that the market anticipates, maybe that could have a short-term impact. But I think when you look at it overall, it's the trade situation.
All right, Dan Deming, thanks so much for joining me today.
All right, thank you.
Well, coming up, Barry Diller announcing a big executive shakeup at Expedia. But is it enough to get the company back on track? We'll discuss. Stay with us. Welcome back. Let's get to our big four tickers of the day. Expedia is surging after a major executive shakeup triggered by Barry Diller. Alphabet investors preparing for a new future after Google's co-founder stepped down as executives. Carl Icahn is blasting HP's rejection of a takeover bid from Xerox. And Target is being named the, quote, best idea for 2020 by one top research firm. Well, first, let's get to the latest on Expedia. Now, the company's CEO and CFO are stepping down. This comes after clashing with Expedia's board. Chairman Barry Diller will manage operations until the board determines long-term leadership. Emily McCormick is with me. And Emily, this is obviously news that is moving the stock today. Do you think the shakeup at the executive level, is this a welcomed answer here for investors?
Right now, it looks like it is, Shauna. I mean, the stock is really surging, holding on to those gains from the pre-market session when this was first announced. Still up about 6% in intraday trading. Really, the street is thinking that this is going to be a positive for the company. If we look at the tenure of Mark Okerstrom, now former CEO, who took over back in August 2017, that stock has really fallen about 30% in the 2 years since then, really because of competitive pressures. If we think about some of these other entrants into the online travel space, things like Airbnb, Booking.com, really taking market share away from Expedia, even as it has tried to integrate some of its acquisitions like Vrbo, previously known as HomeAway, and Trivago into that core business. Really didn't see that reflected in the stock and in some of those fundamentals. We've seen revenue growth slowing, and then, of course, competitive pressure with the likes of Google and some of the prioritization that's been giving to its own search results, as well as paid ad products, really has been taking a hit to Expedia's stock.
Emily, when you take a look at today's announcement, do you think that the new leadership will enable them to do this? You talked about the fact that Expedia needs to turn around their business. There's been lots of speculation out there on the street as to what exactly Expedia needs to do. Is this a step in the right direction?
So far, it looks like it is, but the street is warning that it might take some time for any new leadership, of course, to come in and for those changes to materialize. Piper Jaffray analyst Michael J. Olson actually issued a note today, and he said, quote, a wholesale removal and replacement of both CEO and CFO is something that will likely result in an ongoing multi-quarter transition period for the company. A couple of the things that analysts have been saying will help the stock is if there's a little bit more of a focus on that Vrbo integration. That's the segment of the company that really focuses on those home vacation rental bookings and competes directly with Airbnb. That's something that they said they should really be focusing on. Hopefully, any new leadership will be putting an emphasis on that area.
All right. Thanks, Emily. We're also watching Alphabet today. Now that stock is on the move after co-founders Larry Page and Sergey Brin are stepping down as CEO and president, respectively. Now the current Google CEO, Sundar Pichai, will now become the chief executive of both Google and of Alphabet. The stock today is on the move following that announcement, up slightly, up just around 2% actually, up $27 a share. Now Brian Chung is with me. Brian, you see the move in the stock today, moving up $27. What does this mean for Google? Because as the street is accepting the news, it looks like they're pretty excited.
Well, what it means is that the person that the street largely expected to succeed the company is now going to be succeeding at the company. The big news here is not necessarily that Sundar Pichai will be the head of Alphabet, but more so that Sergey Brin and Larry Page, who really founded this company in 1998, will be stepping back from their duties as currently the CEO, Larry Page being the CEO of Alphabet, and then Sergey Brin being the president of Alphabet, now stepping away from their roles. They will, however, stay on the board, but will no longer be managing the day-to-day of the company. That's going to be Sundar Pichai is going to be ahead of that. Now, for those that are confused about exactly why this matters, I mean, Alphabet is the holding company of Google. Everyone knows that it's still Google. The stock ticker is still Goog. But Alphabet has a number of subsidiaries that are actually separate from the Google company. One example being Waymo, their self-driving project. They also have Wing, which is their drone delivery service. And then there's also Capital G, which is a private equity fund that backs a bunch of new ventures, puts a lot of money into ideas that they think might be great. There's also X, which is their moonshot project. Those are all things that are actually managed outside of Google, meaning that before Sundar Pichai became the head of Alphabet with the announcement yesterday, he was not part of those operations.
Does this shakeup maybe mean that Alphabet won't be spending as much on some of their moonshot projects or some of the things that you just mentioned? And that could be a reason why the street could be a little excited, because we could possibly see maybe some sort of cutback in spending.
I mean, that could be the case, but I think what we've seen is that even with Google, it's not like necessarily saving money has been the number one priority for Sundar Pichai. One example being their $4 billion buyout of Fitbit. So this is not necessarily a company that even needs to be constrained by cutting expenses. This is a company that has a very strong cash position and is actually part of their bullish thesis is really investing and making these big investments into things like Fitbit. But I think for Sundar Pichai, the bigger question is going to be the social issues, the kind of less financial issues that have been really facing this company. One example being the handling of the sexual harassment claims. That was something that, Sergey Brin and Larry Page were under heavy fire for. Things like the relationships with the Defense Department, with the Chinese government, with federal border agencies. That in addition to just handling Congress, right? You have Congress addressing all these privacy concerns. And here you have Twitter and Facebook going to Capitol Hill, but who was notably not there on Capitol Hill was Larry Page, who at the time was the CEO of Alphabet. So will Sundar Pichai take on those thorny social issues as Google, as a huge tech company, continues to face scrutiny in the United States and abroad?
Real quick, do you think that there's maybe some investors out there, some people who will be a little bit uncomfortable with the fact that the two founders are no longer at the head of the company?
No, because they're still going to remain on the board. But I mean, yes, definitely these are the guys that have been steering this thing for over 20 years now. So it would be maybe concerning to some that you don't have those minds at the head of the company. But this was a transition that they had been doing for some time. They created the Alphabet Google structure in 2015, appointed Sundar Pichai as the CEO of the Google subsidiary at that point in time. So everyone kind of knew that this was the succession plan. It's just now it's official.
All right, Brian, we'll get back to you later on another stock. Thanks so much for that. All right, Carl Icahn is calling out HP now. The activist investor is slamming the company's decision to reject Xerox's takeover bid. In a letter to HP shareholders, Icahn wrote, quote, "I cannot believe that the recalcitrance of HP's board is driven by any real confidence in its standalone restructuring plan, which the market shareholders and analysts met with extreme indifference and which seems to amount to little more than rearranging the deck chairs on the Titanic." Pretty strong words there. Jared Blickery is here with me to break all of this down. And Jared, we saw the rejection, lots of questions as to whether or not that was the right move. Carl Icahn clearly does not think that was the right move. What do you make of his argument?
Yeah, well, he has a point. He's saying that this seems like not a cover-up, I would say, but that the management is acting in their own interests. Now, Enrique Lora is the CEO of HP. He's only been there since November, so we don't even have 1 quarter of his leadership yet to criticize. But the HP has been kind of in secular decline within its printing department, and that's what Xerox is about. Even though Xerox is one-third the size of HP, they've branched into image recognition and digitalization. That's really the future, and it could be synergies there. Carl Icahn believes there's $2 billion to be had, but if you look at the chart here, here's HP, it's up 2.5% today. Let's look at both of them put together here over a longer period of time, and we'll go back, let's say, 5 years. You can see both of them have had their troubles. Even though Xerox is up about 90% this year, it's just barely break even over this time.
And Jared, what do you think the likelihood is that this deal will actually go through and get done?
I wouldn't be surprised if it does. Carl Icahn, he might be almost 90 years old, but he's a smart guy. He owns nearly 11% of HP, about 4.2% in Xerox, and he has compelling reasons here. Even if this is a delaying tactic by HP, I think eventually they'll come to realize that they're probably better off together in the long term. Having said that, Xerox needs HP more than vice versa.
All right, Jared, thanks so much. Let's move on to a bullish call on Target. Now, Cowen is naming the retailer a, quote, best idea for 2020, noting that Target's digital business is overcoming the threat from Amazon. Inez Ferre is following this. Inez, when you take a look at that call, that's obviously been the big question out there, whether or not Target will be able to compete with Amazon or really maintain its market share there and continue to grow its online business. If you take a look at what Cowen says, it probably looks like Target is doing just fine.
That's right, Shauna. And they're looking at their product, their digital growth, and their solid margins, according to that note. When we're talking about products, the analysts are saying, look, they've got these proprietary brands that they have on apparel, home goods, on beauty items as well. So that's done very well for them. You're also looking at their digital growth, where digital sales improved by at least more than 30% over the past 6 quarters. They talked about the apparel and accessories and beauty and essentials gaining shares, and that's really significant because apparel for many retailers has been very soft. And then when you're looking at this digital growth with respect to their Target Circle, this loyalty program which they launched, the company says that it has some 35 million members for it. They've got their credit card, their debit card, all of those members were incorporated into this Target Circle. And the note also talks about Target being used as their stores being used almost as fulfillment hubs as well for their same-day services like in-store pickup, their curbside pickup, and also their one-day delivery.
Yeah, they also had, speaking of the one-day delivery, the same-day shipping, there's lots of questions about whether or not that will cut into Target's margins or what that could mean for their margins. What do you think?
Well, Target has said that this has driven sales for them. So as far as their digital growth, this is really pivotal to part of their digital growth. The proof will also come with these holiday sales, because the note is also talking about how the investors will be paying attention to the holiday sales, how they do. Toys are expected to do very well because they've got these also Disney stores in 25 of their locations where you can only get Disney products there, or you can get their Disney products through their website. So there's a lot to look forward to here. And as far as their one-day delivery, this is going through their Shipt, which is the company that they acquired. So it looks to me, and it looks to this note, like they've done very well here, and this is pivotal to their growth, this digital strategy.
Yeah, certainly a lot of analysts on the street would agree with you there that it is very, very important for Target's future business going forward. Inez, thanks so much. Well, coming up, the Chamber of Commerce is out with a new report on the state of small business confidence. We've got the details on that report coming up. Welcome back to the ticker. Let's check in on the market action. We're still seeing green across the board with the Dow up over 200 points right now. The biggest gainers in the Dow, 3M, that stock up over 2%. Goldman Sachs not far behind, also up just around 2%. And JP Morgan rounds out the top three performers in the Dow today. Scott Gam is standing by on the floor of the New York Stock Exchange with the latest. Scott?
Well, that's right, Shauna. You've got a host of Dow stocks in the green today. A much different story from yesterday when we were down almost 300 points. Now, stocks trying to recover from yesterday's losses. There is some trade optimism out there, but the Dow is still 300 points below that 28,000 mark. Now, even the laggards in the Dow today are still down less than 1%, so pretty modest losses there. You're looking at names like Visa, Cisco, and Boeing as the three worst performing Dow stocks. And then, Shauna, outside of equities, we do want to bring everyone up to speed on the surge in oil prices today, at least for West Texas Intermediate, crossing $58 a barrel today, getting closer to that $60 mark. There was data from the government showing weekly crude inventories in the U.S. fell over the past week for the first time in 6 weeks. That is significant because less supply theoretically boosts prices. And then on the same sort of token, you've got hope that OPEC will extend those production cuts that are set to expire in March of 2020 to as late as June of 2020. We should get an answer on that later this week when OPEC meets in Vienna, Austria. Shauna.
All right, thanks, Scott. Oil will certainly be one to watch this week. All right, well, coming up, a revealing new report from the Chamber of Commerce on the state of small business confidence. The details after this. Small business confidence is soaring. Now, the MetLife and U.S. Chamber of Commerce Small Business Index is hitting a new record high this quarter, reaching its highest score since its inception in 2017. Now, 59% of employers say that they have, quote, a strong outlook on the local economy, and 69% say that their business is in good health. Joining us now is Neil Bradley. He's the Executive Vice President and Chief Policy Officer at the U.S. Chamber of Commerce. And Neil, when you take a look at these numbers, the economic uncertainty that we have been talking about doesn't look like it's changing the optimism here on Main Street. Why do you think that is?
Well, there is optimism overall on Main Street, but you have to break down the numbers a little bit. One of the most disappointing aspects of this new quarterly report is what's happening in manufacturing. Manufacturing is 10 points less optimistic than they were 6 months ago. We think that that's primarily driven by some of these trade concerns. As you know, a lot of the tariffs to date have been on intermediate goods, things that U.S. manufacturers input to use to make finished products. That's having a real drag on the manufacturing sector. On the other hand, in the last 3 months, we've had a lot of optimism about the very things that you've been talking about on your program today. New tariffs on retail goods coming out of China. And the hope that we saw over the last several months that there would not be additional tariffs, we think boosted the retail outlook. That's why the retail sector is up in terms of their optimism in this latest quarter.
Neil, if we don't see a deal reached by that December 15th deadline that we have been talking about, and we do see additional tariffs go into effect, how do you think that could impact small businesses?
Well, I think it will turn some of this optimism that we see into pessimism, right? Small businesses are one of the ones who are most acutely impacted when you have a tariff increase. It's a cost that's very difficult for them to pass along to consumers. They already operate at very thin margins. And so in particular, that retail and manufacturing sector on the small business side can be particularly hard hit. And that's the thing that we have to avoid. We've watched this trade war over the past year, and first it was hitting big businesses, then it was moving into the mid-market, and so far it largely hasn't hit small businesses. Our great fear for the last 6 months is that it was going to migrate. So far that hasn't happened, but it's really important that policymakers in Washington ensure that that doesn't happen by avoiding this next round of tariffs.
Do you think the additional tariffs could, in theory, hurt U.S. businesses and consumers just as much, if not more, than it hurts China?
Well, there's no question it's hurting both sides, right? And so tariffs are taxes, and they're taxes paid by the users and the importers and by the consumers in the United States. The great thing is that our economy overall is fundamentally strong. The American consumer is strong. We have generational low unemployment. We have 3% plus wage growth, particularly at the low end. So the American consumer is strong and somewhat resilient. So they can absorb some of this impact from these new tariffs, but there's no question it still has a negative impact, particularly on these Main Street businesses that we're concerned about.
Neil, you talk to folks on the Hill all the time. What do you want to see? What do they want to see the administration do in terms of these tariffs?
Well, the first thing, when we talk to people on the Hills, we'd like to see them pass the USMCA, the U.S.-Mexico-Canada trade agreement. We still have hopes that that can be completed and voted on by Congress before the end of the year. That would remove uncertainty in the trade dynamic. When we talk to them about tariffs overall, the first point is we don't need to layer additional tariffs on. We need to get this phase one deal with China concluded. We need to continue to work on the fundamental structural problems that the president was right to try to tackle. But at the end of the day, imposing new tariffs, new additional tariffs like those proposed on the 15th would end up hurting American small businesses and consumers.
Right. Neil Bradley, thanks so much for joining the program today.
Thanks for having me.
All right, well, coming up, the biggest stock winners and losers of the last decade. We've got the details. We've got all the names you need to know. That's up next. Welcome back to The Ticker. I'm Shauna Smith. Let's give you a quick recap of some of the tickers that we've covered in the show today. Our first ticker was Expedia. Now it's leaping after its CEO and CFO were ousted by the company's board, which is controlled by billionaire investor Barry Diller. He cites disagreements over strategy between senior management and the board for the decision. The second ticker was HP. Activist investor Carl Icahn is slamming its decision to reject a takeover bid from Xerox in an open letter to HP shareholders. Now, Icahn argues that the combination of Xerox and HP is, quote, one of the most obvious no-brainers I've ever encountered in my career. We've also looked at Target. Now, Cowen is naming this stock as its best idea for 2020, calling Target, quote, a well-positioned as a long-term winner. That's well-positioned as a long-term winner in the sector. Checking in on the closing price of oil today, oil is surging in the green, up just over 4%. Now, this move to the upside coming as a new EIA reports 4.9 million barrel weekly decline in American crude oil supplies for the week ending November 29th. Now, we are in the last month of the decade. Can you believe it? I can't. Yahoo Finance is taking a look at some of the biggest S&P 500 winners and losers from the past 10 years. Yahoo Finance's Heidi Chung is here with more on this. And Heidi, you've gone through the biggest winners, the biggest losers. Number one is, reveal it.
Netflix.
That's no surprise, I don't think.
It's actually not all that surprising, but I was kind of curious to see how many people in our newsroom or colleagues would guess this as their first one. And guess what? No one knew that it was Netflix. We got a lot of Amazon. We got a lot of Apple. Amazon is on the list of one of the best S&P best performers over the past 10 years, but it's number 9 on the list. So there are some surprises for example, Market Access Holdings. That was a sort of under the radar name that not a lot of average investors know about. They're a fixed income trading platform for institutional investors. Now that was number 2 on the list, surging more than 2,700,000%. And we have a biotech name in here. We have 2 chip stocks. The chip stocks being Broadcom and AMD. AMD was the best performing S&P 500 stock in 2018. But Netflix is a good one because I feel like this company has come such a long way over the past decade. But of course, the following decade is the big test because now we have so many players in the streaming space. Whether or not Netflix can continue this momentum, that will be another question. I mean, it hit an all-time high back in June 21st of 2018 and hasn't really reclaimed those levels. And I think a lot of investors are sort of cautious here, waiting to see how the rivals like Disney Plus and Apple TV Plus sort of do before making more bets on Netflix.
Netflix will be an interesting stock to watch because when you take a look at what the company was doing back in 2010, at the beginning of the decade, it was a totally different company. It's been able to transform itself, keep up with consumer demand, keep up with how consumers like to really consume their media, and has really been on the forefront of that. So the question is, like you were saying, with all the competitors like Disney Plus out there and all the other streaming giants or media companies who are getting into the streaming wars, it will be interesting to see what Netflix is able to do in order to differentiate their content while not spending too much money on their original programming.
Exactly. So this is the next pivotal moment for them because, like you mentioned, when we started out the decade, you had to physically get a DVD in the mail from Netflix in order to watch anything. I used to do it as well. And then they pivoted to start offering unlimited streaming. So this company has done a lot, but whether or not they can sort of weather this next test, I think will be very, very telling. I do want to pivot to the worst performing stocks of the past decade. No surprise, the energy sector was the worst performing sector.
And there's quite a few of them.
And there's a lot of energy names on there. And if you recall, of course, you guys cover energy a lot on this show, but there was that big oil price downturn between 2014 and 2016 where we had oil go from $100 a barrel to $25 a barrel. So a lot of these energy names, whether it's oil services or oil gas exploration companies, they're all highly levered to the commodity price. So if oil prices are falling, these companies were not doing so hot during that period. Another name that I like to bring up when we're talking about the worst performing stocks, though, is Under Armour.
Yeah, that actually stuck out to me because they went public in 2005.
I believe it was 2005, yes.
It hit a high during the decade in 2015, but since then, there's been a steady decline there.
So they saw crazy sales growth, right? Something like 20% per quarter for a couple of years. And then that sort of ended at the end of 2016. And ever since then, this company has been sort of struggling here at home. Specifically, North America sales have just been so weak. And this year has been, of course, absolutely terrible for the company. Not only did CEO Kevin Plank announce that he would be stepping down, but the company's also being looked at because of their accounting practices. So they're being investigated for that as well. So the company and its stock has been under a lot of pressure since then. But yeah, I mean, did any of these companies really stick out to you besides the energy names? Because those are kind of...
Energy names. Under Armour was a little bit surprising. I didn't realize it had been down 60% because we talk about, I guess I would factor in so many of the glory years, it almost seemed like, for Under Armour from 2010 through 2015. The one that wasn't that big of a surprise, but we kind of forgot about because we haven't talked about it in the last couple of months, is Kraft Heinz, and that's down 58%.
A lot of that was this year as well. Remember, Kraft was actually trading as an individual company before the merger in 2015. This, of course, is a big Warren Buffett bet. The Oracle of Omaha invested a lot into this. He actually said he probably overpaid for this recently. But another thing to keep in mind when we talk about Kraft Heinz, this company also was being investigated for its accounting practices. and thus they had to delay their Q1 report, if you recall, and so they
Back in
released
February.
their entire first half at once. They're in the midst of, I think, also a pivotal point because this company has been around for a long time, but consumer tastes are changing. And if they're not ready to sort of meet the new demands of consumers, I don't necessarily see a world in which Kraft Heinz and Campbell's Soup are really going to thrive, right? A quick caveat, though, with this piece, when we take a look at the best or the worst performers, we did not account for the companies that were pushed out of the S&P 500 as well as ones that have gone out of business. And of course, we still have a couple of more weeks left in this month, so this list is subject to change.
Certainly will. All right, Heidi Chung, thanks so much for the latest on that. Well, coming up, there are signs of life for GoPro after a big Black Friday and Cyber Monday. Will the company be able to keep up the momentum with consumers? We've got the details. Stay with us. Welcome back. Let's get to our next group of tickers for you today. Growing appetites for snacks is giving a boost to Campbell's bottom line. Now, GoPro is raking it in from Black Friday and Cyber Monday sales. And investors are eagerly awaiting Slack's latest quarterly results after the bell today. We're going to have what you should look for in those numbers. But first, let's get to the latest on Campbell's Soup. Now, the maker of Goldfish and ready-to-eat soups reported mixed earnings for its fiscal first quarter. Now, profit beat expectations, but sales, though, were slightly below what the street was expecting to see. Sales fell just around 3%. Inez Frey is back with me. And Inez, when we go through this report, it's a little bit of mixed results.
Yeah.
What was the thing that you took away? Because the stock is not reacting too favorably today.
Yeah, basically what I took away that there's still a turnaround, of course, happening with the company as they're focusing on the U.S. soup market and also focusing on snacks. So as you mentioned, snacks did well for the quarter, up 2%, but soup sales were down 3% in the quarter. They said part of this also had to do with shipments because of demand that was delayed because of the Thanksgiving, when the Thanksgiving holiday came in. So they're saying that in their fiscal second quarter, you should see this as something positive. But their market share for the soup grew for the first time since 2017. So this is very significant as well, as they've really focused on revitalizing soup, focusing on meals and beverage, which is part of soup, is also, and also looking at their snack segment, making sure that that's strong. But this is a turnaround story of a company that is still taking, it's a multi-year strategy here that they're taking in this fiscal 2020. Really is still part of this transitory period for them.
So Inez, it sounds like it's more because of seasonality rather than a downward trend in some of its businesses.
That is what they've mentioned. Now, they are investing some $70 million into their soup business as well, because again, this is a company that was for many years making acquisitions because they were trying to sort of keep up with this fresher trend and trying to figure out how to do that. So they made some acquisitions like back in 2012, Bolthouse Farms, think of carrots and also smoothies, for $1.5 billion. Then they divested that and sold it for $500 million. They made that Snyder-Lance acquisition, which in 2018 for $6.2 billion. Some believe that they paid too much for that, but still Snacks is now seeing a boost for them. But they've really tried to figure out, okay, how do we do this, and how do we get into fresher, better foods that consumers want? And now the strategy seems to have been between last year and this year really, okay, let's focus on what we're good at. And part of this has to do with soup, their soup stores, but you need to invest in order to do that. So they're investing money over the next 3 years in the soup category to have better machines to make soups fresher, to keep up with the taste of the consumer.
All right, Campbell Soup up just around 1.6% so far today. Inez, thanks so much for breaking that down for us. A winner that we're focused on this afternoon is GoPro. Now, shares are jumping after the company reported record Black Friday and Cyber Monday sales. Now, the stock is currently trading up just around 1%, so off its highs of the day. Now, total camera sales jumped 120% from just a year ago. Brian Chung is back with me. And Brian, the GoPro Hero 8 Black camera, that was the #1 seller. That's what all the hype was about. The question, though, to me is, the problem with the stock has been that they're too reliant on one product, so it seems like the issue is still there.
Right, and the other thing too is, of course you're going to have great sales. It was Black Friday and Cyber Monday, but the numbers did appear to hit it out of the park, which is why you saw the stock pop, although we have seen some of the gains pair throughout the trading session today. But the company reported, as you mentioned, 120% year-over-year growth in total camera unit sales. They said they saw 30% year-over-year growth in total camera unit sell-through in the United States. And what sell-through means is basically the percentage of items that are actually sold relative to how much inventory is sent to retailers. So 30% year-over-year growth will tell us that between this Black Friday and last Black Friday, more retailers like your Targets, like your Walmarts, were able to get rid of or unload more GoPro units in those Black Friday and Cyber Monday sales. No surprise, we saw some pretty amazing promos. So some examples, $100 off the GoPro Hero 7 at Walmart over the weekend. Even GoPro itself was offering $150 discounts on bundles of the GoPro 8. That's the newest model. So a lot of kind of, you raised a good point that this is still the same story, the GoPro, which I think is why you maybe saw some of those gains come down a little bit as investors realize, okay, wait, they had great sales over the weekend, but the underlying story is still the same. They're just selling single cameras.
Yeah.
How is that going to be a profitable strategy in the long term?
Well, and then what else is interesting? So there's been a lot of demand for this camera. Clearly, sales are up 120% year over year. But there's also talk about production delays and how that could impact the stock. Right. And that's something that GoPro has also faced in the past that's hurt shares.
Well, I mean, we saw, okay, great that it broke $4 earlier today, but it actually came back down under $4 as of right now. Mm-hmm. We saw the stock go down almost 20% in October when that, as you mentioned, there were production concerns about what types of delays and how long the delays would last in the shipments of its new Hero products. So look, at the end of the day, this is a stock that has been hammered for the year. The highs that we saw in 2019 for GoPro stock was at about $7, and now you see it below $4. I mean, it's a 10% loss year to date relative to the S&P 500, which has had a great year, up 24%. So this is a stock that has been underperforming. A lot of rumblings, interestingly, about whether or not this could be an acquisition target because it's an attractive valuation if you were to buy it in all stock today. A lot of that actually was pushed by the narrative when Fitbit got purchased by Google. Fitbit, a very similar company from the fundamental standpoint. It's just a single revenue stream kind of company. And Google said, we can use this for data. So actually the day that Fitbit ended up getting bought, you saw GoPro shares bid up as well. So interesting to see, although it seems like the data argument for a type of acquisition like Google or maybe from a Facebook is less likely with GoPro, where it's kind of more vague about exactly how they would incorporate the camera technology to whatever their longer term strategy is.
Well, certainly will remain to be a stock to watch here in 2020 because there has been some M&A rumors there for a while. So we'll see if there's any bidders in the new year. All right, we are also watching Workday. A couple of earnings reports here that we're watching for you. Now, the software vendor reported fiscal third quarter earnings that beat on the top and bottom line, but it also says that new product launches won't do much to boost performance next year. Jared Blickery is back with me. And Jared, when you go through this report, a couple of mixed signals that are coming out of it. How is the street digesting these results?
Well, there's no doubt that the performance in the reporting quarter, very strong. Operating margins, gross operating margins on non-GAAP basis, up something like 850 basis points year over year, and then even 200 basis points sequentially. Revenues are up 26% per year over the last year. But going forward, it's difficult to see them expanding again with their new product lines. The macro environment probably isn't going to improve. If the economy, God forbid, rolls over, by the nature of their business, they are going to be hurt hurt disproportionately. And also, I would add that it's a very tough environment for software companies this week. Salesforce kind of disappointed last night, so did Zscaler. And although tech software has had kind of a nice run over the last couple months, it's been by and large under pressure since the end of the July. And if we look at this industry group here, and we're going to look at a heat map, and we can sort it here by equal performance and then go back to that late July peak where it just kind of fell off a cliff, and a lot of these names went through their support lines. We can see Zscaler down 44%, Slack, which we're going to talk about, down 36%, Twilio, Workday, Hubs. It goes on and on. We do have a lot of green players here, but it's been a bifurcated market. And so if you're not posting outstanding forward guidance here and growth prospects, you're getting hurt today.
Hey, Jared, let's talk about Slack, because that's going to be on traders' radars here this afternoon. They're reporting earnings after the bell. Lots of talk about what Slack needs to do in order to take their business to the next level. The stock is down just over 3% so far today. What are the main things that you're looking for in this report?
The elephant in the room is the competition with Microsoft. Microsoft Teams is a competing product. We use Slack in the office. I think just about all of us love it, except for Rick Newman. And it's going head to head with Microsoft takes a lot because they have that Fortune 500 Rolodex that they can call at any time. And so this stock has simply been under pressure since they IPO'd. You can see right there, it's been a steady slog down from the upper left to the lower right. They have bounced back, or it's kind of stabilized a little bit. But it's going to take a lot for them to beat, especially, like I said, in this current earnings environment for sales or for software. They're really going to have to post that strong forward guidance going into next year.
You can see the stock here on a downward trajectory, off over 40% since its IPO. So certainly will be something to watch this afternoon. All right, well, coming up, what's the best ETF for investors to play the holiday shopping season? Well, we have a top expert here to weigh in with his call next. It's now time for our ETF report brought to you by Invesco QQQ. Now, it's no secret that the holiday shopping season is now in high gear. And today we're watching the SPDR S&P Retail ETF XRT. While it's arguably the most well-known player in the space, our next guest, though, says that it's his least favorite. Joining us now is Dave Nadig. He is the managing director at ETF.com. And Dave, when you parse through your picks here, it's interesting that the XRT, because like I just said, it's very widely known, is your least favorite to play this holiday shopping season. Why is that?
Well, there are a couple things. One is it's really only fishing out of the U.S. market, and that's only a small part of the retail market. Obviously, there's retailers around the world, but more than anything, it's equal weighted and it owns just a little bit of everything. So you get Abercrombie and Fitch, you get Amazon, you get Home Depot, you get clothing retailers, brick and mortar, online. So it's a bit of a hodgepodge, and because of that, I think they're just better alternatives out there. This fund has underperformed the market quite a lot this year. It's up about 9% versus 25-26 for the S&P, and really trailing most of those headline online retailers that we're all excited about when we see the numbers coming out of this last weekend.
So then, Dave, what are some of those picks? What is the better play in this space?
Yeah, I think, an equally large fund is the Amplify Online Retailer ETF, ONLN. That's a very different approach. It's looking globally. It's focused exclusively on online retailers. And when you look at the numbers we're seeing so far this year, it's hard not to lean into the online part of retail. We know this is a consumer-driven economy right now. Retail sales are supposed to be up about 20% year over year for online retailers. The prediction is it's going to be down about 4% for brick and mortar retailers. So this is a way of playing those big headline online retailers and avoiding a lot of that mess that you're seeing at the local mall.
Dave, earlier this week, we talked about the fact that there was a lot of short interest here in some of these brick and mortar stores. You actually outlined one of the ETFs here that's a way to play this space.
Yeah, so there's an interesting play here from ProShares called it's long brick and mortar, long online short brick and mortar. The ticker here is CLIX, CLIX. And this is a little bit more of an aggressive play. It's kind of a classic way of expressing an opinion by shorting the things you think are at the wrong end of history and investing in those things that you think are the future. So this goes 100% long a portfolio of online retailers, much like ONLN, but then it shorts out 50% brick and mortar, which is part of what's inside XRT. So it's a very aggressive play in the sense that you are going to be short a few things. You're going to be short some of those big brick and mortar stores. But when you put that together with the long, you actually only end up about half exposed to the equity market in general. So the beta here, as you would say, is going to be about 0.5 versus the broader retail space. I think you need to know a little bit about what you're doing, but if you're a real believer in this secular shift towards online buying that we've seen for decades, this is the way to play it.
Yeah, Dave, you mentioned the beta there. I mean, it is very important that investors realize the risk because the shorts can go very wrong very quickly.
Yeah, absolutely. If for whatever reason it turns out that Target is the greatest company in the world for the next 5 years and you've loaded in on this, well, being wrong on all of those brick and mortar retailers, theoretically you have infinite downside, right? Because you owe those shorts back at some point. Now, it's a structured portfolio. It's tracking an index. There's some controls around that. And because you're only 50% short to the 100% long, you are sort of getting a little bit market neutral out of this. So if you're uncomfortable with shorting as a principle, of course, you should stay away from this and maybe look at something more like ONLN.
All right, Dave Nadig, thanks so much for joining us today.
Thanks for having me.
Well, straight ahead, why Sony just made a big bet on Beatles merchandise. Don't go away. give you a quick recap of some of the tickers that we've covered in the show today. Our first ticker was Expedia. Now, CEO and CFO have been ousted from the company by the board. Expedia's chairman, Barry Diller, saying that disagreements on strategy between senior management and the board led to this decision. Diller will help oversee day-to-day operations until a permanent chief executive is found. Also in focus, HP. Now, activist investor Carl Icahn is tearing into HP's decision to reject a takeover bid from Xerox in an open letter to shareholders. Icahn calling combination of the two companies one of the most obvious no-brainers he's encountered in his career. And we also took a look at Target. Now, Cowen is officially naming the stock its best idea for 2020. Among the reasons, Cowen says that Target's success in its digital business is overcoming competitive threats from Amazon. Well, it's time for our last ticker of the day, and that is Sony. Now, the company's music entertainment division has signed a deal for North American distribution of Beatles memorabilia. Now, according to the Wall Street Journal, Sony also has plans to open a pop-up store in New York City showcasing Beatles branded merchandise. Yahoo Finance's Jared Blickery, Brian Chung, and also Inez Ferre are here to weigh in. And Jared, why do you think Sony is making this deal now? Because obviously there's still a whole lot of Beatles fans out there, and it could be pretty lucrative, I would think.
Yeah, well, you can always go to Times Square and get off the table or off the books Beatles memorabilia too. But I think it's because streaming music is simply much less profitable than selling CDs and whatnot. So they're looking for those alternative revenue streams. And this is something that small bands have known forever. They don't even make a lot of money on tours. Usually it's the merch table where they make the bulk of their money. So I guess everything comes full circle.
Brian, lots of demand, I guess, there could be potentially for this memorabilia. It's a hard word to say, I guess, if you say it a couple times in a row. How valuable do you think this will be for Sony?
Well, for what it's worth, they did end up purchasing the rights to this memorabilia from Bravado. That was a player in the space that had about $300 million in annual revenue. So you can imagine some sort of cut of $300 million would be at least the minimum that Sony could get off of this. For what it's worth, Sony is planning on using its subsidiary called the Thread Shop division to distribute these goods. So they would have a wide variety of places to sell these goods. One example being FYE, Forever 21, also Target. So they're hoping to really juice the Beatles name. And, you know, because the Beatles are such a prolific name in music history, hopefully they hope they can grow revenue this way.
Inez, do you think that this is a smart way to make up for some of the declining sales that the music industry is facing right now?
Definitely, and I also think it's a way for them to be able to attract other bands, artists. They're really tapping into this frenzy for collectibles and just stuff that fans want. So, yeah, smart move.
I'm going to take a poll. Jared, Brian, Inez, would you guys actually buy this?
I'm not a Beatles fan. And by the way, Brian said juice the Beatle.
He did. No pun intended, right, Brian?
Yeah, no, not at all.
I like to not keep a lot of stuff around, but I do love Beatles music.
Well, there you go. All right, Inez, Brian, and Jared, thank you so much for joining the show today. Let's take one more look at the markets before we let you go. We have the Dow, the S&P, and the Nasdaq still all firmly in the green, with the Dow up 213 points. The biggest leaders in the Dow continues to be 3M. That stock up over 2%. Goldman Sachs, the JP Morgan, up just around 2%, the leaders there in the financial industry. All right, well, coming up next, Nestle Foods division president joins Yahoo Finance at 3:30 p.m. Eastern Time. The special product debut, you're not going to want to miss that. That's next on The Final Round.
Yeah.
I'm Jen Rogers in New York, and this is the final round. Stocks charging higher here, looking to snap a 3-day losing streak.
I'm Miles Other than this as the latest trade headlines, of course, whipsawing the market, energy financials leading everything higher today. We'll have more on that in the market action coming up in just a bit.
Plus, Target getting a boost on Wall Street. It's our call of the day. And Nestle taking on Beyond Meat with new offerings. The company's food division president on what they have cooking. Plus, Peloton on the defensive over its cringeworthy ad. We have the very latest. With us now, Yahoo Finance's editor-in-chief Andy Serwer to talk about today's market action. Let's check on the numbers right now. The major indices with just about an hour of trading. Green arrows here. Hope springs eternal once again on the trade front. Stocks rebounding from a 3-day slide with the Dow sitting near session highs at the moment. All 11 sectors in the S&P 500 are higher, with energy and financials leading the way. What else? Where's our favorite banner? Stocks up on trade optimism.
Well, now we've rebounded from a 3-day slide.
Stocks are jumping on this Bloomberg report that the U.S. and China are moving closer to a phase one deal. I literally had a conversation in our meeting this morning whether or not we should just stop talking about trade.
Yes.
Because this is just going to happen.
It is, but I think that this is a good example of what the market is all about. I mean, obviously we know trade is the marginal bid, right? But what else happened today? We got a pretty downbeat labor market data point. We also got some service sector readings that were fairly so-so. But it should remind everybody who is thinking, oh, well, the economy fundamentals might change the story or the Fed might change the story. It's like, well, trade is the marginal bid and everyone's fine with a pretty slow growth economy and the Fed backstopping everything because stocks are still, Andy, last time I checked, pretty much right at record highs.
Yeah, I'm surprised actually the market is up on the trade news because I found the trade news rather negative. And, looking what was happening in Europe with the president, and then also this bigger point I think that the president made, which is I don't need a trade deal before November. Mm-hmm. And if you think about it, he really doesn't because the economy is doing just fine. And so right now, there is no trade deal. The market's high. The economy's doing well. Unemployment is low. And he said he's going to get one afterwards. So the Chinese don't have any leverage anymore. I think it's sort of gone by the boards. And I do think that if you play this out, let's say Trump does get reelected, then the economy's running out of gas. Then he does a trade deal to get another leg up after November.
So you actually think that this is some good negotiating? But what about the market getting pulled every which way by trade until November 2020?
Okay, but the thing is, it's getting pulled every which way, but it's not really. I mean, we're 10% higher than where we were a few months ago. So I guess the point I was trying to make is on a day-to-day basis, we might be up 0.5% or down 0.5% based on some of this trade stuff. But the overall arc of the market has already been determined by what investors see as a fine backdrop and the Fed that is sitting there.
I mean, I think also, Jen, maybe to answer that in another way, is that the president will literally look at how, not the market so much, but the economy, those ISM numbers, for instance, are holding up. And if they start to really get to be a trend that's going to make things look harder to achieve in November, let's just put it that way, then I think he goes back to the Chinese and says, okay, let's get a phase one going on. Now, the Chinese might not want to play ball, but I think they would sign something empty very easily. So I think it's really brinksmanship in a way that's inside Donald Trump's head, if you can imagine.
And he has said the most important thing to him is jobs, jobs, and jobs. And even on the ADP or the ISM non-manufacturing, the employment, the labor part of it is fine. I mean, it's okay. It's not falling apart right now.
Not right now.
And so if your jobs is your report card, that's what you need to be waiting for. We're not seeing that breaking down. Of course, we have to wait till Friday.
You know who else has jobs as their number one on the report card? Even more than President Trump is Xi Jinping. Jobs are even more important to him because he is not an elected leader and so has to have that security there. So it's interesting, right?
Of course, he can do kind of a government make work program if he has to.
And he's got the military he can literally put in the streets in a way that Donald Trump cannot.
Yeah, a little bit different than what Trump has. For more on today's market action, let's go to Scott Gamm. He's live on the floor of the New York Stock Exchange. Scott, we've got all 11 sectors of the S&P higher today. Notable among those is energy. What's the story there? Well, that's right, Miles, and we've got oil prices up again today, at least for West Texas Intermediate, now crossing $58 a barrel. The high today was $58.66, so $59 and $60 a barrel are now in sight. We did get some data this morning showing a pretty steep drop in U.S. weekly crude inventories to the tune of 4.9 million barrels. That was the first drop in 6 weeks. So that move was enough to give oil prices another boost. Of course, less supply tends to fuel prices. Now, on the flip side, you also have optimism over OPEC's upcoming meeting. There is hope that OPEC will extend those global production cuts that are set to expire in March of 2020 to as late as June of 2020, and we'll get an answer on that at that meeting in Austria, Vienna, towards the end of this week. But yes, as you mentioned, energy is the best performing sector in the S&P 500, up about 1.5%, almost completely reversing the loss we saw in energy yesterday. Energy was the worst performing sector yesterday amid the broader market sell-off. Now, staying with energy for a moment, we also wanted to point to the rise in shares of Chesapeake Energy, up about 15% on news that the company has scored some sort of a debt deal to buy itself some more time with creditors. That stock has been really hit hard this year, down about 65% year to date, guys.
All right, Scott Gam, live on the floor of the New York Stock Exchange.
First, Postmates delayed its IPO earlier this year after filing the paperwork back in February, and now it's layoffs hitting the food delivery startup. CNBC reports that Postmates closed the doors of its Mexico City office, laid off dozens of employees. They're even reportedly looking for a buyer. This, of course, comes after DoorDash bought Caviar earlier this year from Square. So we've been looking at this space, which has been full of unicorns, but also you got Uber Eats in there as well, and saying there has to be some sort of reckoning and some sort of consolidation. Is this the sign that it's finally happening?
There will be more to come, but I think I continue to kind of play back in my own head the comments that Dara Khosrowshahi made on Uber's earnings call last month, where he said, we will compete, meaning the Uber Eats business will compete in markets where we believe we can be the first or second most important player. So if Postmates, one, isn't one of the two main players in Mexico City, or two, isn't able to get that specific market operating, they're going to leave that market. And I suspect we'll see from many of the names you see on this chart here, them selectively, these services, selectively close down their operations, because it's just not feasible for there to be multiple competitors trying to incentivize customers who frankly don't care which service brings them their food. It just is not economical. We've known that for a long time, but it does feel like the worm is turning.
I mean, I don't know. I think you guys have normalized this a little bit too much. I mean, this is way over the top. I mean, I'm extending your point. Yeah. Okay, this is like, there's way too much capacity here. None of these companies are profitable. And, you know, it's unclear how much demand there is at all from consumers.
And this comes on the same day.
I hate to be like bursting
want
a balloon here.
I definitely want it.
Well, how often do you really use it?
I don't. It has to not be super expensive.
You couldn't use it more than Jen Rogers uses this stuff.
Yo, she uses 4 a night.
And even Jen knows this stuff doesn't work. Right.
It is sad but true that I am their top consumer, and I think there's too many of them.
Right.
What this brings me back to.
And you're in New York, the most dense place with disposable income for this on the planet.
And I have choices.
Right.
And it's a city where things can come quickly.
Right.
But it brings me back to jobs. We were just talking about how important that's what this whole economy story is riding on right now. So Uber's had layoffs. Postmates is, I know it's in Mexico City, but if we are seeing consolidation here, think about the WeWork stuff. I mean, can we extrapolate anything forward out of this? Or is it just, there were too many of these kind of companies, everybody else is going to be okay?
Well, there's too much capital. That's what's causing too many companies in a way, and too many people trying to look for a return, and so buying these startup pitches. The other thing about these jobs, first of all, they're gig jobs. They're not full-time jobs, and to the extent they are full-time jobs, they're not very good full-time jobs. I mean, let's be honest, they're nothing like union jobs from the 1960s in a factory with benefits and all that. You can't build a career and have a family for the most part on these jobs.
But then I think this actually goes the other way, is these companies, many of them came of age when there was abundant cheap labor that would accept some of these circumstances. And so I wonder, in some instances, obviously, if you are working for Postmates in Mexico City, you now no longer have a job that is is bad. But kind of looking at the gig economy in the abstract, I think the leverage that a lot of these services had over labor for a long time isn't the case anymore, and is that part of the story here as well. I mean, the WeWork, it's kind of a standard corporate situation, right? But Uber drivers could now, shoot, you can go work for Amazon and get $15 an hour in full benefits, right? That's going to be more money than you are going to make driving an Uber. Now, you have to report to work every day. People like the flexibility. I'm not saying that's a great swap, but there's a lot of attendant problems there.
Right.
But all we ever hear, right, from people who come through this desk is that it's hard to find workers, hard to find good workers.
Well, that's an interesting point. Like in Mexico City, for instance, are they paying people 30% more than when they started this whole thing up?
Right.
And that is not good for a margin that's probably negative anyway.
Yeah.
Right.
Yeah. And I think those pressures are likely to continue in the year ahead. Well, coming up here on the final round, we've got the Decade in Review with Andy Serwer. The nation reeling from a huge opioid epidemic. Legislators and activists, however, spent their time pushing for another substances legalization. We'll talk about where we stand in the pharma business coming up after this. But first, take a quick look at where European markets closed on this Wednesday.
One of the biggest stories of the past decade has been the opioid crisis, which has hit companies like Johnson & Johnson, McKesson, and AmerisourceBergen. Simultaneously, however, we have seen the nation advocate more and more for the legalization of marijuana and the explosion of the cannabis market. Andy Serwer, you have been looking back on the decade, and this is a theme that you've been looking at, opioid in particular, and then you also got to cannabis. How do they inform one another?
Well, it's interesting, Jen. I mean, I just found it ironic, at the very least, initially, that so many Americans were so consumed lobbying and trying to legalize one drug, marijuana, while at the same time our country was being ravaged by another class of drugs. And I don't really know what that says per se about our society, except that we're kind of consumed by drugs in all manners of speaking. Mm-hmm. But, if you think about all the effort and the energy, I mean, we've got 11 states now, essentially, where marijuana is legal. And, Colorado was the watershed moment in the past decade. And there does appear to be momentum for more states to legalize. I'll say that one reason why that momentum has slowed, though, is because of the opioid problem, which has actually said, well, maybe marijuana is a gateway. 400,000 Americans have died from opioids over the past decade. I mean, it's staggering. Never mind all the people in rehab and lives ruined and injured in car accidents and babies born. I mean, it's just amazing. So, and then, from an investment standpoint, we tried to get all excited about the cannabis stocks, right?
We did. We were very excited for a few months.
And
now
right,
you're
and here they are.
Now.
And was that just a Bitcoin kind of moment, or is there real upside for these? They're Canadian companies for the most part, of course. So that's on the one hand, and then on the other hand, the dark side, which is the companies that have made and distributed opioids, OxyContin, Percocets, et cetera. A lot of these companies were just rock solid blue chip stocks, and they turned out not to be, right, Jen? I mean,
if you go back and look at them, I mean, that is the other interesting thing when I think about what is the next decade, because we've been waiting on the cannabis trade to become a real pharma play as well. And I'm not saying that cannabis is going to be the next opioid, but some of these companies are possibly going to be going into the next trend, right? I mean, we've heard that that's going to be used for epilepsy, and there's depression. There's other means of trying to harness cannabis. So I don't think the story is over for any of these companies by any stretch.
I think if you look at the healthcare space in the 2010s, it's very interesting because the decade began with Obamacare and ACA, and that was going to change everything. And guess what? One of the big winners was, right? The entrenched United Healthcare. Your traditional insurers ended up becoming entrenched by that policy. So you roll forward, and we say, all right, what do we need to address in the next decade, right? I think we all agreed that the opioid epidemic needs to be addressed, although classic modern American solution, instead of addressing that, we'll get excited about a separate problem, or a separate issue, which of course is legalizing marijuana. And then I think we all get the sense that if Medicare for All isn't something that a winning candidate runs on in 2020, it's not like that idea is going to die in 2024 or in 2028, right? So, but in a weird way, the outcome investing-wise would have surprised you 10 years ago. And I'm very interested to see how we get surprised in the next decade.
Yeah, 2 points there. One, it's so hard to predict, you guys, healthcare. I just like how it's going to
look at this chart. This chart's a monster.
All need it.
And
we all
the demographics are great. And one small thread in what you just said, by the way, Miles, is remember that the Trojan horse for marijuana was medical in many cases. Oh, it's a medical thing. It needs to be legalized for medicine.
We had a guest here saying this 2 days ago.
Right,
and
so many people who were opting, pushing for legal marijuana, really just wanted it for recreational.
Can I say what I think is going to be big in the next decade in drugs and healthcare?
Save this tape.
Okay.
Write it down.
Timestamp
is the psychedelics. And I think that is, Michael Pollan sat right
California,
there.
Man.
I was just about to say, not only that,
man.
San Francisco.
He sat right there. That book is very popular.
He's for LSD.
To change your mind. There's a lot of big pharma now, new studies that they're trying to launch.
Did you grow up near Owsley? Did he live in the same neighborhood, Owsley?
I am just telling you that
I've seen
that it's going to be a big trend. It's huge in Silicon Valley now.
Of course.
They're all microdosing. I don't know.
Wow.
In 2030, God, is 2030 going to be here in 10 years? In 2030, we'll all get together and we can see if I was right.
God, if we can.
Far out.
Right.
Far out, man.
Far out, man.
We remember the decade.
All right, coming up here on the final round, we'll be joined by BNY Mellon's Jeff Berger, who'll give us his take on why he thinks the market rally could be sustainable into the next decade. But first, let's take a look at some of the trending tickers today here on Yahoo Finance. Stocks heading towards the end of the year near record highs, but where does the muni market stand as we near the end of this decade? Jeff Berger is a senior portfolio manager at BNY Mellon. He joins us now to discuss. So, Jeff, we've had a very strong year in the muni market. I think a little bit under the radar from folks who are mostly following stocks. What's been driving that market so far this year?
There's been a number of factors, but by far the biggest has been just the technical drive from U.S. retail investors buying munis. And if you had to peel back the onion to figure out why they're loving this asset class, it has to do with a consequence of the Tax Cut and Job Act. The fact that state and local taxes being capped at $10,000 as the maximum you can deduct from your federal tax liability has led retail investors in droves into this market. They're looking for ways to find ultimate opportunities to reduce their tax liabilities. So they're buying munis.
Wait, so how does that work?
So the way it works is munis are tax-free, right? And so to the extent that you're buying a municipal, it's exempt from federal taxes. And if it's issued by a state you live in, it's exempt from that state as well. And so, for example, if you're living in, I don't know, Westchester County, New York, what have you, in Scarsdale, for example, and you're paying a lot of money in property taxes, and in the past, you could write off a lot of that, if not all of it, from your federal tax bill. Now it's capped at $10,000. And so what can I do as a U.S. Taxpayer to find other ways to reduce my tax liability? I buy a muni because all that interest is tax-free.
Now, we've heard from other guests in the muni space that there's a real imbalance, though, between the demand for these assets and the supply. I mean, do you see municipalities reacting to some of this, or have they been slower to say, oh, we can issue a ton of debt that previously wouldn't have been available to us because we have this kind of relentless bid from this specific kind of investor?
The answer is yes and no. So if we're talking about 2019 as a whole, I would say up until really July, August or so, they were somewhat slow in terms of issuance. But what we've observed at Mellon over the last, I don't know, call it 6 to 8 weeks, maybe a little bit longer, is really issuers taking advantage of the fact that there's a lot of demand, not only in the US, but across the globe. And what you've seen is an increase in what are known as taxable municipal bonds. So taxable municipal issuance is up in large part, and this is amazing.
That's trippy.
Yeah, because interest rates are so low today, issuers are taking out their previously issued tax-free bonds with taxable bonds because their true interest cost is lower today than it was when they issued their tax-exempt bonds years ago. I see that look, and
my brain.
Think about it.
I'm thinking. Believe me.
It's really a consequence of where rates are today. Because part of another consequence of the tax cut or the tax job in that act was it limited the ability of local issuers to refund previous issued tax-free debt with new tax-free debt. So what are issuers doing? They're issuing taxable debt now at costs even lower to them than the old tax-free debt. That's a lot. I get it, but it's issuers are being sophisticated and coming to market.
Just wait until we have negative rates. It's going to be even more. It'll be even more complicated. But next year's an election year, and for equities, we keep hearing historically, first-term president, fourth year is pretty good. What does an election year mean in your business?
Oh my goodness, it could mean a lot in under normal circumstances, and I think that I'm not really going out on a limb to say what we're going through right now as a country isn't necessarily normal. So let's put that aside and say under normal circumstances, elections generally mean a couple different things. One, typically you see on the ballot propositions and initiatives for the issuance of new debt. And municipal bonds, as a reminder, are typically issued to fund infrastructure. So one thing we'll be paying attention to is how much debt gets authorized at the local or state level, because that will have an impact on supply going forward. The other big implication from an election is what's the impact on taxes, or the possibility of some sort of tax change. Because to the point I was discussing earlier, one of the major drivers in 2019 was the tax-free aspect of most municipals. Is something, whether Donald Trump gets reelected or a Democrat gets reelected or elected, going to change the tax regime favorably or negative to municipals? And I think that under both scenarios, there's a strong case to be made that municipals turn out favorable under both proposals.
All right, certainly something we'll be watching in the year ahead. Jeff Berger with BNY Mellon, thanks for stopping by. Have a great holiday. We'll talk to you next year.
Thank you. Good to see you.
Coming up here on the final round, the big Saudi Aramco IPO is almost finally actually here. Could this massive offering be the one thing the IPO market needs to get back on track? We'll discuss, but first take a look at some of the leaders right now in the Dow with 35 minutes to go in the session.
2019 was a year of IPO highs and lows and no-shows. There's one more big one to come, though, and here to discuss, James Gellert, CEO of Rapid Ratings. Of course, we're talking about Saudi Aramco. On again, off again. We got sick of talking about it. What is the latest? Is this going to happen, and
it's
when?
It's going to happen. It's going to happen this week, unless it doesn't, but it's supposed to. The only thing we really know is that they're selling 1.5% of the company, and it's really a domestic deal. They've carved a little bit out for international investors, but the international IPO buying market really pushed back pretty hard, so they had to retrench and make it really a domestic deal. So I think you're going to see a distribution of a lot of retail and a lot of the sovereign wealth funds from the region, and a lot of Saudi corporates buying.
Do they feel compelled? And I guess maybe the other way to ask that is, would you buy it? I mean, should people look to get in on this thing?
Well, I think the real problem here, from a corporate perspective, Saudi Aramco is a great company. Right. We rated on our 100-point scale as a 94. That is very, very high. It's hard to be rated that well. So the fundamentals of this company are really good, but the fundamentals of the company are also a representation of the Saudi government. And the lack of transparency into what you're buying is really why there's been pushback all along. That is a theme that we've seen in the IPO market this entire year. So it's an interesting development that what was supposed to be the savior of the IPO market and was going to be a bellwether is really, it's got some very fundamental problems to it.
So let's talk a little bit about what happened. I guess it must have been late August is sort of when it all kind of unraveled. We had Lyft and Uber, newly public companies. It seemed fine. And then the WeWork story just falls apart. As you look back at that, do you think it was really market conditions that drove the valuation of that company down 70% in a couple of weeks? Or was it more of an idiosyncratic WeWork story that their team couldn't exactly sell to the market? And we found out a lot about who was really driving that boat, right? Was it the bankers? Was it Madam Newman? All that stuff. But, what kind of happened with that in your view, now that we have a little bit of perspective on it?
I feel like WeWork was the tip of the iceberg that people were able to see, but beneath that was a very concerned marketplace looking at the lack of profitability and the lack of governance and the lack of voting rights that came with a lot of IPOs. Yep. So you go back and you look at the financial health ratings of almost all of the tech IPOs that came out during this year, and they're all relatively low with the exception of Levi's, which we've talked about before. But you look at the Zooms, you look at the Pelotons. These were not Uber and Lyft. These were all not great, really strong FHR or strong fundamental companies. WeWork, highlighted all of the problems, and it really captured the market sentiment.
I mean, come on. In retrospect, it's just sort of lining up perfectly? Like, pushing the envelope, WeWork, and then Saudi Aramco. I mean, come on. You gotta guarantee you look back on this as the top. I mean, of the IPOs.
Put that. It's a big show of
Okay, we're doing predictions. Yeah. Everyone's doing LSD next decade, and this is the top. WeWork and Saudi Aramco. I'll stand by that. You can stand by your thing?
I'm standing by mine.
Okay, good. No, what do you think?
Well, I don't think you can look at Saudi Aramco as an IPO that's representative of anything else in the global IPO market. It is so specific to Saudi Arabia. It is so much tied to the Saudi Arabian mission to diversify from an oil economy and to try to gain more currency.
Treyas says they need money.
That's right.
He says they actually need money.
And this will do it, $25.6 billion to start investing in technology and a variety of different things that will give them a spread outside of oil and gas.
So what is the IPO of 2019? When we're looking back, what is the one that we're all going to be saying, oh, yeah, remember that one?
WeWork. The one that didn't happen.
All right, James Gellert, CEO of Rapid Ratings. Great to see you.
Thanks, Jen.
All right, coming up here, we'll have more on the final round. Plus, Peloton still on the defensive over that cringe-worthy ad just as it introduces some new apps, some lower pricing. We have all the latest on the Jen Rogers trade coming up right after the break. Welcome back to the final round here on Yahoo Finance. Miles Alden with you in New York. I'm joined as always by my co-host Jen Rogers, also joined today by Yahoo Finance Editor-in-Chief Andy Serwer. Let's take a look at where we stand right now. 27 minutes to go in the session. Green on the screen. All three majors are higher. The S&P and the Dow actually outperforming what we're seeing in the NASDAQ. We are set right now to snap a 3-day losing streak. The market has not had a 4-day losing streak since late August, and August 23rd, really the local low on this market. We're about 10% above the levels we hit back then. For more on today's market action, though, let's go to Scott Gamm. He's live on the floor of the New York Stock Exchange. Scott, we've got the market right now kind of shrugging off some weaker than expected payroll data from ADP earlier today. What's the story there?
Well, that's right, and it was a complicated ADP report, but basically economists by and large are expecting a rebound in the broader employment market in November when we get that November reading on Friday. And that's largely because the GM strike, the ending of the strike, is expected to boost November's numbers, just like it really dinged October's numbers when we only added 128,000 jobs in October. Now, for November, economists are expecting the addition of 170,000 to 180,000 jobs. So that would be a rebound from the October numbers if we did get to those levels. Now, it may be hard to visualize a rebound in the jobs number for November, given this morning's pretty bleak ADP private payroll number for November, which was 67,000. We were expecting 156,000, but remember the GM strike, you had 50,000 workers come back online in November. They were not counted in this ADP report this morning. So you could argue that the ADP report doesn't exactly tell the whole story, and perhaps Friday's jobs report will. All of this was summarized today in a note from economists at Capital Economics. Now, they acknowledge that the labor market is slowing, but it would really take a sharp downturn in the employment market, they say, for the Federal Reserve to go back to cutting interest rates. By the way, Friday's jobs report is the last jobs report before that December Fed meeting, guys.
All right, Scott Gamm, we'll talk to you after the closing bell.
Time now for Tech Howl. We are still talking about it, just like the rest of the internet. Peloton's holiday television ad. Let's watch it once more for kicks.
Okay, you ready?
Yes.
Now.
A Peloton? Give it up for our first time ride.
All right, first ride. I'm a little nervous, but excited. Let's do this. 5 days in a row. You surprised? I am. 6 a.m. Yay.
Well, Peloton has finally responded to all the noise, saying that the ad was misinterpreted. Yahoo Finance's Dan Howley is here to tell us what else Peloton had to say. So Dan, it's misinterpreted?
No, it's a tone-deaf, terrible ad. They're just trying to cover themselves up. So we actually got a statement from Peloton kind of responding to this backlash. And in it, it says, our holiday spot was created to celebrate that fitness and wellness journey. While we're disappointed in how some have misinterpreted this commercial, we are encouraged by the outpouring of support we've received from those who understand what we're trying to communicate, AKA, we done screwed up. We're sorry.
Or we don't care.
Yeah, we don't care.
It's your fault, not ours.
And that's the kind of, yes, that's the exact kind of reaction that is, where
that's what everyone's reaction is in 2019, right?
Oh my God, I'm sorry if you were offended.
Also, not everybody was offended. Didn't they also get some emails from people
they said
that
they
have
did.
a lot of time on their hands, apparently?
Yes,
how did they defend
Peloton. They basically said that Peloton's helped them. Right. We have our own Brian Sazi, who says that it changed his life.
Mm-hmm.
I don't see him singing that song while riding his Peloton, but whatever. I just think that this ad, I mean, who greenlit it? Just because this is the biggest cliche of a terrible Christmas gift you could give someone is something to do with fitness.
See, I don't mind that, but I mean,
if you asked for it, it would be different. If someone gave you something saying lose weight, that's what this commercial says, is get on this thing and lose weight. I would slap them in the face. I would say, no, that is not.
I think he just wants her to be healthy, but anyhow, whatever. I think she's just annoying with the phone.
Oh, well,
yeah, I thought
videos of herself.
I thought it was a weird advertisement, and I think the concern And I think it's a real concern, and I saw a Bloomberg story where they quoted an analyst who said this, like Peloton's ads are now known for being lampooned online, because it's not like this is the only spot. That was a little ridiculous, right? They have all the stills of all the idyllic places people are riding their Pelotons, which is not how they actually are operated in the real world. And so it's like, are they misunderstanding their customer?
But maybe it's a good thing. I mean, they're spelling the name right.
They're spelling the name right. And as they responded, when they responded.
Never been more popular, more famous than
right?
that moment.
To the very
I've seen cars with Peloton stickers on the back.
That's bizarre.
I have a lot of Peloton clothing. People have, I mean, it's like it's a brand.
Yeah.
But to the first ad.
It's a movement, Jen.
It's a cult. That sounds more like it. The first ad backlash that they had over where they put all the bikes, they said, we're part of the cultural conversation. We like it.
Right.
And they are part of the cultural conversation now. This is a little tiny bike company that just started a couple years ago. And here we are talking about it for the second time. And everybody on the internet's blowing up about it.
I mean.
And where they're just a little exercise company. They're happy maybe.
A media company and a tech company and a community company and a social media company.
I mean, I remember talking to the people at Ford when they had that Matthew McConaughey commercial
Oh, right.
series,
Oh, the
which they still do.
Lincoln,
and they used to make fun of that, and Ellen made fun of it. And I said to the head of Lincoln, I said, man, that must have just been terrible. What? And he goes, are you kidding me?
Love it.
That was the greatest thing. People were making fun of it all over the internet.
It was fresh off of
and people were buying Lincolns because of it.
So no more
Doesn't
free
matter.
advertising for
So Matt
Peloton.
McConaughey's in the next Peloton as well.
That would actually work.
That's
That
a
would
good
be
idea.
great.
There's
Matthew
another
McConaughey.
Peloton story today.
Which is
and
negative.
This
is
one
bad.
maybe
Really
could-
negative, or are you spelling the name right?
I think it could be really negative.
You think it's negative?
The other
Next one,
story,
wait for it.
because
Wait.
the new app for the
Matthew
Apple
McConaughey.
Watch, possibly positive, they're going to be streaming exercises to Amazon Fire devices in the US, the UK, and Canada. But here's the issue. They are lowering the prices for their digital services and their membership subscription, taking it from $19.99 for people that don't have bikes all the way down, $19.49 to $12.99. Just like that. Just like that. And then the people that have bikes is still stuck at $39.99
Well, you paid
per
the
month.
$2,000 to $4,000 for the bike in the first place, so you got that
so
income.
do they have a lot of room on those margins too to take those down?
So I don't think necessarily that to take them down that low is pretty drastic, but I think that's the direction that this company needs to go. Stop making it, because you talk about Peloton, everyone thinks you need the bike, but you don't. You can use an app, and now they have a Fire TV app that they're going to be using to let people stream this on their Fire TV. It's exclusive to Fire TV, but they have the Apple Watch integration. This is the smart move for them.
I don't know. I'm smelling a little Woodbury Common here.
You just said everyone thinks they need
You
the
know.
bike, but they don't.
They don't.
That's so scary. The bike sells for $2,400. They don't need a bike. Then why do I need to buy? I read this out of this Bloomberg story. Peloton, quote, makes a stationary exercise bike and treadmill with an affixed iPad-like device. It's like, what's the moat?
So it's
There's
like
nothing there.
It's
You don't
like
even
the
need the
Gillette
bike.
model, except you don't sell them the razor blade.
Yeah,
Oops.
You don't need the bike.
That's the problem.
But you don't need, nothing about Peloton in and of itself makes it unique. There are competing options out there with the exact same style where you can stream it to your iPad-like device or whatever, and it's a stationary bike. There's nothing in and of itself. So obviously they're selling the culture poorly through these commercials, and I think getting in with the apps and getting it on streaming devices is the way that they'll be able to grow that audience. Now, lowering the price, yes, that might be scary, but if you get more people, not many people can drop $2,000 on a stationary
Speaking
bike.
of scary, can you do that face?
Which one?
The woman?
Oh, the woman's face? I don't think so. She's
Okay,
like,
friend.
Oh, when she's like,
She did it.
I'm kind of scared. Why are you scared of the bike?
Bad.
Why?
Dan Howley.
Scared of a Peloton, ready?
We'll talk with you tomorrow.
All right, coming up here on the final round, we'll have the winners and losers during today's trading session. But first, take a look at some of the most active stocks here on Yahoo Finance today. Let's take a look at the winners and losers in today's market. Stocks in the red include Zscaler, shares of the internet security platform, tumbling today despite reporting an earnings and revenue beat for the third quarter. Let's take a look at shares of Salesforce, company out with results last night after the bell that disappointed on the guidance for next year. That stock lower on the session. Stocks in the green today. Alphabet, they're higher after the company announced on Tuesday that we might have a different structure here, right? Larry Page stepping down as CEO of Alphabet, Sundar Pichai, CEO of Google, now CEO of the whole company. I think, guys, first order of business, just rename it Google. Everyone called it Google anyway.
No, I never liked it. You know, Benioff congratulated Sundar last night.
Yeah.
Maybe he was like focused on that a
Well,
lot.
and they leave and they got richer. They both added
Yeah, Larry,
on.
They're not
right,
really-
because Larry Page and Sergey Brin didn't have enough money.
You know, Larry and Sergey are still on the board and they're controlling shareholders. Sundar.
A very interesting dynamic there, I think, in the years ahead.
See, Elizabeth Warren tweeted about it.
No.
She said, just because you're leaving doesn't mean you're not going to
you're
have to
responsible.
show up.
That's right. Coming up here on the final round, Nestle taking on Beyond Meat with some new plant-based alternatives. We will talk to their foods division president coming up right after the break. But first, take a look at how some big food names are trading right now. The latest company to expand its plant-based meat offerings is Nestle. The company will now have meatless DiGiorno and Stouffer's offerings made with Sweet Earth Awesome Grounds, a plant-based ground beef alternative. Joining us now is John Carmichael, president of Nestle's Foods Division, also joined by Yahoo Finance's Heidi Chung. So, John, let's just kind of start with why now was the time for Nestle to get into this business, and what's your process been like thinking about getting into a space that certainly for investors this year has been very exciting?
Yeah, well, I think it's important to know we've been in the business for 30 years in Europe with our Garden Gourmet products. So it's not something that's new to us per se, but something that we're aggressively expanding here in the U.S. And what we're announcing right now is moving into our big billion-dollar brand. So DiGiorno is the leader in the frozen pizza category, and Stouffer's is the leader in our frozen lasagna category. And what we're seeing is an increase in what we call flexitarian eating. So folks that are conscious about what they eat and are trying to reduce meat in their diet, but still eat meat and fish, And these are familiar recipes that reach hundreds of millions of consumers every year, and a great way to introduce a flexitarian diet.
Hey, John, it's Heidi. So why this partnership with Amazon, though? Because I know you already have a lot of partnerships with grocery chains like Kroger. So tell us why you decided to roll this out with Amazon Fresh in 2020.
Sure. We're still in discussions with a lot of other retailers. We expect this to be widely in distribution next year. Right now, at this point in time, Amazon is the only one that we can actually announce that we're out there with. We're excited to be with Amazon because obviously it's a very progressive grocer and is highly relevant to younger consumers that are the thought leaders in this particular movement.
So when you were looking to get a plant-based meat, did you go and talk to multiple people out there? How did you decide on going with the one you chose? What is it called? The Sweet Earth out in Moss Landing. Been there, lovely. But did you talk to Beyond? Did you talk to Impossible?
So Sweet Earth is a company that Nestle purchased a couple years ago. Sweet Earth has been going for about 8 years. It was born in Moss Landing as really a vegan and vegetarian company. Primarily started in full recipes, so burritos, empanadas, bowls, pizzas, and is available in the frozen freezer case nationally. That's the brand we've chosen to go out with. The alternative meat, the Awesome Burger. We've got Mindful Chicken. We've got a Benevolent Bacon, a Harmless Ham that are already in the marketplace now. And it's just now that we're bringing those products into our broader stream, more mass products, which is DiGiorno and Stouffer's.
John, you guys, or I should say Nestle, actually has a big partnership with McDonald's over in Germany and Europe. So can you tell us a little bit about your plans here in the U.S.? Do you think a partnership like that could actually come here to the States? And tell us a little bit about how it's going in Germany.
Absolutely. So we see this as both a retail, and by that I mean grocery and products where consumers can buy them and bring home and cook themselves, as well as an out-of-home or restaurant opportunity. And we're approaching that from both angles at this point. You'll see it in Winking Lizard Taverns in the Cleveland area, and we've got a couple other restaurants that we're right up the cusp of doing business with, and that's an area that we're quite aggressively pursuing also.
Hey, John, just quickly, Heidi and I have been talking a lot lately about SKU madness. And what is it like to be in your business knowing that you have to compete and keep adding SKUs and keeping up and trying to get ahead of the other guy?
Sure, that's a really good question. I think it's a balance is a good way to think about it, of your big recipes and continuing to make them relevant. So Stouffer's lasagna, DiGiorno pizza have been around for decades. They're huge items, but we continually need to renovate them, add new items, in this case, like adding the Sweet Earth Awesome Grounds, but could be new flavors, could be greater rising doughs and these kinds of things to keep those really relevant. At the same time, new varietals or new SKUs, as you put it, that bring in what are maybe some of the more cutting edge ingredients or recipes or ethnicities into the category to continue to keep the category relevant. So we balance between the two, and it's important to keep an eye on both.
All right, John Carmichael, president of Nestle Foods Division. Thanks so much for joining us. Talk to you soon. Heidi Chung,
thanks for having us.
Thank you. Heidi Chung, have a great evening as well. And Andy Serwer. It's a segment of goodbyes. Thank you for joining us today.
Okay, well, we get to get the food.
There you go.
Leave.
You guys can go enjoy the lasagna.
I want to try it.
No, they don't get to try it. We have to leave. They're going to take our food with us.
We'll all try it.
We'll all try it.
Okay.
Coming up, the closing bell on Wall Street is just about 8 minutes away. First up, we're going to get technical with Jared Blickery at the Wi-Fi interactive touchscreen. We're back after this.
All right, stocks looking to end the day after 3 straight losing sessions. Yahoo Finance' Jared Blicker joins me now at the Wi-Fi Interactive touchscreen. So Jared, we were looking at our worst streak since August, kind of a turnaround today. Anything stand out to you here just in terms of how the market has been reacting to what we know has been a pretty noisy tape over the last few days?
Yeah, let's go right to the VIX because that tells the story there. I think we addressed this a couple days ago, and I was on some of the other programs pointing out something very interesting happened. So let's go to a 6-month view, and we're going to draw a negative trend line here. And I had been looking out for this for over 2 weeks. We got a spike right to 18, actually 17.99, and that marked the bottom in equities to the minute yesterday in the S&P 500. It was only down 2.7%. That's the S&P 500. I was expecting a little bit more, but nevertheless, that caught the turnaround. If that's it, we could have nominally lower prices, but the worst is probably over here.
Yeah, I mean, it just seems like the sell-off we had the last couple of days never kind of gained the legs that perhaps the bears were looking for. You know, we had yesterday.
They were on Twitter, I'll tell you that.
Well, the bears are always on Twitter, we know that. But if you look at yesterday's action, for example, right, I think the trade headlines yesterday, just from a news basis, were significantly more negative than any of the other days, right? We're talking about a 2020 trade war, and yet we had IPOs, software names, the Russell, all outperformed significantly yesterday, and we came well off the lows.
There's a reason for that, and that has to do with the 10-year T-bond yield, and that was down 12, 13 basis points yesterday. It tied for the lowest or the biggest drop in a year and a half, and so that's why tech software was outperforming. Of course, today is a different story. We got some negative earnings, but just looking at the S&P 500, what the headline situation you were talking about just now tells me is if this December 15th passes and we get additional tariffs, that's not priced in.
Yeah.
I don't think that was reflecting priced in. The market is conditioned now to move on headlines, but until the actual thing happens, it's kind of fluff. It's binary.
Well, and so what do you make, though, then of a day like today where we get marginally positive trade news, I guess you could say, but we get some fairly negative labor market news? I mean, I get the sense that whether the news is trade or economically related, anything bad just gets faded, right?
So you're talking about the ADP here?
Yeah, the ADP. I mean, because the Fed, right, is backstopping the whole thing. So why would you ever want to get a little bit more bearish on the market? Because you know you have Jay Powell there as your friend.
Yeah, the problem is, though, and I think we've talked about it, if the Fed reduces rates once again in December, we're not dealing with a mid-cycle adjustment, we're end of cycle, and I think that sends the wrong message. But I just go back to the fact, momentum is to the upside, and until we get to an event that really pours cold water on trade, really disrupts business sentiment, like imposition of additional tariffs, this market's going to continue to go up. And something else interesting here, we got the S&P 500 up. We still have positive seasonality in December. This is from Ryan Dietrich. Here's what your average December for the S&P 500 looks like. Nearly all the gains happen late in the month.
Yeah.
So if we're just going by seasonality, we could go sideways here, maybe a little bit up, but really don't see the gains until towards the end of the month.
And guess what we call that?
Santa Claus rally?
Boys and girls, that's the proper Santa Claus rally. All right, Jared Blicker live at the Wi-Fi Interactive touchscreen. After this, we've got the closing bell on Wall Street, plus Target getting a boost from analysts over at Cowen who say it's one of their best ideas. We'll have that call coming up right after this.
Welcome back to the final round on Yahoo Finance. I'm Jen Rogers with Miles Udland, and joining us for the closing bell, Wi-Fi AM host Dim Roberts. Looking at live pictures there, NASDAQ market site and the New York Stock Exchange. Looking at Deloitte at the NASDAQ. We have stocks coming back here from a 3-day slide on some renewed optimism around trade that everything will be just fine.
Thank God.
So don't worry.
It's coming.
It's
Phase
safe.
one.
The water's warm. Risk on. We are awaiting third quarter results from Slack and Restoration Hardware. Restoration Hardware. Now we got to do it because we got Berkshire Hathaway having a position. RH we might not have been so excited about, but we're excited.
They always
Warren likes.
They always moved a lot.
RH has always had fantastic shareholder letters, but we're not doing radio, so we don't need to read out all of the letters to the viewers here. But they are usually colorful, at the very least, whether the quarter is good or bad.
And it can move a lot. But
Yes.
now it has.
Well, it's a
Veritas.
heavily shorted stock. Warren Buffett bought a bunch.
And a store that, whether you frequent or not, I think we can agree, gets better reviews of its in-store experience than, say, names we often all critique. Bed Bath & Beyond.
Oh, yeah, but you can't.
Sears.
Yeah, but Restoration
Kmart, I will say,
anything you need.
I'm not sure what the crossover is between the Kmart shopper and the RH shopper.
No, although Restoration Hardware.
Do those Venn it's not a Venn diagram.
premium
it's just
is
two
it?
circles. Restoration
Yes.
Hardware?
Yeah. It's
Quite.
super high end?
Yes.
Yeah.
Really? I think only one super.
Yeah, okay, one super.
Okay. But like the next step is custom furniture. So I think on a made for floor
then
basis.
Warren, man of the people, not going very popular.
He's worth $60 billion.
I know, that's the joke, but he Wells Fargo.
NetJets.
Yes, yes,
Yeah,
NetJets too, you're right. is a
Okay,
good
he
example
has
of,
some other
Kraft Heinz, Americana, generics.
super
Ketchup and custom
luxury
furniture.
It's amazing. Looking at the market today, energy.
Back on topic.
Back on topic. Yeah, come back. Oil up. We had U.S. Inventories declining. Also, if everything's okay with trade, then that can bring back the narrative that the global economy is going to be okay. So we're going to have demand, and oil's doing well. XLE up 1.5% here. That is the only sector with a more than 1% gain that easily outpaced the broader markets here. The number one best performer in the S&P, L Brands, and then we're going to talk about Expedia later as well. Expedia, nice move up to the upside here, up some 6%. But overall, I mean, this is just a trade or just like hey, we had 3 days down.
No, I think
down.
it's definitely the trade news, but I thought that we had agreed that we had reached a point where on many days we weren't going to whipsaw based on one little bit of potential encouraging or, in some cases, negative news on trade. And yet here we are, we're back. It is happening. It is happening that everyone kind of overreacts. I mean, it wasn't even 24 hours since President Trump said, I like the idea of waiting until after the election to make a trade deal.
Yeah.
And we said, oh no, after the election. And everyone said, see, no phase one deal. And a day later, we hear, oh, wait a minute, okay, maybe we will get a phase one deal, and we're off to the races.
But that's why it's called the marginal bid, right? So it's like all else equal, that's the only thing that we have to react to, right? Because it's not like the economic picture, the Fed picture, the general market direction, none of that really changed.
Although, when you say it's not like the economic picture changed, we got very, very encouraging holiday shopping data.
But then
on
we
Black
got
Friday and on Cyber Monday.
But then we got marginally discouraging labor market data.
Yeah, marginally discouraging.
But I'm just saying, the economy has clearly entered a slower phase the market is now comfortable with, and it's likely not going to create a situation where the Fed would revisit its assumptions, thus carry on as
So
usual.
we'll overreact to a trade.
Right, that's all we've got left.
As long as we've got the Fed. We got the Fed put.
I think we just
we're
got a
gonna be
preview
fine.
into Miles's next Miles morning newsletter tomorrow. Trade. It's all we have left to trade on.
For more on today's market action, let's go to Scott Gamm on the floor of the New York Stock Exchange. So, Scott, just looking, I mean, we're basically up and pretty much held our gains through the day. Again, we've been discussing, what is it? Is it just trade? What are people saying down there?
Well, a much better day than yesterday, although we didn't quite rebound completely from the 280-point drop in the Dow from yesterday. But here we are today with a nice 150-point gain led by the banks. JP Morgan, Goldman Sachs are your two best performing Dow stocks. You also saw strength in Johnson & Johnson and Merck. By the way, this is evidence that perhaps investors really shrugged off the questionable economic data that we saw this morning when you have bank leadership, which is pretty much a proxy for how our investors feel about the economy. The laggards were Cisco, Boeing, Visa, and Walgreens. And by the way, you can blame Boeing for the market kind of giving up a good portion of its gains towards the end of the trading session. Boeing stock closing at session lows, down about 1%. And then we do want to mention oil again, rising for another day. We did get some data this morning showing that U.S. weekly crude inventories fell by 4.9 million barrels. That's the first drop in 6 weeks, so less supply rather, helps to boost prices. You also have an OPEC meeting this week, and there's expectation that OPEC will extend the production cuts deeper into 2020, and so that's why you've got West Texas Intermediate crossing $58 a barrel today. That is significant, guys.
Scott Gamm, we'll talk with you tomorrow.
All right, time now for our call of the day. Today we've got Cowan talking about a name we all know well here. That is Target. The firm raising its price target on shares to $150 from $145. Now they say the valuation is relatively inexpensive compared to Walmart. It sees it as a long-term winner in the retail space. It thinks Target has a strong balance sheet. And I think that overall there's a sense that Amazon isn't necessarily going to just kill everybody and that there's no chance to fight back. We've seen Walmart gain some traction, but really all the heat in the last couple of quarters, it seems, has been on what Target is doing with whether it's in-store pickup or just making their website a more positive experience.
I was interested in the line differentiated private brands. They like that a lot. That about 33%.
They have Chip and Joanna, right?
Of digital, sure. Chip and Joanna, fine. Yeah, we heard the Discovery CEO David Zaslav talking about that as well, about Discovery adding Chip and Joanna after Discovery bought Scripps. Everyone loves Chip and Joanna, but just more interestingly,
shiplap that story,
sure,
baby.
That story of private in-house labels and brands. Amazon's doing it, Target's doing it, a lot more stores are doing it. Stores that in the past were just, we have the shelves, and we'll put your products on our shelves. Now it ain't so simple, is it? Now you go to Target, it's like, oh man, if it was hard in the past to get into, say, a Whole Foods, well now it's hard to get in everywhere because you're competing with their own things that they want to promote. I just think that is a narrative that's not going to go away. That is a really interesting trend.
So as much as people have started to buy the Target story, Cowan really thinks that there's a number of factors that are still underappreciated or misunderstood. And one of them goes to the proprietary part, which I think has driven a lot of loyalty to Target. And they call that out in the ability for them to maintain the robust digital growth that Target has seen. Is they're kind of unlocking this loyalty program, the Target Circle. And Target has always had like a different level of cachet. They're seeing that the growth.
Target.
So the growth and usage of the new loyalty program, which is Target Circle, they find that the app is also really easy to use and is driving a lot of digital growth there as well. And then that we're completely kind of not fully understanding how they use the word masterfully. They've masterfully leveraged their stores as fulfillment hubs. Remember, it was like, how is everyone going to get these packages? What will Amazon do? Amazon's going to have to build out all these stores. Well, Target's like, well, we have all these stores. We're just going to use what we have. It's working. It's working.
I remember the first time that anyone had heard of who Scott Galloway was. It was because he made the big play that Macy's would crush Amazon because they had all the flexible warehouses. Now that call was dead wrong, but he was speaking to something that I think Target has to some extent unlocked, and that everyone has always believed intuitively. You do the exercise and you say, of course, the physical footprint should make sense for these companies.
Target had to do the shipped purchase to do that. Shipped. Macy's is also mall. I don't know. Their locations are different and too big.
Yeah, you don't
and
see a
leveraged too
freestanding
highly
Macy's
to
in an outdoor strip mall.
Right, like the places that Target has put them near your homes
Yep.
is easier for you to drive right up.
Can't just drive right up to Macy's.
Get it shipped out to you quickly.
And they've got Target's done the smaller format stores here in New York, and I think in other urban outposts.
Those are little cuties. By the way, you made the Target joke. I would actually argue that, and maybe it's just anecdata here, but that sort of nickname used to be so ubiquitous, and I feel it's gone away a little, and I think that's because the nickname, when people used to say, oh, Target, it was sort of derogatory in the sense of like, because it's trash, and actually now people have decided it isn't trashy, it's cheap, but still nice, and I like it.
Yeah.
So now you don't hear people saying Target, they say, Target, I like Target.
That's interesting. One of the bear case and the risk is tariffs. And, it's still out there.
Fortunately, that's not unique to Target.
Yeah, everybody's going to get hit by that.
Good to have a problem that the entire American.
So if you buy Target, it's going to get hit just like everybody else.
Well, they actually say that they think Target's better positioned than the majority of their retail peers.
Yeah.
They think Target's
that's my point. Yeah.
going to do better because of scale, the multi-category sales mix they have, and their global supply chain, not just based on China. But still, it could impact their ability to raise prices.
Yeah. I'm not sure about this acronym, BOPUS.
Oh, you don't like that? Buy online.
I mean, I know what it is, but it's just a funny.
BOPUS
and SHPT.
Drive up and BOPUS. Wait, define BOPUS for us again? Buy online.
Pick up in store.
Pick up.
Up. It should be BOPUIS then.
BOPUI.
We're going to figure this out. Coming up, they're crushing it in the wearable space. Whoop CEO on their fitness trackers and why athletes like Tiger Woods and LeBron James are believers. We're back after this.
Whoop.
The IDC predicts that the wearables market will grow by 15.3% this year. It's going to continue a steady rise over the next 5 years. And one wearables company, Whoop, has attracted users like Steph Curry, LeBron James, and Tiger Woods. You know all those people looking to take this tech beyond just watches. And joining us now is Whoop CEO Will Ahmed. So can you just tell us what the product is for people that are still wearing Apple Watches? What is this?
So really our mission at Whoop is to develop technology to help optimize performance. So we believe every individual has an inner potential that you can tap into if you can better understand their bodies. And we've developed technology across hardware and software and analytics really designed to measure you.
Yeah.
So this is collecting by far the most data of any product on the market. We sample data 50 to 100 times per second.
Per second?
Yes, across 5 different metrics. And really the main readouts for the end user are to understand strain and recovery and sleep. So all of us is putting stress on our bodies, whether it's in the form of exercise or daily activity. But what you also don't realize is how's your body recovering? Is your body prepared for that big workout, for that Barry's boot camp class? Or do you need to dial it back? So in some ways, Whoop is the first fitness product to tell you to sleep, to tell you actually not to work out. And that's where a lot of the, I would say, the balance between strain and recovery comes in.
Well, and so, Will, I'm curious, because you guys aren't like, you didn't start yesterday, but it feels like in some ways the sleep emphasis trend has really expanded over the last couple of years, but you were on that a few years before that. So thinking about your background, what kind of led you to feel like recovery was the area that was being underappreciated? Because it wasn't that long ago that you didn't hear from anyone about sleep. And then like you watch the World Series this year, all you heard is how much Justin Verlander sleeps. And it's like, all right, I get it. He sleeps a lot. But apparently Tiger and Steph and others also believe that's a huge area.
Well, it's funny how much sports and athletes can influence the overall market and just sort of consumer well-being, right? You think 40 years ago, really 30 years ago, that's really when athletes first started lifting weights. You know, and now you can't go to a hotel in America that doesn't have a gym. And I think the next story that's being told is really around sleep. And for me, I got into the space because I was an athlete myself. I was always into sports and exercise, but I felt like I didn't know what I was doing to my body while I was training. And now you're seeing athletes talking about sleep and really talking about recovery, because it turns out that an athlete who gets 8 hours of sleep is a much better athlete than the same athlete who gets 6 hours of sleep.
You're kidding.
Surprise, surprise, right? But if you don't measure that, you can't manage it. And that's where Whoop comes in. By being able to measure sleep every night, understanding when you went to bed and when you woke up, and doing that in a consistent way, you can start to action against these things.
Will, let's zoom out a little bit. I'm curious your take on when we'll get to kind of saturation with wearables, because even though we've seen great growth for a lot of products, you know, Apple Watch has done well, now Fitbit had its struggles, now Fitbit's selling to Google. In a larger sense, when we just talk about the concept, I mean, you still have people, I'm one of them, I think watch is pretty good. I like that it's a real watch, it just shows the time, that's it. I don't wear tech on my wrist, I'm not convinced yet. When do you think more people will start to kind of have their minds changed? What's the pitch for those folks?
Well, I think the key with any wearable technology is it needs to deliver value to the end user. And where you've seen products of maybe the past 5 or 10 years not have mainstream adoption is that people have put them on and they haven't gotten that much feedback from them. Our positioning at Whoop is we want to give you actionable feedback to perform better. And today we have a fairly motivated end user. So people that are executives who want to better understand travel and sleep and stress, people that have very active daily jobs, people who are fitness enthusiasts or endurance competitors who want to make sure they're training appropriately. And I think over time, our technology is even going to be able to help people who are less motivated. And that's where you'll start to see even more mainstream adoption. Now, to your point about watches, I agree with you, right? Like, Whoop actually doesn't have a screen on it. It's designed to be a passive monitor, something that you don't have to look at all the time. And in a lot of ways, I think technology is, invading people's lives rather than improving it. You'll notice this doesn't have a microphone, it doesn't have a screen on it, it's not making noise at me. And that's very important when you think about something to holistically understand your body.
So what's the business proposition here? You guys just went through, you did a Series D, $55 million. It's a subscription model as well here. You're not just selling I guess they're not watches, you're not just selling the device itself. So what's your plan for how you guys are going to monetize this?
Yeah, so Whoop sells a membership for $30 a month, and everything's included in that. So hardware, software, analytics, you can get plans for as little as $18 a month. And again, this hardware comes free with that subscription. Now, if at any point you feel like Whoop isn't giving you value, you can cancel. So we feel it's our responsibility to be delivering value to you every month, every day, every week to ensure that you're getting a great experience.
Will Ahmed, Whoop CEO. Great to see you. Thanks so much for coming in.
Thank you.
All right, Slack's third quarter results just hitting the tape. Let's go to Shauna Smith in our newsroom for a breakdown. Shauna.
Hey there, guys. All right, so let's break down these numbers here. A beat here on revenue for Slack coming in at 168.7 million. The estimate was for 156.2 million. So that's a growth of about 60% year over year for Slack. The loss per share coming in slightly better than expected, so a narrower loss than what the street was expecting. Slack reporting a loss of 2 cents. Now the estimate was for 8 cents a share. However, if you do look at the stock, shares are moving downward. Moving lower here after hours, off just around 2%. Going through the release, guys, some of the things that are sticking out to me. They added 101 paid customers with over $100,000 in annual recurring revenue during the quarter. Now, this brings the total of that to 821 paid customers that have greater than $100,000 in annual recurring revenue. We know that Slack is trying to build that. That will be a key to their future growth. Speaking of high net worth customers here, they exceeded 50 paid customers with over 1 million in annual recurring revenue. That is something that the chief financial officer highlighted in this release. But again, it doesn't look like it is pleasing the street, at least with the stock off almost 5% in after hours.
All right, Shauna Smith, live in our newsroom with Slack's third quarter results. Dan, a little nugget for you here in the release. Chamath stepping down from the Slack board.
Chamath Palihapitiya.
Palihapitiya.
Wow.
Now the CEO of the, what's that company called? Space
Branson.
Space Branson
Right.
situation. The
Yeah,
Universe
that's probably
Company
taking him
thing.
a long time.
Universe Company thing.
If you want to get to Mars, you got to be focused.
That's right.
Can't have 3 different jobs. 'Cause it's also at social capital.
You know, it's funny, Jen, earlier we had our IPO guest on, and Slack did not come up as one of the IPOs that defines the year, but I think, I mean, their direct listing, always an interesting topic, just how they came public, but this is a stock that has really never had, I mean, Peloton, for all of its problems with the stupid ad, is back well above the IPO price. It's had a good run as a stock. Slack has never really had, in its time as a public company, any sort of positive stock price momentum for a sustained period.
It has indeed, not for all the excitement that was around it.
No, the still run strong.
You have to.
It's the hue and cry.
Yes.
It's all in there. The customer numbers. I mean, it's not terrible, as Shauna was noting, but we recently got those numbers from Microsoft Teams coming out.
Yeah.
Just how big it is and how much they're growing.
Well,
and how you compete with that.
For quite a while, when we would start to hear, oh, Slack, you know, direct listing and it's going to be hot, and yet more competition because of Microsoft Teams, watch out. I think for a while you'd hear that and say, okay, I mean, you know, Slack is its own thing and people who use it really love it and they're devoted and loyal. But you know what? Now that narrative of the threat of Microsoft is real and much louder, and you're starting to see that Slack should be worried. Maybe Slack sells in the end to Microsoft.
Going to be an interesting call, I think, for Slack here coming up in the next hour or so. Well, coming up here on the final round in just a couple of minutes, Stevie Cohen is looking to go all in on Mr. Met. We are back with some reshuffling in the professional ownership space right after the break. All right, billionaire Stevie Cohen wants to go all in or more in on the New York Mets. The team confirming in a statement to Yahoo Sports that Cohen and Mets ownership are negotiating an agreement which would see Cohen increase his investment in the ball club from 4% to 80%. Now, as part of this agreement, Fred Wilpon will remain in control, and he'll also be the CEO of the company for 5 years. Jeff Wilpon will remain the COO for 5 years as well. I think a lot of Mets fans would prefer there are no Wilpons associated with the Mets, but for the next few years, the family will still be a part of this. Now, Stevie Cohen, of course, president of Point72 Asset Management. He will eventually be the majority shareholder in the Mets. At some point in the middle of next decade, Cohen will be the owner, and he will get to change things and do whatever it is he wants. Dan, I think it's just a very interesting time in the professional sports world because the valuations of the teams are going up. There's a lot of guys like Stevie Cohen now runs a family office. David Tepper owns the Panthers, now runs a family office. And there's a lot of these rich guys out there. They've got billions of dollars, and guess what everyone wants to do because it's cool?
Own a team.
Own a sports team.
Why
And
not?
I feel like Cohen is not the last guy we're going to see, not by a long shot with this sort of trend.
And just a quick aside mention, but it's a fun one. We all watch Billions. We've got people watching us right now who watch Billions. You've got the Axe Capital character, Axelrod, who is supposed to be, after all, Stephen A. Cohen. And there is a plot line about Axe trying to buy an NFL team, and the owners call him eventually, and someone says, "You'll never be an NFL owner." Well, maybe next up we'll see the MLB ownership plot line. But yes, you're right. I mean, the Wilpons have been underwater because of the Madoff stuff for so long. That was such a big story. Even when everyone else was finally kind of clawing their way out, the Wilpons had just invested so much money with him, and it put the team and the finances of the family in a hole for so long, even though that trustee, Irving Picard, really has clawed back almost all the money, which is amazing. But I think you're right. The story to me isn't Stephen A. Cohen is going to own 80%. It's the Wilpons are sticking around for 5 more years.
Yeah.
I mean, how often do you say, okay, we're going to sell 80% of our team, but we're staying in charge for 5 years? Goodness gracious. Now, of course, the statement from the team says that Fred will still be the person in control, is the official wording we're seeing from the Mets statement for 5 years. But we'll see how much that's really true. Maybe he's the figurehead, but the guy who owns 80% owns 80%. So come on. But you're right. It's only going to continue. Rich people want to own teams. And I like to say, now our editor-in-chief, Andy Silver, always cautions me, well, nothing is recession-proof no matter what. And yet, it's the closest thing to a recession-proof investment in the sense that you can buy a team for $1 billion. It can be the worst team in the league. And in 3 years, you can flip it and sell it for more than you bought it. So, it doesn't matter if it's the Marlins. I mean, the Royals just sold for $1 billion. Who knew the Royals were a $1 billion team? So right now, Forbes, which does these valuations, values the Mets at below $1 billion. No way. Mets are worth $1 billion. They're all worth more than $1 billion.
I agree.
Are they going
Even though
to
the
get
planes
better?
are very low over that stadium, more than $1 billion.
Very low. Restoration Hardware's third quarter results are out. Let's go to Shauna Smith in our newsroom for a breakdown. Shauna.
Hey there, Jen. So mixed results here for Restoration Hardware. Revenue coming in a bit light, coming in at $677.5 million. The estimate here was for $680 million, so slightly missing expectations. Profit, though, did beat expectations. We have earnings per share coming in at $2.79. The estimate was for $2.24. Taking a look at the stock, it wasn't really changed right after the report was released. A couple of things, though, that are sticking out to me in this report. You can see the stock off just around 1% right now. A couple of things. Restoration Hardware did increase its long-term outlook. Digging into this, what this exactly means, they increased their net revenue growth of 8% to 12%. They also, in their report, said that they now believe that there is an opportunity to build a $20 billion global brand as they expand internationally and further develop the RH ecosystem. That, of course, is something that investors were watching in this report. So again, the slight miss on sales here for Restoration Hardware, that could be one of the reasons that the stock is moving lower in after hours.
Shauna Smith with Restoration Hardware's third quarter results in the newsroom.
CEO Gary Friedman taking on WeWork in his letter. Everyone should read it.
It's going to be.
Everyone should read it.
I can't wait to get into the
We'll talk about
letter.
it. We'll talk about it tomorrow.
All right. Or you never know.
Maybe later.
You never know. We might have
Who knows?
time. If
Who
we go
could
to
say?
break and we come back quickly, we'll be fine. Coming up, what we're watching tomorrow in the look ahead. If it's a short one, we'll have others time to talk.
About James Bond.
Plus, James Bond is back one last time. The full trailer is out for No Time to Die. We're back after this with a little 007.
the world is arming.
And now here's Miles with a look ahead at what will be making headlines on Thursday.
Well, on Wednesday, we got good news and bad news. The market reacted to the good news. Well, why? Because the good news was about trade, the bad news was about the U.S. economy. And the first one matters a little bit more right now than the second. So what we know is that the economy is growing at a slower rate, but that story isn't changing. The economy entered this new gear in the summer. People got very worried about a recession, and then the Fed stepped in and people stopped worrying about a recession. So Wednesday's data didn't really do enough to make investors revisit their view that no recession is coming in 2020, and the Fed will still have our backs. Maybe Friday's jobs report changes that. Maybe next week's Fed meeting does too. But today, the market loudly and clearly said the economy right now is not a primary concern. And so, trade becomes the marginal bid in a market that sits near record highs. On Wednesday, the trade news was good. Monday, Tuesday, trade news not so good. This is the whole market right now. It's not that hard to follow, and there's really no need to overthink it. Trade good, stocks up. Trade bad, stocks down. Now turning to the calendar for Thursday, on the data side, we'll get the weekly report on initial jobless claims, factory orders for October, and as well as the October balance of trade. Then on the earnings front, Tiffany, Dollar General, Zoom, Okta, and Ulta Beauty are among the notable companies set to report their quarterly results.
I feel like the Tiffany Dollar General Venn diagram is like the Kmart RH Venn diagram. Just for you.
I think
better than the
it's
RH.
more Venny than the Kmart RH.
Oh, really?
Mhm.
I think there is some overlap. Bond is back. The official trailer for the upcoming James Bond film, No Time to Die, is finally here, and it features some familiar characters. Daniel Craig returns as Bond, with Léa Seydoux portraying the current love interest. And of course, there's always Bond's iconic Aston Martin featured all throughout the trailer. We don't know who's doing the song.
Well, it's the same song, right?
No,
the whole
but
intro
like-
song is the
yeah, the
important
intro
one.
song, No, right, but
I know, but I know what you're saying. Right? Yes.
That song.
Skyfall, or yeah, I don't.
Da, da, yeah, that one.
No, Jen, keep going. Keep going with that one. No, keep going.
That one. Although,
I have to say that every time there's a new Daniel Craig Bond,
right?
Especially Miles, as you were reading that intro, the Aston Martin, I sort of think snooze, and then they're always really good. If you like just a fun action movie, there's nothing to stress
Right.
about. Sure, good enough, good fun.
All I want to know is, when does James Bond join the Marvel Cinematic Universe?
The next James Bond. I thought
Daniel Craig.
The internet agreed. We all wanted it to be Idris Elba.
Boy, we're really playing this whole trailer. Still going.
Right.
It's the full length.
Well, better to look at the trailer than us.
This is a.
Oh, there's a motorcycle
Helena Bonham Carter's in it.
jump coming up.
I don't think that's a spoiler. It's right on the internet there.
Anyhow, this is good stuff.
Here we go.
I think we better go though.
Favorite Bond, Jen Rogers before Daniel Craig?
Roger Moore.
Okay. I'm going Pierce Brosnan.
Well, we grew up with Pierce Brosnan,
Right.
Pierce Brosnan was on the cover of the N64 GoldenEye game.
Exactly.
That's why he's the real
why it
Bond.
matters to us. And I'll give you one other trivia. Favorite Daniel Craig movie other than the Bond movies? Layer Cake.
Oh, don't know one.
Never heard of it, but I've eaten them. Coming up,
in
we'll have more on the final round, plus our top take. It has been a year of departures from the C-suite Expedia with the latest boardroom shakeup. We'll discuss what the deal is with top execs stepping down after this. Welcome back to the final round here on Yahoo Finance. Miles on with you in New York. I'm joined as always by my co-host Jen Rogers. Also stopping by on this Wednesday, the host of Wi-Fi AM, Danny Roberts. Let's take a look where the market settled just 23 minutes. Oh, not 23 minutes ago in the session, 23 minutes ago in the show.
Oh,
The market's
can you
closed.
Imagine if the
market's closed.
at 5
It's
p.m.
reflexes. It's
Closed.
reflexes. Like it's 3:30. We were green across the screen today. We came off our highs of the session. The Dow been up about 215 points or so at its highs, but all three majors finishing in the green on the day. A little bit of a reversal from what we saw yesterday, though I think, Jen, in the end, it was kind of a lackluster rally yesterday in the way that lackluster rally today in the way that yesterday's sell-off was a little bit lackluster when the dust sort of settled.
When everything is all said and done, it was all fine.
Wow,
It's
you're
just-
starting to sound like me.
Oh, geez.
Oh, below 28K.
Stocks usually go up.
Yeah, there we go. All right. This is all I wanted. One convert.
Let's turn to our top take. It's more turmoil in the boardroom. Expedia is the latest to shake things up. CEO Mark Okerstrom resigned following a disagreement between senior leadership and the board. CFO Alan Pickerel also leaving.
Goodbye.
Barry Diller, chairman of the board, and vice chair Peter Kern now will oversee the company and manage day-to-day operations while the board seeks replacements. The stock moved on the news here, jumping a bit. We've seen a lot of shakeups recently. This one's kind of different, though.
Of the CEO exit.
Would you say? Or
Why do you think this one's different? I think this can be added to the list. I'd say Larry and Sergey are different. That's an exception. You know, it's tempting to add them to the, wow, what a year in CEO exits. But look, Expedia, the stock has not been doing well, down 11% over the last 2 years. Right. Even with the bump from this news, down 6% in the last 12 months. And it's been a tough time for all the travel names. I mean, there's Priceline, there's Hotels.com, there's Expedia. There's a lot of competition in this space. Yep. I don't think there's too much loyalty. Look, I'm booking a hotel right now for this weekend in Florida, and I went to Priceline, didn't see how much. I went to Hotwire, didn't see. I don't care what site I use. I'll use whatever. So I think Expedia hasn't done very well. Barry Diller trying to shake things up and wants it to perform better. But yeah, if we zoom out, the story is, what a year in CEO exits. I think you can put this in the exam. I mean, each one is different.
Two of them
each one is nuanced.
But yeah.
Sure. Our colleague Krista Myers earlier today on Wi-Fi AM said, in some cases it's boot against your back as you walk out the door, and in some cases the boot is gently nudging. In some cases it's kicking hard. In some cases they let the person say, no, I'm resigning. It's not that I've been pushed out. But whatever the method was, tons of CEO exits. Nike and Under Armour on the same day. Gap, I mean, pick your example, and this is certainly a topic that we can talk about in our forthcoming Yahoo Finance year-end coverage, because it has been a big story all year. I don't know what it says. I mean, what is the lesson here that more than ever before, you're going to get a shorter leash as a CEO? It's like being a college football coach. 2 losing seasons, bye-bye.
Mm-hmm. If your boosters are anxious. I mean, I think
shareholders.
I think there's the kind of the way that I've written about this, I think it was last month the story was out, or maybe 2 months ago. Like, the average age of CEOs over the last 10 years has gotten 10 years older. So effectively, either we haven't had the turnover, so we're making up for lost time, or we're still pulling from the same pool of recruits who kind of have all the same ideas. What I thought was so interesting about the Expedia news is it's essentially, if you go back, and I went back and read the Expedia call from November, and the management team was like, well, we're doing this reshuffle, and there was some SEO tweaks and some this and some that, and Barry Diller was like, no. We're not reorging here while we lose business, right? I mean, Google constantly changes their platform. They constantly change their SEO. The OTAs, of which Expedia is one of the primary and biggest OTAs, online travel agents, have always been playing the SEO game. They've always been arbing Google's system. So how can these guys say, oh, well, we didn't get it this quarter? And I think Barry Diller basically called BS on them. So a very interesting time ahead, I think, for Expedia.
Well, and I was saying there's so much competition. Which site do you like or choose? But you're right to mention Google, because I think increasingly people aren't going to any of these sites. They just go right on Google.
But the business has always been you pay Google for that space, right?
Yeah, they have to pay a lot of money to be in it. I don't think it's just going to be Expedia. What I think is interesting is, and not just going to be in the travel space, as Google is having their own shuffle at the top, that's happening because their model is changing as well. Other people are getting some of the advertising dollars, and they're having to use other levers as well. And so let's just take travel. Why not? We're there. We've got Google Flights. Fine. People don't have loyalty. We'll take that. We'll take news. Why not? Well, we have search and retail.
Happily.
We'll take that too.
Yeah.
So I think there's going to be some more of these coming, and I think it's just sort of the length of the recovery here and the cycle and where you are. And certainly in retail, we've seen there's just so many losers. We don't have patience anymore for you.
Right.
You got to go.
But then to the Google thing, like with travel, right? So, the Google Flights, they aggregate the flights, but then I go to Delta to book.
Yep.
So Google's still saying Delta can have my relationship with them. They haven't yet wanted to book straight through them. Now they're experimenting with that in hotels, but who's the first person who responded to the Larry and Sergey change? It was Elizabeth Warren. Because does Google now want to start controlling the consumer relationship in hotels, or is that another regulatory red flag for them? Because that's kind of, I think, where they're playing. They've allowed Expedia to do this job for now, but why would they want to change that if it's going to increase regulatory scrutiny?
Well, and they can still get kickbacks.
They still are.
Sending you to
they still
Delta
are.
or sending you straight
That's
to
the business.
Whatever the designer is, instead of sending you to the Farfetch that you go to, just going straight to the person or the company.
One more note on the CEO exits. You make the point that the CEOs are getting older and older. I think especially in tech, that's why Mark Zuckerberg is still such an anomaly. The founder who is still there as CEO, and he's being hit by all these slings and arrows, and he's still CEO, and people think, they could have made Sheryl CEO years ago, or someone else, an outside operator. I'll make a prediction right here. Next big name tech CEO to leave, Dorsey from Twitter.
And he's going to stay at Square.
Yep. Or he leaves Square and stays at Twitter. Pick which one you want.
Take the other side of that.
Flip a coin.
Coming up, Nike's Fly Ease technology gives athletes of all abilities a way to get in the game. We unbox their latest model with Reggie Wade coming up right after the break.
Nike is tying up the laces on its new Fly Ease platform, making sure that those interested know the technology is for everyone. Yahoo Finance sneaker expert Reggie Wade is here with us now to unveil the latest addition to Nike's Fly Ease family. So I didn't know what Fly Ease was, and I'm assuming maybe there's other people that don't as well. So can you just kind of talk overall about what this initiative is?
Of course, yes. Fly Ease, Nike's telling it is innovation for all. This was aimed so that people, whether they had disabilities or other physical problems, could get into the shoe one-handed. They had to fit several criteria. You had to get in and out of it one-handed. They had to open wide, and you had to be able to strap them back up the same way that you did going forward. So we have the Nike Fly Ease universe here. This was actually inspired by WNBA former MVP Elena Del Don. Her sister has cerebral palsy, and she was the inspiration. She wanted a shoe that her sister can open and close one-handed. So we have the shoe here, and I think it's a beautiful looking shoe. This bottom right here, this is my favorite part of it. But what you do here is you take this strap, and then this pops open, opens wide, you can get in.
Wow.
You close this up, and boom, you're back into the shoe.
So it's essentially the main tech here is a flexible heel counter allows for you to get in the back of the shoe, straight from the back instead of having to kind of open this as you would, kind of at the throat and then come in.
Yes, on this specific shoe. They're all different depending on the model. And what I love about that one is on the side it has a nice slogan. It says, if you have a body, you're an athlete. So this is to show that everyone, doesn't matter what disability you may or may not have, you are an athlete. And we have several models. They actually took the LeBron series and they gave it the Fly Ease treatment.
And that was a terrific ad they did. I'm not even sure if it was an official ad, but when he met with a fan who had helped design the shoe, that was maybe 3 years ago already, right? Yeah.
And this is the next step in it. And with the LeBron, this is a little different. This has a zipper right here, so this opens up here.
Oh, I see.
Are these unisex shoes or for men or women?
Yes, these two are unisex, but we have the Pegasus here. We have for men's and women's. The lighter color are the women's, the darker blue are the men's, and those zip from the side.
Yep.
You just
So
get into them. And
the Pegasus, for the uninitiated, Nike's most popular running sneaker. I believe this is the Peg 36.
Yes.
If you will, this is
Very.
one of the foundational shoes in the Nike running line.
Yes, and those retail for 120.
Such depth of knowledge.
Yep.
Wow. I saw Shaq Griffin in the B-roll there.
Yeah.
I don't know if he's officially endorsed this stuff, but that's very cool. I know he's a Nike athlete. So.
Do these cost more than a regular Nike shoe?
Actually, no. These are priced pretty competitively. The Pegasus are 120. The Universe Go for 160. So these are prices you would see in line with other basketball shoes in that category. The kids LeBron is 110, which is what you would see. And then we have the men's version at 140. And I love this Yahoo purple. Love that Nike sent us some.
like that.
I don't know if this was by design, but this is probably my favorite of the bunch here.
So the intro said that these are for everybody.
Yes,
And
innovation for everyone.
I'm just curious, like New Balance has these new shoes where it's like a button and kids push them in and they tie them. Like kids don't learn to tie their shoes anymore. So is this a
Lost art, Jen.
It is a
I
lost
do bunny
art.
ears still.
I mean,
so do I.
I'm serious. Like you're in high school and people are using Velcro. Is this also, I mean, part of that trend that people just don't like to tie their shoes anymore?
Well, I think it's for twofold. One, it's a cool factor, like, oh, I don't have to tie my shoes. I could unzip or do this. But I think people are really starting to take a look at adaptive fashion. Adaptive fashion is a $288 billion industry. And it was largely ignored, and now companies like Nike, like New Balance are getting into this, and the sky might be the limit on adaptive fashion.
That's great.
Yeah, it's just fast and
Positive
easy. It's pretty cool.
Jen, were those your size?
We're still waiting for you to get your first pair of Nikes. We've had so many.
I know. I'm gonna.
You literally have your choice, Jen.
Reggie needs to tell me when it's 10 a.m.
You're wearing regular heels.
Let's
get you in some sneaks.
I'm gonna go onto the internet and I'm gonna get those shoes before they sell out.
The StockX CEO said the same to me today. Oh, when are we going to get you in sneakers? And I said, I'm not a sneaker at work guy.
You're not a
People like
sneaker.
Reggie
You're
look
not
good
a sneaker in
Miles
general
looks good
guy.
in them.
I like these.
Dan, you could pull it off. You and Jen
Think
could
so?
definitely put it off.
All right.
I'm more bullish on Jen.
Coming up soon, sneakers on me.
Dan Roberts.
Not New Balances.
Great to have you here.
See you guys
Especially
later.
because we got the Mets news. That was fun.
Yep, we will see. And by the way, so rare that the team actually confirms the reports.
That's right.
Mets coming out with a statement saying, yep, we're talking to Stephen A. Cohen about expanding his stake.
All right.
Dan Roberts, Reggie Wade, thank you so much.
Coming up here on the final round, we'll have the best performing sectors during today's session. We're back with that right after this. Let's take a look at sector winners and losers in the market today. All 11 sectors in the S&P were green. Energy, XLE, the best performing sector today. Halliburton, Devon Energy, Pioneer doing a lot of the work there. Of course, energy stocks overall getting a boost on rising oil prices on talks of further supply cuts out of OPEC. Also higher today, financials up about 1%. JP Morgan, E-Trade, SVB Financial coming out on top. That, of course, as the 10-year Treasury note backed up a little bit. We had the yield up about 4 basis points on the session. Steeper curve, better for financial names. Coming up here on the final round, we'll have what you missed here on a busy day at Yahoo Finance. We are back right after this.
best moments that you missed today on Yahoo Finance. Let's check it out.
It's the cost of war. And it's tough, and tariffs are a tool, it's a weapon. A lot of people don't like it. Maybe there's a better way to go. Maybe we can do it a different way. We can debate the tactics used, but I don't think what's up for debate is the actual need to do it. This is going to last for some time. We should get used to it.
Oprah really is the original influencer. It all started really with a pair of pajamas that she loved, and she wanted the whole audience to have these pajamas, and it grew into what is known as favorite things.
If we suddenly get whacked with the 15% or higher increase, we're in trouble. We're really in trouble. The American consumer is in trouble.
Agriculture is a national security interest, and it should be treated no different than Social Security or Medicare, Medicaid, where it should be the third rail of American politics, never to be touched. And wherever I end up in an election or what have you, it's going to be certainly my life's work to make sure that politicians, president, no matter what, know that agriculture is off limits.
Wine in particular is not something you really normally drink to get a buzz, if you will, you know? And so I think the millennials that are drinking less and drinking better, they want brand, they want to know what they're going to get, they want to be pleased. And so I think that really fits in well. And what we're like, our sales to millennials has doubled in the last couple of years.
Small businesses are one of the ones who are most acutely impacted when you have a tariff increase. It's a cost that's very difficult for them to pass along to consumers. They already operate at very thin margins.
Stover's lasagna, DiGiorno pizza have been around for decades. They're huge items, but we continually need to renovate them, add new items. At the same time, new varietals or new SKUs, as you put it, that bring in what are maybe some of the more cutting edge ingredients or recipes or ethnicities into the category to continue to keep the category relevant.
Taking a quick look right now at some of the after hours movers. Of course, we had an update in the markets overall. You can see by the major indices. After the bell, we had results coming out from Slack and also RH, Restoration Hardware. Always an interesting letter in here. Not much movement on the stock, but as you're going through it, some fun things stand out.
I mean, Gary Friedman, always with great corporate communications here. Talking about operating in the post-WeWork world, I think it's just interesting to see a retailer think about everything as post-WeWork, saying it's becoming clear that retail brands birthed online desperately need a store lifeline to survive. Many are finding the variable cost of marketing an invisible store an unprofitable path to the future. I mean, he's backing up RH's decision to keep a lot of their stores open, but it is interesting just to watch. I mean, this stock has had a tremendous run after having a pretty spotty patch there for a few years. We know that Berkshire Hathaway took a stake in its most recent quarter. So some interesting things happening here. I would encourage anybody who's just curious about the way some CEOs, because not all of them are, many of them are not this verbose in their communications, to take a read through and just kind of see the way that RH is thinking about their business in what they are calling the post-WeWork era.
And as Gary says in his letter, carpe diem. That's all for now from New York. I'm Jen Rogers with Miles Udland, and this is the final round on Yahoo Finance.